All right. Good morning. Decided to take a long walk today instead of a run. Feeling pretty good. It's a little overcast, a little drizzly weather. Futures are up 40 handles right now off of non-farm payrolls. The actual was 130,000 versus a forecast of 65. Posted that earlier. Dollar's lower, yen is higher. All right. Let's see. NASDAQ 100 looks pretty good. We've got a number of stocks rising. Let's see what's doing the best. Shopify up again today. Shopify up again. Number 2 is Micron. AstraZeneca is number 3. Lam Research, LRCX, number 4. And number 5, Global Foundries. Okay, let me just grab a picture of that and post it. Okay. AstraZeneca, AZN. AstraZeneca, not that. All right. All right. So, hope everyone had a good evening. It is Wednesday, the 11th of February. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I'll be with you all day, giving you the play-by-play. We've got support at 6,900, resistance at 6,880. 6860, 7,000. 68, 6960, whatever I just said. 6960, 7,000. Okay. Scrolling across the bottom of your screen. For easy reference during the day, support and resistance levels, look for inflection, changes in direction at those levels. Okay, let's see. All right, let me just post this here. $6,900, 7,000. Okay, so we got a 100-point range. Dealers are long gamma. Okay, you know that dampens volatility and supports any dips that we get. Drops below 6,900, we had flipped to short gamma. All right. What do we got? 8 minutes to go. 8 minutes to go. Futures are looking good at 7,001. Jeff, it means that we added 130,000 jobs. It doesn't mean that's how many people are working. We added that many. Okay. All right, Microsoft, nice little pop. New York Fangs look okay with futures up 41 handles. Okay. The Dow Industrials are up. Robinhood pushed a bit lower. We bought a long put spread for insurance. We're still down here near 78.53. Okay. Robinhood. So Robinhood. Okay, so we're right near 80. 85. Okay, 85. Sorry. Just looking at this. So we're $5. I'm sorry, we're at 78. 78. Okay, I'm looking at the closing price. We're currently at 78, so these puts will do well to ensure. I have some July calls, so I'm looking for a bounce. Let's see what Robinhood actually reported. We've got 4 minutes to go. 4 minutes to go. First 15 minutes, I'm not doing much of anything except taking profits off the table. I'll do that with these puts that I bought for Robinhood. Okay, so earnings growth is 22%, revenue growth 26%. Rather see all four of these green. Last time around, they beat. All four of these were green. So temporary. July, I think we should be rising by the time we look at this again. For now, Robinhood a little bit lower. All right, so first 15 minutes, I don't do much of anything except taking profits off the table. I'll do that with Robinhood this morning. I bought some puts for insurance. I have July calls as well. So I wanted to make it a long iron condor because I felt like we could see a little dip in Robinhood. Such is the case this morning. We'll see whether or not we bounce immediately or not. Let's look at some of the other ones like Charles Schwab. Schwab dropped there yesterday. IBKR, that's doing okay. Weeble's at the lows. Okay, yesterday, sectors, okay. Okay, S&P futures are ripping here. Futures ripping. There goes the futures. Apple higher. Apple, Microsoft, Nvidia going. Let me just grab a hold of this. New York FANG components. We've got 2 minutes, less than 2 minutes to go. Less than 2 minutes to go. I don't know if you can hear, but they're roofing a house right on the corner, so I can hear everything they're doing since 7:30 this morning. It's a good thing I get up early. Okay, Robinhood. All right, let me get that ready to go. Robinhood. Sell. Create a closing order. Okay, we'll see where this. Okay, where did that go? Monitor. Robinhood. Where is my sell order pop-up? Where'd it go? That's weird. Disappeared. All right, let me reboot. Wow, I don't want to do that. Robinhood. That's weird. My sell order screen disappeared. Where the hell is it? That's weird. There we go. Okay, now we're talking. All right, so I'm out of Robinhood. Dumbass was clicking on roll instead of close. All right, so I'm out of Robinhood puts for now. Looking for a bounce. Robinhood. Schuster, we should be back above 80. I don't think you'll have an issue with your. I think you sold puts, right? Put credits. I think you should be fine. Okay, made about $1 on those. Robinhood puts out plus $100 per contract.
OKLS, SOLS, SOLS, ASTM, AEHR, AEHR, OSCX, UPB, UUUG, SUNE, ASTM, SUNE, EFXD,
UUUG,
CCHH,
ACMR, GFS,
NAMM, QNCX.
SOLS, ASTI,
Okay.
UUUU,
Robinhood. It's going to take a while for everyone to finish their orders. Microsoft just dropped. Okay, Microsoft was up, dropping again. IGV, the software. IGV, the software ETF. Okay, we still need to see this follow through. 60-minute. All right, we're at the 20 EMA. All right, so we want to be above the 20 EMA, and the 20 EMA continue to rise. Okay, we got a nice pop in Riot and the Bitcoin positions. Palantir pop and just pull back. Palantir. The NASDAQ 100, Micron's the top of the list. Micron is up 7%. Okay, that's already starting to fade from the high. A little bit there. We just got a liquidity grab on Micron. Same thing with with Robinhood. You can see this pop here. See that rectangular, and that's a liquidity grab looking for a reversal, or if it can follow through, that's great. Micron, I took the put side off, so you should be good. They keep piling into Micron, so didn't dip very much. All right, first 15 minutes, all I'm doing is taking profits off the table. If it makes sense to do so. Right now, I'm just watching the markets. It took Robinhood off. Let me just bring that back up. Micron's bouncing. Robinhood a little bit lower, so if it continues to show weakness, I'll buy some more puts. I'll just go out a week or two. For now, it just looks like people taking profits off.
And then it will be based on tokens. So they'll be buying more GPUs, right? At places like T-Mobile, as if there wasn't enough.
T-Mobile's down 5%.
For those.
Microsoft pulling back a bit.
The next generation. Not sure how much they will discuss it or not at the Capital Markets Day. We'll keep monitoring if there's any announcements.
Okay, big reversal on the S&P just now. Okay, we were up 40 handles. We're still up 36. They're giving some back. We got resistance overhead. Okay, so we got positive gamma. A lot of positive gamma here. All these purple bars, positive gamma. So we should stay pretty sticky. I don't see any big drops coming for now. 6,900. As long as we stay above 6,900, we could come down to 6,900 and test it. Resistance at 69.60, S&P. 69.60. The VWAP is up here. Okay, let's go look at the New York Stock Exchange, see how that's doing. New York Stock Exchange. Note that NYSE is breaking out. So temporary pullback in the S&P most likely gets bought.
Today's capital markets, they designed to sort of introduce people to the idea of what their growth rate's going to look like. And they are talking about as high as double-digit EBITDA growth, as much as 10%. That's a big number over time if you can hit it. And obviously, you've got the new CEO, Srini Gopalan, who's took over in November.
New York Stock Exchange Composite is breaking out. Okay, S&P is pulling back. That's kind of weird. Microsoft pulling back, so that might have something to do with it. A little bit. Bitcoin pulling back a bit.
If maybe that immediate, perceived threat.
Okay, IWM, small caps,
Although Hood's down 10.
gapped up, small caps gapped
That's a
up.
separate category responding to its own
Okay, Dow Jones, the Dow
in
Jones,
terms of,
Dow Jones Industrials.
I mean, I think there was a little bit of concern about options
I
trading.
might try an I there instead of a U.
They've sort
Dow
of
Jones Industrials at highs.
analysts are taking the numbers down. And just, the
S&P is at the top of a range, so we need to break above 7,000.
prediction markets. With football ending, it's unclear how many accounts you're going to add. It's mostly so, and the stock was just, at a crazy spot. I mean,
Let's see, up down volume. Let's see what we have so far. Survey says that's 1-to-1 up volume. So this bounce, this dip, because of the positive gamma that dealers currently have. Okay, all of this positive gamma here, all of this, these dips are going to get bought. So we're watching for the dip to get bought. The Q's 1.7 up volume. The Dow Jones 1.9 up volume, almost 2-to-1. New York Stock Exchange 1.5 up volume. NASDAQ Composite 2,700 stocks, more or less, 1.25 up. SPY's 1.36 up. So we'll see if we can hold on to these levels. I would imagine we would. We've got positive gamma. Positive gamma. Okay.
Is going to rekindle a discussion about tariffs as Speaker Johnson was unable to hold back the tide. The House is now free to challenge, even on a performative basis, the president's moves on tariffs as we get closer to the midterms. It's interesting to see the
What's today? Today's the 11th.
through a lot of that, and they're kind of happy with the
Okay.
idea that the EV losses are going to, kind of run off at least as a percentage of the overall business over the next few years. The core, commercial and the light trucks business and everything seems to be fine.
Oh, we're still dipping here. Still dipping.
Haven't spent much time above like 14-ish for a very long time. So
Microsoft lower.
Top of the range type of thing. So they're controlling what they can. I think all the street's been wanting to hear is that ICE over EV in terms of their priorities and spending. And if they get relief on tariffs, I guess that's a bonus. But I was surprised as the numbers came out that the stock actually kind of firmed up after the prices. Yeah, well, big underperformer to GM over the past year. Yeah, exactly. We'll keep our eye on that. By the way, I understood BYD outselling Tesla 10-1 in Australia in January. I mean, the wave of Chinese exports in EVs is remarkable.
It is, although BYD itself, coming in, I think.
Okay, looking for a bounce. Looking for a bounce in the S&P. Let's see what hedge flows look like. Dealer hedge flows.
China, we talk about it occasionally, but
Okay, got some issues here. Okay, come back to this in a minute. Okay, this morning, Brent was talking about individual stocks. Let's see what he was saying here. I didn't get to read this.
We are still ahead, as everybody would like to remind you, in one key area, and that is chip design. Right. And
VRT is up 16%. That's the AI infrastructure, VRT.
People will tell you, is it 6 months? Yeah. Is it right? And how important will that be when and if we do hit AGI? And what will that mean? Yeah. Whoever the leader is, there is this race or race conditions certainly that exist between our country and theirs.
That's up 16%. Major record highs.
Seems to be a growing sense, or at least worry, I would say, about what, and encompassed in that essay that I noted a couple of weeks back from Dario Modé, who runs Anthropic, but about what all this will mean. But right now, we're focused on beating China.
Okay, looking for a bounce. Other than
we're not.
Yeah, and they're kind of, essentially not surrendering, but kind of Tesla de-emphasizing that direct competition in EVs.
Yes, again, going back to this 2.5 to almost 3 hour podcast that I watched, Musk participate in. It was interesting. It's all about robotics and obviously space and data centers in space. Not just data centers, actually, but what he believes is the ability to harness so much more power as a result of solar in space, where the sun always shines, where there's no weather.
Looking for a bounce, S&P.
Six-fold increase.
Okay, let me fill in some calls here. for 0-day calls just in case we get a nice bounce. We're going to wait until after 10 o'clock, sorry. S&P. Apple trying to continue. It is February the 11th. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I trust you had a good evening. Non-farm payrolls came in, 130,000 added to the rolls, 130,000 added. They were looking at 60,000, so it was double what they were looking for.
So not too far from the upper end of that recent range, but yeah, it's hardware and hard assets. Nvidia, Apple, Micron, Exxon.
Okay, watching for a bounce.
That's your upside.
Put side 6,900 is what? 6,900. Start going for $1.70. So I'll add some of these just to follow this, see what kind of bid they have in the puts today as we start off today. Okay, there's more volume. Well, not really. I'm looking at the volume in the put side. I would say just give it a few minutes. Give it a few minutes for the markets to settle down, decide what it wants to do today. We have a lot of positive gamma. Dealers are long gamma, so that means that we should see dips get bought. No dip getting bought yet.
When was the last time that we saw value perform this way versus momentum?
We've had little episodes of it. I mean, I think you even saw one in late 2024.
Right.
Robin Hood. What's Robin Hood doing? Robin Hood. Robin Hood still sitting down here, looking for a bounce.
Bonds today, obviously the jobs number coloring most of the action there as the 10-year was down at 412, lowest since the first week of the year, jumped back to 419, 418. We'll get Schmidt, Bowman, and Hammock on the tape today. VIX dropping below, almost got down below 17 for a moment, and the dollar is up for the first time in 5 days. Stay with us.
Dollar was down before, Carl. No? Dollar is still down here at 97. So, yeah, it's a little dollar higher. I don't know what he's looking at. It's up 0.1%. The yen dollar pair, the dollar yen, showing weakness in the dollar, strength in the yen. Okay, dollar yen. Okay, so we still got weakness. Okay, we're starting to get a bounce now. Starting to show signs of a potential bounce. S&P 500. Looking for dips to get bought.
It's great to see you. Thank you so much. Really appreciate it. Great to see you, Matt Coffin.
Okay, we got a bounce. Got a nice bounce. So far, calls are starting to catch a bid. Let's see how far they take this. It's still very early. Just 16 minutes into the trading day.
Well, I think Magic just has a ton of momentum. That business just keeps growing in terms of distribution.
Robinhood, S&P.
And engagement levels and quarter over quarter throughout 2025. We just saw nice growth. In fact, Magic now is like a $1.7, $1.8 billion business that's had a 10-year CAGR of 16%. And, we don't see it materially slowing down. We expect further growth in that business this year. We're already starting the year with the best-selling first-party IP set in history, Lorwyn. And And so we
Where
just continue to
is
see growth prospects there.
a lot of stuff missing this morning? What's going on? They're having issues over at Spot Gamma, it looks like.
Where are human beings finding all this time to play games? I mean, gaming is having another moment. And like,
Okay, well, we'll come back to this in a few. We'll come back to this. Looking for a move higher. Dip should get bought.
Well, I think whether it's D&D or Magic the Gathering or some of our licensed partners like Monopoly Go, it's really the community and bringing people together that really drives, I think, the power in gaming and is its secret sauce. Magic's an amazing play system, but I think the Gathering is what really separates it apart. The tens of millions of people who gather together and play around kitchen tables and in 10,000 mom and pop hobby stores around the world. That's what people really crave, particularly in
New York Fang Components. Apple's on the move. Okay, Apple helping. Need Microsoft to bounce. Microsoft dropped off this morning. What is going on? Markets. My charts are updating very slowly. Okay, looks like I'm going to have to flush.
Last year we grew our distribution in hobby stores, what we call our Wizards Play Network, by over 20%. We grew the number of doors and number of slots we have in mass by well over 20%. We grew our overall number of players.
Microsoft,
organized play by nearly
Apple.
And we meaningfully grew the player base. And I think we're seeing that momentum.
Apple turning up.
What's nice about that is
Okay, keep an eye on Apple. That's going to help. It'll help us a bit. We can get Microsoft to bounce and NVIDIA to continue. NVIDIA is grinding higher. Tesla's higher. We did pointed out Tesla yesterday. Okay, so we talked about Tesla and the 60-minute time frame and the daily. Okay, so now we got 4 white soldiers. Okay, we're above the 20 EMA. All right, so whenever you get above the 20 EMA, like we see here with Tesla, okay, you put a stop underneath today's low. If you started yesterday, you want to move your stop up.
Yeah. I mean, we have a stacked set of IP and entertainment coming down the pike to support our business. From Walt Disney, which is our biggest and
so that looks really good. Tesla, just watching this for now.
We start the year with Toy Story.
Apple looking good.
Into Star Wars, Mandalorian and Grogu. We go into Spider-Man, Brand New Day, and then we end the year with a bang.
Okay, it looks really good. Tesla on the move. Tesla on the move. All right, let me post this. Tesla.
And then we're going to end the year with one of your favorites, Voltron from Amazon MGM, which should be some fantastic collectibles and toys.
I'm going to push aside one question I have here for a second. When are you coming out with Voltron? I still remember playing with these toys. What, 40-year anniversary, Chris? I feel like yesterday I was just stealing my brother's Voltron toys, and it clearly wasn't yesterday.
Yeah, I think it's been 42 years since it went into syndication. It started off with
S&P pushing lower.
Back in 1984, and then they went to the Vehicle series in 1985. I mean, I've been a longtime fan of Voltron myself. I used to enter building contests in my hometown in Cincinnati, and I won first place with a yellow Voltron.
It's been an interesting sort of wrestling match where you're obviously growing GMV at 31. But these overriding fears about
all right, futures dipping a little bit more to start off.
Well, let me share what I shared on the call this morning, which I think.
Okay, so you can see here, Spot Gamma's dashboard encountered an unexpected issue. Okay, so a lot of data. This is a very data-driven site, so a lot of this stuff is real time. Occasional hiccups, so we'll have to just keep an eye on the things we normally look at, like Apple, NVIDIA moving higher. You've got Amazon, Google, Meta, Snowflake lower. So is Netflix and Microsoft. All right, so Keeping an eye on Apple.
On the Universal Commerce Protocol that we co-developed with Google, which means that every brand will soon be able to sell on every AI.
Okay, ARM Holdings. Yesterday we were looking at ARM.
This AI shopping is a new frontier for commerce, which is good for merchants.
Comparing it to last week, ARM Holdings. No, it's not here. It's over here. ARM Holdings, ARM. Okay, ARM Holdings.
On Shopify and off Shopify are coming to us to ask us how they can participate in this. And part of the reason that we've done so much laying these rails, we co-developed Universal Commerce Protocol with Google.
ARM Weekly. Okay, we were looking for ARM to move back up into the middle of this range. Okay, so into this Kirby, we can see prices continue. You can see the volume indicating institutions are picking up shares. Okay, we're at 130. What is my upper strikes? 140, 145. All right, so I got a ways to go. The anticipation is that we're going to hit this upper ceiling, this Kirby ceiling. We'll run into a little bit of resistance right in that area. So I'll roll it at some point. Just watching ARM Holdings. Okay, ARM looks pretty good. ARM Holdings. Look at the volume. That's institutions. MACD stochastics look okay. RSI is rising. Stochastics telling you that we could continue to close in the upper half of the daily range, but we're embedded right now. MACD is, as a function of price, continues to move higher. Let's see what Tesla looks like, comparatively speaking. Tesla, we got 4 white soldiers now. Okay, we got a 3-candle reversal, followed by 3 white soldiers. Today we got another bullish day. So they're obviously picking up Tesla shares. I'd be speculating here, but you know, you got SpaceX and XAI going to go IPO, right? They're going to keep it all in one. They're going to keep it all in one symbol. Is it all going to trade in Tesla, TSLA, or what? Does anybody know off the top of your head? Let's see. Tesla.
Entrepreneurial leverage. It's like this resource multiplier. And if you just look at Sidekick, you know, it now tells you what tasks to prioritize. It even helps you execute them. And so we're seeing our AI store generator being used nearly 500,000 by 500,000 merchants. SimGym, which is one of our products, simulates buyer behavior, giving feedback before even ship changes. So, I mean, this is Shopify at its best. Massive complexity transformed into a tool that anyone can use with imagination.
Harley, it's a little unconventional, but I do wonder what your thought is about the overall notion, sort of e-commerce and agentic commerce, the play that's being
okay. Yeah, that's what I thought. The lines are starting to blur. People are starting to buy Tesla in hopes that they're going to be part of the robotics, the EV, everything else that's going on. That it doesn't price in the full valuation of SpaceX rocket and satellite business. And his AI agenda. Okay.
But let's be real. AI is going to change how people discover products and how they buy, and we're building for that. We're already building these agentic storefront experiences.
Okay, so I'm just waiting for the S&P to bounce. We're looking for a bounce. The reason why is because we have a lot of positive gamma.
So many people, whether it's merchants or our partners, that are actually using our tools, our APIs, our SDKs to kind of vibe code on top of Shopify.
S&P, looking for the bounce. Microsoft still moving lower. Microsoft.
And we're the commerce operating system that makes any interface shoppable for merchants. So I think that there's an incredible opportunity coming with AI, but I think you have to look at the companies that are acting as infrastructure, as
Apple's still pushing higher. S&P still pushing lower, which is kind of odd, really, considering the overall market looks pretty good. Okay, we're at highs. The New York Stock Exchange is at highs. Okay, what is junk bonds doing? Junk bonds. Okay, that is pulling back a little bit. So this is a little bit of a warning signal. Can't follow through. We've got the US dollar, Japanese yen, US dollar, Japanese yen, dollar weakening against the yen. S&P is still up 20 handles. We were up 40 before. We continue to drop off here, S&P.
HIMC, INC, QBCGP, KLS, RGTZ, PLTZ, RKLZ.
Okay, let's take a look at the S&P 500 equal weight. Equal weight. That continues as well. So removing the weight of Apple and Microsoft and those New York FANG components that make up over 37% of the weight of the S&P. Yeah, they don't look the best right now. They don't look so bad, but I guess it is impeding progress here. S&P equal weight. Okay, number of stocks above the 20-day are still rising. Okay, up down volume is close to 2-to-1. Okay, we just lost the NASDAQ composite. It's 1-to-1 down volume on the NASDAQ. So that's just doji. That's just doji. Okay, so the composite has about 2,700 stocks in it. It's just in a range. All right, sit tight. We're just driving a bit lower at the moment. Dips should get bought, so we'll see how far they drop this before they come in and start to support. Okay, maybe we fill the gap. All right, maybe we fill the gap. That'd be a shame. We had a nice little gain this morning off of non-farm payroll. Apple's still driving a bit higher. Apple. I bought AAPU shares a couple of weeks ago, I guess. Let's see. All right, futures are pulling back. 1-to-1 up down volume on the Qs and the SPY. The Dow Industrials is 2-to-1 up. Let's go take a look at the Dow Industrials. A lot of things going on right now. A lot of conflicting signals. Okay, here we got 30 stocks. The Dow Industrials, 30 stocks. Got a fade. You got Apple. No clear signals here, so I'm not going to do anything until we see some clear signals. I think that's wise. Okay, so Apple, Amgen, these are the Dow 30. Amazon, American Express, Boeing, Caterpillar. Caterpillar's still going. Caterpillar said, what pullback?
Take a look at stocks. They are gaining after this morning's blowout jobs report. We're going to get the administration's first reaction to the print. Counselor to the Treasury Secretary Joe Lamornia.
Okay, IWM, small caps.
News of AI advancements crushing software stocks year to date. Apollo Asset Management co-president John Zito is here to tell us what it all means for the private credit space. And then
Apple's still pushing. Apple.
Under pressure after earnings last night. Recent crypto weakness hurting that stock. CEO Vlad Tenev will join us first on CNBC. And next hour, a rare and exclusive interview with Greenlight David Einhorn. His thoughts on the AI trade, valuations, and much more.
First, though, some breaking news out of the Congressional Budget Office. For that, we'll turn to Steve Leisman. Morning, Steve.
Bitcoin looks like it might dip a little bit more.
From their prior forecast, and that $1 trillion in 2036. Deficit will be 5.8% of GDP in 2026, growing to 6.7% in 10 years. Debt held by the public rises from 101% to 120% in that 10 years. Since deficit projection by 1.4 trillion over a 10-year period compared to the prior forecast. That's
Futures starting to bounce. Futures starting to bounce.
The big beautiful bill raising the deficit by 4.7 trillion. Tariffs lowering it by 3 trillion. Immigration policies going the other way, increasing the deficit by $500 billion. They did upgrade growth for 2026. That's good. They see the labor market improving this year. Inflation will hit the Fed's 2% goal by 2030. On the effects of the president's policies, the BBB, the CBO says boost the short-run economic growth, raises long-term productive capacity. That's good. Trade policy continues to weigh on growth, says the CBO.
S&P looks like could be
lowering efficiency of the U.S.
heading lower still.
Slowing labor force growth, putting downward pressure on output. On the big downward revisions in the job market, we had 1.5 million jobs created in 2024. We thought there was
S&P continues to move lower. VWAP is trending lower.
We did the math for you by month. Here it is: 120,000, 22,000 per month in 2024. We thought it was 50,000 in 2025.
Chevron gapping up. Chevron looking good. Chevron.
30,000 a new start to job growth, or Sarah, you tell me, is it something that's out of sample of where we were?
Okay, Chevron pushing higher. Okay, let's take a look at Chevron and let's enable the 60-minute. Okay, 60-minute. You can see how quickly this has gone much higher. Okay, started off after the Maduro episode right around 165. It dipped down to 155. Now it's at near 185. So I have to do something here with Chevron. We're right at my max profit. Okay, so you know what? I'm going to take this off and I'm going to look for a dip intraday to roll or buy some more on a dip. Chevron. You could just roll it. That's what I've been doing since January, first week of January. Chevron.
Same with social assistance, but construction, 33,000 jobs. We announce the data center builds every single day, so no surprise maybe that's where the strength is. That tells us a picture of the economy, which is not everything is strong, at least in the goods producing sector. But I mentioned manufacturing. We did see a rise there. 5,000 jobs. It was small, but it was a positive number. And that's the first time we've seen that since 2024. So is that the start of something new? Again, the expectations were it was going to be negative again. In December was negative 8,000.
Okay, Chevron. I just reduced my exposure to Chevron.
We hope that there's more trade certainty.
Chevron. Okay.
Over what AI will mean for manufacturing jobs, and monetary policy has been easy. So all of that could set us up for the manufacturing job boom that the administration is expecting. It's small, but it's positive.
Yeah, it's hard. Lost jobs in transportation, lost jobs in trade, retail adding 1,000.
That's why I say
leisure hospitality adding 1,000. That used to be a big
ARM Holdings. Okay, ARM. It's not going to go straight up every single day if you're trading any of these stocks. Okay, ARM Holdings, semiconductors.
There's one thing to pick apart. It's that the cyclical industries weren't the biggest job gainers. It was, again, this kind of healthcare.
Watching the S&P, though. S&P continues to head towards a gap fill. S&P is still going for a gap fill.
0.4% climb on the month. That's good. Wages are growing above inflation. So for all of those going into today, David, saying jobs market's really cooling, it's definitely a supply problem, maybe a demand problem. I think you have to start to wonder what this suggests. Is there good momentum here to start out the year, and maybe everybody was wrong, and we are going to get some nice jobs growth.
Would be the first time people were wrong.
Exactly.
Okay, let's see if all right, so hedge flows apparently are working on Trace. Trace apparently working. Let's see if they got this working here. All right, so they do. Okay. So calls being sold. A little buying right here at the low. Puts being bought. Puts being bought.
When you look at GDP, which has been growing about 4% in the full 3 quarters President Trump's been in office, it's actually been led by the goods sector. For example, the last 2 official quarters, real goods output.
5, 15, 30, and 60-minute time frames are on sell signals for now. Futures are on sell signals.
Forward to today's report, you mentioned construction, very good. You mentioned manufacturing, up, basically reversing of the decline that began under the prior administration.
GE trying to resume its
Huge increase in
trend.
manufacturing
Here's ARM.
That is a
ARM
huge
looks like it's starting to consolidate.
3 months in a row.
Okay, GE
Clearly has turned positive.
up a little bit today. Looking for a break above 325 in the short term. GE.
And I think it's very, very valid with these data is that President Trump has laid the groundwork.
Rig.
for an industrial boom.
Rig, I have the 5 call. Excuse me, the 4 call for September.
Yeah, because going into the report, I mean, even
Rig.
in the White House, what we were hearing, Joe, is
Those are
that
doing okay.
labor
Rig.
supply is down because of the immigration policies. There's not as many workers, which is why we're seeing smaller numbers in terms of hiring. That and combined with the AI productivity story, we're just not going to see the kind of job
Yeah,
growth that we're
I
used
want
to.
to push. I want to push back. Well, first of all, labor participation went up, unemployment went down. The consensus got that wrong as well. This notion that the job market is weak because of less it doesn't make any sense. It doesn't drive. What we've seen, Sarah, over the last couple of years, it began under the prior administration late in the fourth quarter of 23. We've seen significant and ongoing downward revisions to jobs. So the job market was not particularly good when the new administration came in. We've had roughly 2 million downward revisions.
Okay, what's
to employment.
Robinhood
A
doing?
lot of
Robinhood, we're looking
workers
for a
are
bounce.
not gonna be showing
Robinhood.
up in those data points.
No bounce
So in
yet.
household
Robinhood.
survey, look at participation. If you're here illegally, you're not going to be responding to a government survey. So this notion someone that the job market is weak is due to that, I think, is fallacious. The prior administration had a regulatory and tax set of
2025 was
policies
a weak
that
job
weren't.
growth year.
It was a weak jobs report, a weak jobs market that had begun under the prior administration because of excessive fiscal stimulus, which pushed the economy on a sugar high, led to much higher inflation. My point is
Apple is still at the highs. Microsoft's still at the lows. All right, we need that to change. The New York Fangs are all mixed right now. Okay, we got mixed signals. I would sit tight. I'm not doing anything except maybe reducing my exposure here and there. I took some Chevron off. You can see the New York Fang components. Inflection moving lower at the moment.
I mean, let's hope. That'd be great for
Puts or
America.
bid. S&P puts or bid. No surprise there. It looks like we might fill a gap. 6,900 is a support. MACD is still pointing lower. All right, so if you're bulls, need the MACD to cross upward. For now, MACD is lower.
Based on December, this is January data. The Challenger layoff data, that's announced layoffs. It also includes things like early retirement. What we know is when we look at the ISM, the manufacturing ISM was very robust. Huge jump in new orders, employment's improving. So those to me are the series that I think are really reflective of what's happening. Claims did rise a little bit, but the forward moving average is still
S&P going for the gap. Gap is down here.
Low fire environment, which we inherited.
Gap is down here.
Which is going to be much more robust given
Okay.
the pro-growth policies the president has put
So we
in
got
place.
big fair value gaps overhead. People are chasing puts at this point.
Now for factories, you've never had that before. That's going to lead to a huge building boom.
The one thing I guess that on the downside is the president really wants interest rate cuts, and now this makes it harder for Fed Chair Powell and
Puts are
Fed
still
Chair Bush,
bid.
if he gets confirmed, to
Looks like we're
do
going to
that,
fill this gap.
pushing it out till July.
Okay, we're only up a handle now. One point on the futures. We're up over 40 handles there for a few minutes.
That's a function of the fact that interest rates are high. If I'm sitting and I'm advising the Fed chair, I'm saying, look, let's look at commodity prices. They've been moving. Let's look at rather prices paid and vendor deliveries from the ISM. Those are contained. We've got low and falling capacity utilization rate. The outlook for wage growth is great, but it begun slowing under Biden. We think it reverses. Why in the world would not the Fed cut interest rates? The yield curve is
Okay,
flat
what's
to really assure as an insurance
what's
policy
the oil and gas
meaningful
group doing? Let's see,
cyclical boost
Valero.
broadens out. So I think
Valero at highs.
argue for lower interest
Okay,
rates.
they are needed to. Valero is the one that are exiting California, right? Okay,
Although, Joe, I wonder what you
Valero.
think of the CBO report jacking up their estimates of deficits for the coming decade. Do you think the debt goes to 64 trillion in a decade?
No. I mean, the calendar year deficit, Carl, last year was at 5.4%, down from nearly 7%. When the CBO did its estimates back in January last year, it was basically scoring growth at 1.8%. If we grow 3%, which is very
Valero, of course, is going to be actively purchasing and refining the Venezuela crude that currently part of what we're watching over the last month
Certainly appreciate your analysis.
Sarah, one last thing. Trump
with the Venezuela government working with the U.S. government.
Please go to the website.
Okay, we're still pushing higher here. The S&P is still lower. Puts are still bid.
Well, it is tax filing season, and stocks are hitting a record high, so maybe all that helps you. Joe, thank you. Good to
Thank
see
you,
you
guys.
Joe Livorno,
Rig.
Treasury Secretary.
Rig. We have the 4 call for September. Okay, we're fading it a little bit here.
Kansas City's Jeff Schmidt, no longer a voter this year, but he was at the center last year, continuing in his hawkish ways. He says it's appropriate to maintain the Fed's
Okay, so S&P continues to drop off here.
He says the restrictive policy will slow demand, giving supply time to catch up if there is indeed a supply side boom. But he says arguably the rate of the Fed's rate is no longer restraining activity all that much, quote, if at all. Further cuts, he said, would allow inflation to persist even longer and perhaps embed the 3%.
S&P filled the gap. Now what? Now what? All right, so we got a bearish engulfing candle for now. Looking for dips to get bought? Not yet.
See what we get from CPI on Friday. Thank you, Steve.
Okay, watching for puts to start getting sold. That blue and orange line need to start rising. We overshot the gap. We're down 7 handles now. 8 handles, 9 handles. All right, JP Morgan. Let's see what the banks are doing. JP Morgan. Okay, fading from the high. Wells Fargo, the banks. Wells Fargo back to the 50-day. Okay, materials, XLB, still going. The XLB, focus on XLB.
It's really been an inversion. The dirty job. We see Micro talking about it often. I've sat with Micro at Ford company in Michigan to talk about this. And I can tell you what we're excited about is that we need more infrastructure. We need manufacturing. We need operators. We need machinists. We need electricians. That's an exciting part. Mortgage paying jobs. We're training the workforce. AI is not going to displace that. It's only going to sustain that. Madam Secretary, I do need to ask you.
Okay, nice move there.
Floating out there about an inspector general's investigation into
S&P filled the gap. S&P filling the gap.
Travel fraud. Is this true? Can you provide any comment on this? Well, I think what's important today is
So the estimate for jobs added this time around was 65,000. We came in with 130,000 jobs added. Okay, job positions that were added, 130,000. So double what they were looking for. That was last month.
Thank you so much. Great to see you. Yeah. Julie, I'll send it back to you in New York. Thanks, Jen. Appreciate it. Coming out, Lyft is reporting disappointing fourth quarter revenue and
Yeah, I saw that, Monda.
guidance. We'll talk to the CEO, David Risher, next on Market Capital.
Okay, a lot of positions. Yeah, you're absolutely right. They're closing a lot of positions. 0 day. They closed a lot of these below this level here. Positive gamma. So we got positive gamma down below. Trying to bounce. 6,900 is a line in the sand. We want to stay above 6,900. The key here, I see, the key is the New York Stock Exchange. Watch the New York Stock Exchange.
Get bloating under control in just 1 week. Start GSO1 today at seed.com.
People sometimes ask me if I'm still an optimist.
Mm-hmm.
All that's going on around the world. And the answer is yes. I am still an optimist.
Broad market looks okay. The New York FANG components, not so good. Starting to see a little bounce area potentially.
Public market volatility, and certainly some questions around valuations. Investors starting to separate winners from losers. So what is that going to mean for, well, private credit, for example? Joining us is John Zito. He's the co-president of Apollo Asset Management. Certainly somebody helpful to talk to about that. John, thanks for coming down. Last fall, you were in Toronto and you said you asked a question that has now gotten some publicity, but didn't
Chevron,
because
okay.
the board is focused on it.
I have the 180, 185 call spreads. I took half of those off. I'm looking to add back and roll the rest. Not yet. I'm just watching energy stocks. Looks like another bear flag here, so watch carefully. We did fill the gap.
From 2018 to 2022, 30 to 40% of the market was software. And historically, whenever you have lots of money going into the same sector, that creates a misallocation of capital. And let's just forget AI for a second. Almost every small to medium sized software business was getting taken private because you had.
Okay, so Russell was short the Dow.
99% retention.
I think from what I could gather, Russell, you did good. Let's go take a look at the Dow Industrials, the diamonds. Okay, pulling back below yesterday's low.
So the question was last fall was, and this has been going on for a year and a half, is that changing? Are we in a new technology cycle?
Okay, we're extreme fear now.
There are winners and losers.
Okay.
And was the market really differentiating between the two? And that was
Fear
really
greed index.
None of us at Apollo think that software is going away. In fact, we actually think software is going to be used a whole lot more. It's just a question, what are you going to pay for it?
Right. All right. But that has changed your approach, and that started some time ago in terms of what you were willing to finance and how much you were willing to finance, hasn't it?
Yeah, I think we've been underweight the sector.
Okay, looking for a bounce. No bounce yet. We're going a little bit lower now.
And we felt like, listen,
Okay, below 6,900. If we get below that,
it's the early days of a very
could get ugly fast.
cycle that is going to change the value paradigm for software investing. And there's going to be several winners that take a lot of it, but there's also going to be some losers. And we have to be super humble right now.
Okay, looking for a bounce.
We have to be.
Hedge flows have yet to turn. It's only 10:18 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Thank you, Dollar. It is Wednesday, the 11th. We faded pretty quickly. Faded the high. Okay, some of the sectors look okay. XLB is one. Communications. Pulling back to the 50-day. Energy at highs. Feels a little extended. I would imagine short term we could get a little bit of a pullback, maybe 382 or 236, something like that. So what would that look like? If energy consolidates a little bit, not saying it's going to, but it would be, I wouldn't be surprised. Okay, so 236 would be, 236 would be just below. Okay, at around 52. So we're talking less than 10%. So that's one thing to watch. Energy, S&P continues to move lower.
Do you then shut the valve off in terms of capital flowing to that industry? Does it reduce your opportunity set?
I think it's going to increase it because there's going to be more volatility. I think it's the early days of a lot more volatility. I feel like there's several businesses that have proprietary data that have.
Feels like we're close to an area where we might see a bounce. Nothing yet. Nothing yet.
I'd say many of us
wouldn't buy puts here at the low of the day.
We were like, well, you're so focused on credit, you should also be focused on equity. We're senior and first in the capital structure. We get no benefit for being senior in the capital structure. And we're lending to some software businesses. If you look at our software exposure, which is the lowest in the industry, some of that software.
Okay, we're still dipping lower. Still dipping.
We feel like we're financing. We just financed, XAI, SpaceX chips. We feel like we're financing the next.
Okay, bearish engulfing. All right, that's pretty decent amount of selling here.
Dozen new trillion-dollar companies. The next great American company we feel like we're financing, and that's getting caught in this. And it's also not taking, the markets aren't taking into account that we're first in line behind lots of equity.
Understood, although that equity does seem to be getting eroded at a relatively fast pace.
For sure.
Do you need to restructure any of this stuff?
Well, listen, there'll be a handful of names that are super commoditized. And the guys in software that'll call me, my friends will call me and say, John, that had nothing to do with AI. That was just a bad business that was bought in 2021.
Right.
And there are those. There's a handful of those that commoditized.
Money Magic talking about 600.
Wrong price. You're going to see a series of.
Okay, so it looks like we might be headed in that direction.
But by and large, software will be used more. The key
Okay,
question
positive gamma that we had this morning, we lost a lot of that.
cost of production for software.
Longer term, we got support down in here, 69.25 down to 6,900. Looking for a bounce.
I say definitely, but you better have a proprietary data set, you better have a moat, and you better have the mental flexibility and agility in the management teams to move really quickly.
Yeah.
If they don't, and they say business as usual.
Okay,
it's
let's
highly
see.
likely that things are gonna move. I mean, the pace of
Apple
change
still
is-
hanging out at the highs. Looks like a little profit taking. Little profit taking.
You just outlined, let's call it 18
Apple.
to 22, done at fairly high numbers that are sitting on and in the portfolios of, and I don't mean to pick names here, but Vista or
GE pushing higher. Rig higher.
What do those look like, those deals?
Yeah, those sponsors are the single best investors of software in the world, right? They led most of the deals. They know software better than anybody else. There's a handful of names in there that, ultimately.
Chevron starting to turn and turn back up. Chevron.
And the game's gonna be
Futures continue to show weakness.
scalable assets can make
Expect
big
more.
to their benefit, cut their cost curve, increase. But
It'll be
you
obvious
have
if they
change
start to
model.
turn
You're not
this.
gonna make 80 to 90% margins anymore. You may make 40, 50% incremental margin. And there'll be some really big winners that actually take most. And there's going to be some losers in there. It's not all going to be just the business as usual.
And there's got to be a high risk to your business on a daily basis almost, isn't there? Or am I wrong
Yeah, we
in
have to-
assuming that you just don't know what the next tool is going to be?
AI is it's going after every
Tesla, big reversal.
By the way, we're talking software.
Okay, big reversal on Tesla.
And it's not inconceivable. It's coming for them too. It just
It's gonna-
happened to start on sort of coding.
Yeah, we are, most of our business is senior in the capital structure. 60% of our business is investment grade. So most of what we do is lending senior against either hard collateral. We've been
Okay,
spending a lot of
Tesla
time
had a nice look to this.
or financing
Turn back down very quickly.
where it's against actually where things are growing. right?
That's not the kind of price action you want to see.
They're growing. Databricks, actually the organization of data.
Tesla
AI.
pulling back.
I think there's actually a whole other part that is growing, and that's where we've been spending our time. And
Apple's the
we're
only
listening and
New York
wondering
FANG that's higher right now.
sectors
Apple.
where- listen, it's okay to say you don't know what
Okay,
the
what's
future is.
Oracle doing? Oracle
That's
did have
what we're
started
doing.
off the week,
But I think there's gonna be a ton to do.
looked pretty good. Now we're starting to lose it. All right, so higher lows potentially now. For now, I wouldn't do anything with Oracle. Oracle's pulling back below the 20 EMA, needs to bounce back above for any type of trade.
In the public markets, but clearly factors have changed, and we have good software companies and bad software companies and good valuations and bad. What does that mean?
All right, S&P 500,
The two largest that everyone's talking about.
spiders
And
back into the range. Or we talked about this yesterday.
service now, but let's just take the large platform.
Taking a look at them right now,
Oh,
actually.
yeah,
They're all getting crushed again, by the way.
Down 50, 70%. I didn't check before I walked in here, but these businesses now have extremely wide, huge platforms. That
ARM
should be able to
Holdings.
monetize this over time, and now you're actually
Okay,
buying
that's
it at
pulled back a
price
little bit too.
where, okay,
ARM.
There's a cash flow multiple. There's an appropriate valuation. Okay, it's something we should spend time on. I don't know if the price is here or where it is, but actually providing capital to these businesses. Should you want to provide preferreds or debt in these capital structures?
So you think it's gotten a lot more interesting now at this level?
Definitely, and I think that you can. This is not
In terms of the capital provider, I should point out, not necessarily just buying the stock.
Yeah, this is just providing capital. These businesses are going to need more capex, more to pivot their business model.
Okay, what's Walmart doing? I've been wanting to get into some Walmart. Okay, so Walmart finally doing what I was anticipating it might do. I didn't want to chase this, looking for a base now.
It certainly is. John, I want to continue the conversation in the future. I hope you'll join us, but thank you.
Thank you so much for having me, and hopefully,
Hedge flow still pointing lower. 6,900. Are they going to test 6,900? All right, so this is starting to build down here. Let's see what it was this morning. I know a couple of you are following this right now. So 6,900. There wasn't a lot there. Now they're starting to sell 6,900. The dealer is long. Okay, dealer is long right here. We'll see if we bounce there or not.
We're going to continue the conversation with one of those investors that you just mentioned in the next hour. We've got Thoma Bravo's Orlando Orlando Bravo, who's going to talk about this software sell-off, what he's doing. Remember, a few weeks ago in Davos, he
Hedge flows trying to turn back up.
M&A opportunities as software again down 7%. ServiceNow down 6%, dragging the S&P 500 actually in negative territory as we speak. But first, Goldman Sachs' first take on the morning jobs report, what it could mean for the Fed's next moves. Chief economist Jan Hatzius will be here at post 9. And after the break,
All right, we started off the day looking pretty good. NASDAQ 100 doesn't look that bad. Let's see. Okay, up-down volume is negative. 2-to-1 on the NASDAQ composite, 1-to-1 on the SPY. So 1-to-1 down is not the end of the world. We did pull back quite a bit. It's kind of surprising that the New York Stock Exchange is holding up as well as it is. I mean, got 2,400 components. It is reversing from the high now. So it's time probably to consolidate. We moved above Dow Jones as well. Dow Jones moved to new highs. This is the New York Stock Exchange. Dow Jones. Okay. INDU. That hit new highs and reversing back into the range. Intraday, yes, it's somewhat bearish intraday, but longer term, 9, 21, 50, 200 day, all pointing up into the right. Okay, starting to look for a bounce now. Puts are starting to get sold. Puts are getting sold at the high, or at the low, I should say. People taking profits at the low. NVIDIA, looking for NVIDIA to turn off of this low. Apple still pushing. Apple, okay, we got to start to see signs of a bid in the calls. Call side starting to catch a bid. Okay, so quick trades like I believe Russell probably is taking his puts off. Russell had the diamonds. Okay, he had puts on the diamonds coming into this. Okay, already starting to see people cover. S&P 500 at the low. Let's look at SPY. Starting to bounce. Okay. You don't have to do anything really. Every day is not going to be a good day to trade. For the record, let's see. All right, so we got this range that we're dealing with. Range. RSI is flat at 50. Okay, we are pulling back. Last week, we came down 3%, bounced. If we stay like we are right now, we got a bearish engulfing candle. Okay, so that's something we want to rectify. Okay, let me just pull some of this stuff over. Okay, so a move back to the 200 day is about 7% now. I haven't done anything with my longer term investments. Okay, I did take about 15% off of TRBCX 2 weeks ago. I dropped down to about 70% invested overall, 30% cash. I've just been accumulating some cash, knowing that it's a little early, but knowing that midterm election years, 2018 was the last Trump term when the Democrats tried to and accomplished taking over the House. We had a 20% drawdown, 10% before the election, 20% total. All right, so 10% before, 10% after, more or less. We can take a look at that. S&P. Let's see if I have it here. I think I do. 2000.
Berkshire has recently taken steps to unwind its 28% stake in Kraft Heinz. And Berkshire CEO Greg Abel telling CNBC this morning that Berkshire supports the decision of Kay Helane and the Kraft board. Here's what I can tell you guys after speaking with someone familiar with Kay Helane's thinking about what actually happened here.
I'm not doing a whole lot right now, so I apologize. We're looking for a bounce. It looks like a bear flag still, so be careful.
What happened was once he got inside and looked at the 2026 operating plan, what he saw is that
so here is the 2018 midterms. Okay, you can see right at the peak, that was September. We dropped down about 10%. We bounced. And then from the low point, we dropped another 10%. So 20% total, as you can see. So that's one of the reasons why I'm reducing my exposure. We've been up since the 2022. Think about this for a second. We've been up. We've been up since the 22 bear market. Okay, so think about this for a second. If you're up 170, 160, 150%, why wouldn't you take some profits? Okay, so this is where we started buying TRBCX back here in 2022, the end of the last bear market. We gained over 175%, more or less, depending on your entry. And over the last couple of weeks, we've moved below the 10 EMA. So why wouldn't you take some profits off? I'm still 70% invested, but I'm reducing my exposure. I'm not scared or worried. I just want to protect profits. So we'll see. Well, it's starting to bounce here. S&P is starting to bounce. So this is longer terms. For those of you who aren't into day trading and all you want to do is swing trade or position in your 401k IRA, 2 weeks ago when this lost the 10 EMA, closed below, I started to reduce my exposure. The maximum we've seen so far is about 8% downside from the high. I think it's just prudent to collect some cash. I mean, cash is an investment as well. Let's see. Let me just add some time here. 15.
Attorney General Pam Bondi is testifying right now before the House Judiciary Committee. She's facing scrutiny over the Trump administration's release of the Epstein files. The Justice Department recently published millions more pages of documents, but critics have called the release sloppy and incomplete. Iran said today it will negotiate.
You can never win.
Its nuclear program, but
You're always going to find something wrong.
As President Trump threatens to send a second
Okay.
aircraft carrier group to the Middle East.
So far, it's about 9%, I guess. Okay, so why wouldn't you reduce some exposure? Okay. Yeah, you won't make as much. But what I'm looking to do is to add back at some point. I'm just a little concerned that we'll get a repeat. We'll get a repeat of 2018 midterms. You know this is going to be a nasty midterms. No matter, it's not a political statement, just a fact. You know, politicians can get really nasty. Doesn't mean what they say has to be true. Looking at this potential zone right here, okay, right here, this potential bounce zone. Okay, we're not there yet. That would be about 15% pullback. Historically speaking, if we had a 16 to 18% pullback, that would be right at that trend line. Okay, so that's a little ways to go. So yeah, reduce a little exposure. If we bounce back up, great, great, you're making money. But collect some cash, collect some cash. That's what I'm doing. Okay, I don't know what your individual circumstances are, but I'm collecting a little bit of cash. Okay, so let's see how far we can bounce back here. Okay, so positive gamma down below. You know that the dealers are going to buy. They're going to buy dips. We needed to stay above 6,900. Otherwise, it would have flipped to negative gamma. Okay, so how do I know that? Let's go here. Let's go to indices. Okay, so here's the absolute gamma on the S&P 500. All right.
What I talked about at the earnings call is really forward-looking. What's our vision for 2026?
6,950 is right there. 6,900. So below 6,900, this gets a little squirrely. So this is where we want to pay attention. See that right there? This is a combo strike. So when this goes from positive gamma to negative gamma, it gets really squirrely below 69. I would say 69. Right, let's just do 6,900. 6,900, it gets very negative.
Given that the NFL season is over, where do you see the growth there? Does that maybe put a kind of damper on volumes? And what is sort of the
Okay,
next
I need to take a 2-minute break. I'll be right back.
There was a lot of interest in the government shutdown contract, and that contract actually got more volume than many individual sporting events. And so as we continue to diversify and as we put these contracts contextually where customers expect to see them, like in stock detail pages, where if you're looking at, Tesla or Apple or other stocks, you see relevant prediction markets. I think that you'll see the percentage of non-sports increasing over time.
We heard some estimates from analysts, 8% of revenue, 9% of revenue for Robinhood. So obviously a growth area. How are you thinking about the risk here? There's been talk about potential market manipulation. If there's event contracts on everything, including what you're going to say on an earnings call, how do you think about the guardrails and the potential risk for insider trading?
Yeah, it's something we spend a lot of time thinking about. And I think that obviously we have experience monitoring and surveilling this with our traditional business because insider trading is not a new concern. It's been real in equities markets for decades, if not more. And I think this is an even stronger argument to making sure that this industry is onshore in the US, because if you're offshore, unregulated, and using products that don't actually verify identities, all bets are off. So I think that's why it's important for us as a regulated player. We KYC all of our customers. We know who's trading, and that gives us the ability to really ensure market integrity.
Well, let's talk about AI for a second. We just saw what's happened. It was the wealth management firms, some of the incumbents and your competitors. We saw it with legal. We've just seen it with software and all of the AI disruption, sort of this knee-jerk sell-off reaction. What do you make of that when you look at the brokerage industry and the threat there? And then where is Robinhood sort of positioned in that shift? Are there things that do worry you when you look at AI and the potential disruptive nature and the impact on Robinhood?
I think that the impact on Robinhood is going to be positive. And, stepping back, AI is definitely going to have a significant impact on the financial services industry. You see new models and new capabilities coming out.
All right, we're starting to see a nice little rally here.
I mean, just this past week, we had
Nice job, by the way, Mondo. Put side, flip it to call side.
change improvements in coding. And now you're at the point where these models can work autonomously for hours in the background.
Okay, so this looks okay.
Give you back like a sophisticated piece of software. So I think what you're seeing right
Yeah,
now.
I am reducing. I can't tell you what to do because I don't know your individual circumstances, but I'm still 70% invested, 30% cash at this point. For the longest time, all through here, I was 80% invested for the past couple of years. Got caught on the tariff situation in that I didn't get out fast enough. And that was a nice little pullback. I got out like the second week, towards the end of the first week of that pullback. All right, we're already taking some profits on other things, but yeah, we got caught there. And then finally made that all back and then some on the bounce. All right, so there's a couple of areas here where we could bounce. Right now, the S&P is on the way back up. Okay, S&P is rallying back up.
So if it's a big IPO year and there's some names that have already publicly said that they are making preparations, I think that's a great tailwind to our business and to the equity markets in general.
Quick last question, billionaire tax, if that gets passed, are you leaving California?
Well, my intent is not to leave California. I don't agree with it. So I think that it's important for California to be the center of startups and founders. If you think about this tax, really a founder's tax.
Yeah.
There's not a lot of old legacy dynasty money in California. It's people that have come, a lot of them with nothing, and built businesses that California benefits from.
Yeah.
You're already seeing people leaving the state. So I think there's a big question mark about whether this thing just sort of like
S&P, nice turn. Okay. So you always look for the cross. Where the cross come early this morning? Even if you got out, even if you got short at that rejection at BWAP, you can see MACD crossed over just after that, and we had a nice cascade lower from 69.75 ish down to the low. Now you've got a MACD crossed in the other direction. Okay, looking for follow through. Probably a lot of people got short just now at the low. A lot of people wind up buying puts at the low of the day, which is usually a mistake. Every once in a while, you manage to catch something and it keeps going. Okay.
PRFX, NCI.
Okay, so it's not going to be a shot straight up. The shorts did cover. You can see shorts covering here. Hedge flows turning back up pretty aggressively. Hedge flows. All right, this positive gamma down here, supportive. We were looking for the bounce. If you go back to the start of the day, okay, there's quite a bit of positive gamma overhead. If you go non-zero day, and as the day progresses, a lot of this got closed. Okay, so now we need to see some positive gamma fill in overhead as well as below. All right, S&P is already starting to roll over a little bit. Very choppy, very choppy.
UBCGP.
S&P. All right, starting to see a bounce. Micron. Okay, Micron. Rig. What is okay, Riot turning back up. Bitcoin. I'm going to give it a couple more days. Bitcoin. Not the best price action. Mara and Riot. Here's Mara. Riot. Whoops. Riot. Still stuck below the 50-day. S&P is trying to go. S&P is trying to reverse. Okay, got a lot of people short here and turning back up. I would just be careful because the S&P is in a pretty obvious range. S&P is in a pretty obvious range here. So, as long as we stay in the upper half above the 50-day, that's fine. But people are getting chopped up big time. Too active. Two actives. What we want is what's over here. Okay, we want to see a trend start to higher highs, higher lows, occasional pullback. That's not what's going on right now. Right now we're getting chopped up. And if you look closely, with the exception of a couple of pullbacks, we've basically been trading right in here. Okay. Basically been trading inside this little area here above the 50-day. And people keep second guessing. Oh, we're going to drop below the 50-day. We're going to test the 50-day. What are we going to do? We finally dropped below the 50-day last week. So, yeah, there's a little bit taxing.
Seasonally adjust. So that's just a caveat. But I think the household survey is probably the more important measure because it's a direct measure of supply versus demand, and it was pretty strong across the board. So to me, this says that concerns that you might have had about downside risks from the labor market into 2026 are just lower now. And that's got clear implications for Fed policy, and the market has reacted accordingly.
Yeah, there's some discussion that
Okay, what's Robinhood doing? Robinhood, any bounce yet? I took the puts off a little too early. It's okay. I had things to do. I don't want to be staring at one screen. Robinhood. Okay, looking for a bounce. Robinhood. Okay, starting to see a little bit more short covering. Not a whole lot. Chevron moving back up. Chevron. Little dip. I still have half a position left. I took some off as we started to drift a bit lower. Because I have the 180, 185, I need to either roll these or take some profits. I chose to take half off, take some profits. I'll roll out to 185, 190.
The cyclical areas of the job market lagged. We talked about leisure, hospitality, and retail and trade. So would cuts sooner rather than later help those areas?
I mean, some lagged. You know, construction, for example, was pretty strong. We had a strong manufacturing. You know, there were sort of puts and takes here. I think the economy is doing well in general, so it's not, I think, crying out for cuts at this point in time. I think what we're going to see is probably more a return to a neutral rate once the committee as a whole is confident that we're moving back towards 2%.
What is the neutral rate?
Well, they have an estimate. It's very hard to know that the neutral rate is all because the range of estimates is just so big.
All right, so it looks like I'm going to roll over again. VWAP.
75 basis points.
Okay, VWAP.
You changed your expectations.
Starting to flatten out a little bit.
Because of the Warsh pick, and if so, does that impact?
MACD is already starting to turn back down again. Not much follow through. Volume is lower than earlier, but we are pulling back at the moment.
It's not easy to make big changes in the short term because of the implementation of monetary policy, which has changed so dramatically since 2008. So over time, the demand for bank reserves might come down. Also, if we see ongoing regulatory changes, that could create room for a smaller balance sheet. But I don't think that's going to happen.
We referenced some of the delinquency numbers we got yesterday out of New York Fed. Retail sales was a goose egg. You took Q4 down to 1.6. Are you worried about consumption at all this year?
Well, at the margin, these were weaker data points, obviously. The 1.6 for
hedge flows.
I think you need to see that in context with.
It's not a determined move back to the upside, these hedge flows. So people are still looking at potential bear flags and another push lower, I guess. Okay. MACD is flattening out.
And certainly the delinquency numbers, and that I think is going to be a weaker aspect of the economy. Higher end consumers are doing better though, and capital spending is doing better. So overall, I think we're still in a pretty solid growth environment.
Jan, I've asked you this before. I know your team last summer would have started the AI productivity models and at least tracking both that and job losses. I don't know if you've updated.
Okay, looking at the top 10 on the NASDAQ 100 Global Foundries. Okay, that's seems to care less about the markets here.
We've already seen a pickup in productivity growth.
Okay, so that's Global Foundries, Micron. Damn it. Damn it. Okay, so Global Foundries. Sorry, you don't see what I'm looking at here. Global Foundries. Nice bullish day. Micron. Okay, just consolidating. Probably just going to stay inside the Bollinger Bands for a while. On Semiconductor. Number 3, On Semiconductor. Number 3, breaking out.
As always, thanks. Good to see you.
Thank you.
Good
to be here.
Thanks, Jan. Mattel shares cratering despite strong numbers from a key competitor yesterday. We'll talk about what's driving the declines there next. 24% loss for shares. We'll be right back.
Okay.
Our active AI fund, BAI, really trying to sift through this space and understand who might be the winners versus who might be disrupted from artificial intelligence in software. But importantly, ETFs give people a tremendous way to express a view on the space.
And this year we've also seen.
Okay, S&P turning back up now.
Perfect rotation certainly into cyclicals and out of into other kinds of cyclicals, I guess.
All right, nice little pop there. All right, so On Semiconductor looking pretty good.
Have we seen that reflected in ETF activity as well? And is there anything that
On Semiconductor. All right, AstraZeneca also at the top of the list. Number 5, breaking out.
Resources miners with PIC, our ETF PICK. We've seen it ICOP, which is a copper mining ETF, as well as Ring, which is a gold mining ETF. There's been a lot of investors who are looking towards.
Okay, those are looking good. Gilead.
Some inflation protection with metals, but also some of the long-term, more thematic ways of playing metals in areas like if we see more geopolitical risk with gold, or frankly,
On Semiconductor.
build out data centers, we're going to require a lot of silver and copper.
And you guys, by the way, speaking of AI, you guys do have a big AI ETF called BAI that has over $8 billion in assets. I was just looking at the price return this year, and it is up about 4%. So,
Okay, here we go. Back up. All right, coming back to VWAP. Coming back to VWAP.
What have you been seeing in terms of activity there?
No, not at all. I mean, we've seen tremendous interest in the space. We continue to see inflows into BAI.
Okay, nice. Note the fair value gaps. S&P. Fair value gaps.
We're seeing some parts of the market struggle, but frankly, a lot of those names in the SaaS space are not owned by AI funds. We've been saying for a while, software could benefit or be at risk of AI. And companies could benefit from being able to deliver more software with the same amount of engineers.
We could fill this fair value gap. We could come back and fill it first before following through. It's hard to say at this point what's going on.
So it's more nuanced than that. I think what we're seeing in the AI space today is still a lot of conviction in the trade more broadly, and we're also seeing interest in areas like semiconductors, where memory chips become one of the more fast-growing.
What would be surprising is if we made a new high now. That would be surprising. Okay, looking pretty interesting here. S&P still racing higher.
After earnings, profit and revenue missed expectations, while full year guidance came in well below what the street expected. The company said heavy discounting toward the end of last year did put pressure on margins, in addition to uneven retailer ordering patterns because of tariffs, trade uncertainties. But that said, no sign of weakness in competitor Hasbro's results yesterday. CEO Chris Cox joined us on Money Movers, bullish as ever. Listen.
I think the real growth story for Hasbro is what we're doing on licensing and what we're doing on Magic the Gathering. And that really is holiday agnostic. Our Magic business is an over $1.7 billion business that grew 59% last year. And we're off to a great start in Q1, so we think that momentum is going to continue.
The difference is, the momentum is in the digital business in Hasbro. Guys, 86% jump in Wizards of the Coast and digital gaming segment revenue in the December quarter. Operating margin grew 45% from 24% a year earlier. And then Magic the Gathering, which is obviously their flagship trading card franchise, posted a 141% surge in revenue. So that's, both of these companies have been trying to transition from just like toys and manufacturing to digital games. And feels like the momentum is certainly with Hasbro right now.
Mattel had that nice little move when it was in the movie business in a significant way.
Right, which they're trying to do. I mean, that was, Price's background.
Meanwhile, we're continuing to see selling in many of the software names that we've been following so closely, whether it be ServiceNow or Salesforce or any number of others. I should also note that shares of Schwab have turned around. They were up very briefly in early trade. They are now down after yesterday's decline as well. Again, investors looking for any areas that may be dislocated, disintermediated as a result of the latest AI software tool from you name it. And in this case, perhaps some concern around finance and then insurance as well. So keeping a close eye on that as the session continues, Carl.
Yeah, software once again, AppLovin, Hood, Intuit, all among the big S&P losers this morning. Dow's down 200. After this, a rare interview you don't want to miss. Greenlight's David Einhorn explain how he's navigating some of this volatility and the AI trade as Money Movers begins after this.
All righty. So we're cruising into the 11 o'clock hour. Hope everyone's having a good morning. Probably caught a few people off guard. We're up 40 handles, and then we're down 40 handles, lickety split. Now we're turning back up, headed back towards VWAP. The mean Chevron still pushing a bit higher. So it dipped initially. I took some off because I have to roll out. I have the 180, 185 calls. So I'm going to do 185, 190 for June now. 185, 190 for June. I've just been moving these up from 155, 160 all the way up to 180, 185 as of today. So I took a little profits off as I was at max profit at the 185 strike. Okay, we'll push them back up.
Good Wednesday morning again. Welcome to Money Movers. I'm Sarah Eisen with Carl Quintanilla live from Post 9 of the New York Stock Exchange. Big show ahead for you today. Greenlight Capital's David Einhorn joins us for a rare and exclusive interview. We'll get his thoughts on the AI trade, valuations, and his latest market positioning. Plus, Choma Bravo's Orlando Bravo will join us. Great day to have him, founder of the world's largest software-focused investment firm. We'll get his take on the most recent AI-fueled market volatility, which continues today.
Congress hones in on housing affordability, advancing a bill this week that would enact some new policies to boost supply. We're joined by the CEO of Homebuilder Taylor Morrison, talk about the state of the housing market and the company's results. Meantime, as for the markets, lost kind of the bounce that we got after the jobs number this morning. Dow's gone red. S&P Nasdaq red. Things like communication services, financials were green and leading, now lagging, and instead we got healthcare and staples on the run. Let's begin with this morning's jobs number. Steve Leisman has details on that. Morning, Steve.
Good morning, Carla. Big beat on the payroll report, holding out hope that the job market could be turning around, but raising questions, how much faith you put into this one strong number? Let me give you the upside. At 130,000, it was more than double the expectation. Unemployment rate falling by a tick, again, better than expected. Participation rate rose, labor slack declined, and the private sector was stronger than the overall number suggested because of declines in federal employment. On the question side, you have to wonder, it was triple the prior 2 months, so it's out of trend. Big seasonal adjustments helping retail, and by the way, possibly some positive weather effect with, believe it or not, above normal temps in the first half of January helping construction. I just confirmed those.
Looking for a push higher.
From AccuWeather. Also concentrated job growth in healthcare and social assistance.
Chevron higher, Micron higher, Bitcoin turning up. Still not happy with the way Bitcoin is performing, so I'm reluctant to do too much with Bitcoin.
Here's the calculation by month from 120,000 in 2024. We thought it was 50, now revised down to just 15,000 per month. Futures pricing, continued pricing, 2 rate cuts from the Fed, one in June, another by October or December. It had been flirting with some higher probabilities based for earlier cuts, but that's been washed out by the stronger jobs number. At the very least, this job number confirms the Fed take that the job market is stabilized. But confirmation that we're off to a new spurt of strong payroll gains, just have to wait for a less noisy month for confirmation, guys.
Yeah, we talked to Joe Labornia from the Treasury last hour about this, and he was really encouraged. Another data point, Steve, is that labor force participation increased. More people came into the labor market from the sidelines, which is a good sign. And I think administration gets credit. I also think the Fed gets credit. It vindicates their, first of all, 3 rate cuts that they did last year, setting up for easier policy because they wanted to address some of the weakness in the job market.
I think that's a good observation, but it has a limitation, Sarah, and I'm interested in your thought on this. The prior, the revision downward vindicates the Fed's prior rate cuts, and it says, yeah, they should have been cutting here. What it doesn't vindicate is that should the Fed be on hold here or not? Is this 130 a new number that suggests we're off to this new start? I can't get my brain around whether or not this January number, Sarah, they are subtracting 1.9 million jobs from the unadjusted number to get down to the seasonally adjusted number. So in all of that noise, I would just relax here. I had a guy call me up and say, should I lock in my funding now? I said, I don't know. I think next month is going to be a little bit more in trend because we keep coming back to these demographic ideas, right? That demography is destiny. And if that's the case, then this 50,000 run rate still seems to be right, unless I can see better or different demographics.
Okay, rejected for now.
Or unless we get something way out of expectations on inflation this week,
Yes.
because that's kind of been also steady and not pointing into one direction, whether the hold or cut either way as well. Thank you, Steve.
Pleasure.
Steve Leisman. The FAA abruptly lifting its order halting El Paso airport flights for 10 days. Phil LeBeau has the details. So now what, Phil?
Interesting day, Sarah. It started early this morning when the FAA instituted the flight ban on the airspace over El Paso, including the El Paso airport, which meant that you had no commercial flights. That has been lifted. They lifted it shortly before 8 a.m. Central Time, I think El Paso Central, or 7 a.m. Mountain Time. Early,
Okay, what's Apple's still going here? Apple's still ripping. So if you got sidetracked and you weren't paying attention, Apple is making new highs intraday. Looks good. Just need Microsoft to turn now. There was a lot of put selling in the software group because they were quite overdone. But we dipped again this morning, so probably people questioning the thesis. We want to see more puts being sold down below in the software sector. For now, though, Apple is higher. NVIDIA did bounce. Okay, looks like shorts covering now. Okay, looks like shorts covering.
Acted swiftly to address a cartel drone incursion. The threat has been neutralized, and there is no danger to commercial travel in the region. It goes on to say the restrictions have been lifted and normal flights are resuming. Not a whole lot of impact on the airline stocks. While they are trading lower today, I don't think they're trading lower because of the situation in El Paso.
Apple looking good. All right, I got to take a 2-minute break, folks. I'll be right back.
6 months, so they've been moving around at this level, up and down just a little bit over the last month or so. Guys, I'll send it back to you. The bottom line is this: a lot of questions about why this was put into place so quickly, but you hear the Secretary of Transportation saying, "Look, there was a drone incursion, and we felt it was a threat, and that's why they acted so quickly."
The president of Mexico, Scheinbaum's on the tape this morning, Phil, saying she has no information on the use of drones on the border when she was asked about the suspension. So we're definitely still craving some clarity on it. While they have you, I mean, have you had a chance to look at Ford, kind of a story today in this tariff hit from last night?
Well, the interesting thing about the tariff hit is that they were expecting to have some offsets for auto parts that were being taxed as they were coming across the border. The Trump administration said, look, we're going to give you some offsets on that. Those did not come in as expected in the fourth quarter, but they will be happening in 2026. So there's a bit of a tailwind, if you will. In other words, it's a wash. While it did have an impact on the Q4 results that many analysts were not expecting, it's not going to have a lasting effect. So that is the situation there, which is why you saw the stock drop initially after the results came out, and then they came back as people said, okay, let's focus on the underlying business. And with the underlying business, it comes down to this. They do well when it comes to internal combustion engine vehicles. They do really well when it comes to commercial vehicles and that division of Ford. They continue to lose money when it comes to electric vehicles, though they believe they can still get to a path to profitability when it comes to electric vehicles and their next generation of electric vehicles on an architecture that will be rolled out next year. They believe they can be profitable by 29.
Okay, Bill, thank you. The Ford's up 1%, to your point. Coming up, Greenlight Capital's David Einhorn here for an exclusive. We'll discuss his latest investment ideas, market outlook, and much more.
Later on, Tomo Bravo's Orlando Bravo will join us. We'll get his take on this continuing software sell-off and where he thinks there might be some opportunities as Money Movers continues.
QXO.
NCI. QVCGP. QVCGP. KXIN.
MARA. BNET.
QVCGP. KXIN. KXIN.
MARA. ASTI. QXO.
KXIN.
Welcome back to Money Movers. He has been a famed value investor for decades, known for his Lehman Brothers short in the run-up to the 2008 financial crisis. His firm announcing just last month that it would close its hedge fund to new investments starting in July, while reiterating a bearish stance on U.S. equities. Joining us here for a rare exclusive interview is Greenlight Capital founder and president David Einhorn. Welcome.
Thanks,
To the stock exchange. It's
Well,
good to have you.
nice to be here.
It's great to have you. You know, as we watch the market, the AI trade has really been dominant. And today's another day where software's selling off, and everyone's wondering who's going to be disrupted. Where do you stand right now on the whole AI trade?
Yeah, I just think it's probably too hard for us. So we're mostly just to the side of it. I look at it that AI is going to be a really, really big thing. Like the internet, if you went back to 1999 and said, how big is the internet going to be? It's probably turned out to be bigger than the biggest bulls. And yet, for the stockholders back then, things didn't work out for a while. It took a long time for that to grow through. And I think if you think about AI, 30 years from now, this is probably going to be have enormous impacts on society, probably in ways that none of us can even fathom right now. But then when you compare that to the opportunity in the stocks, it's a little bit more confusing to me. These companies are spending hundreds and hundreds of billions of dollars. I don't think they're sitting around saying, if I spend another $100 billion, I'm going to get another $20 billion of profit, so I'm going to have a great result. I think it's more like, if I don't do this, somebody else is going to do it, so I'm forced to compete, and I don't want to miss out. And I'd rather lose a couple $100 billion than let my competitor have this market. So I think it's going to be a very competitive market, and it's just very unclear to me where the returns are going to come. So we're just mostly focusing on other areas.
And it sounds like you don't think the math adds up for some of the spending.
Well, it depends on what happens, right? I mean, if you have these large language models, they're probably going to be commoditized. Like there's a lot of them, and it's very, very hard to see how you're going to get an actual return. But the hope that the people who are sponsoring, which is above my pay grade to figure out, is for artificial general intelligence, which will take everything to a completely different level where the computers are solving things and they're smarter than all of the people and can do all kinds of things that we can't even imagine. If somebody gets that, it's a great opportunity for that company. The problem is
Apple's still pushing here at the high of the day.
they're going to succeed. I certainly can't.
Okay, it's 11:14. Do you know where your S&P is? Bitcoin turning back up.
Yeah, we don't really know. A lot of these software companies were trading at 40 or 50 times earnings, and now they're trading at 20 or 25 times earnings. Still too much for us.
Still too much for you. Overall market, too much for you.
Okay.
Yeah, well, I think this is the most expensive market we've been in. I think that most investors aren't paying any attention to valuation. Maybe they care about the next data point. Maybe they have a view about price, but nobody has a real view about value. I think a lot of the people who professionally invest money and used to think about value have been fired, been redeemed. They've been turned into index funds or replaced by pod shops, which they don't know what anything is worth, but they know what the next piece of news is going to be, and they kind of want to invest ahead of that. And so, like, the valuation discipline that the market used to have, it's kind of gone. Like, those people have been fired, and I don't really think they're coming back. And so we have a market that is kind of disconnected from sort of traditional valuation measures. When you look at it, like market cap to compared to the economy size, compared to profits and stuff like that.
Okay. Apple, yeah.
Doesn't mean you have to be bearish.
Looks good, Apple. Nice push on Apple.
From a long-term point of view, this probably isn't the greatest time to have a ton of equity.
I mean, the pushback on that, which I know you hear about all the time,
Apple.
is that the economic setup is pretty good. Fed policy has been easy. They've been cutting rates, and they might cut.
Okay, Apple is trying to break out.
Margins are high.
Apple is trying to break out. We've got 288.35 as the 52-week highs from last year, coming back up to that level. Volume is tapering off, so this push higher is on lower volume. We'd like to see this volume spike like it did over a week ago. MACD stochastics turning up. Okay, we're above these volume by price bands. There's very little that's traded up here before. So as far as people that are looking to sell to break even, you're going to have some people right in this area as we ease up into the 280s, 288, somewhere in this area right here. These people are going to want to break even. Some of them, less, I don't want to use the word intelligent, but less notified, less informed investors that got stuck and they've just been sitting in this for, 10 weeks, looking for this to get back up so they can just break even and wipe their hands of Apple, not looking forward to what could potentially be new highs. They'll want to break even. So that's going to be a little bit of resistance, some supply up there for now. Okay, we had a spike here in December, the third week of December, where it looked like it was going to bounce. A lot of volume came in. So we're through that area. We're through that area now. So that's the consolidation we said right here. Looking pretty good, though. RSI rising. Apple looking very strong. I think probably one of the more sound plans. Instead of spending a crap ton of money on their own AI infrastructure, they're just using Google Gemini. Makes a lot of sense, actually. I mean, they design their own processors. Taiwan Semiconductor makes them for Apple. I believe they have contracts for the 3 nanometer or 2 nanometer chips. I forget. I'll have to check it out. But Taiwan Semi also breaking out again today. Okay. So look at the 60-minute time frame. You might be saying, oh, that's too extended. Yeah, it is a bit. So I at least would like to see it pull back towards the 20 EMA. That happened this morning with Microsoft. Microsoft pulled back below the 20 EMA. So that's no longer a long setup. We got to wait for it to get back above the 20 EMA. For now, this is neutral to short. ARM Holdings. Okay, that did bounce. Okay, ARM looks good.
That our fiscal policy and our monetary policies don't make any sense. We're running almost a 5-6% deficit to GDP here with nearly full employment on a cyclical basis. That's
ARM Holdings
some kind of a record
rising. It's in the Kirby. Lots of volume. Volume is tapering off a little bit from last week. Would love to see a little pullback to say 125 that gets bought and then follow through. I got the ARM 140, 145 call spread for June. That's still looking good. S&P is trying to bounce some more.
It's been moderately weak, but you don't have like a panic in the dollar. You see like the bond market yielding.
All right, looks like we might push a bit higher here. S&P is trying to push higher. Apple just pulled back a little bit. S&P is trying to push higher. VWAP is overhead, so expect to get rejected here at VWAP. Okay. Okay, look for a rejection here. I tell you what, if the bulls can pull this off and reverse this back up to more of a bullish looking candle, that'd be great. I don't think it's going to happen, but we got positive gamma. Let's see what positive gamma looks like now. Okay, non-zero day, longer dated calls. Let's see. Not a whole lot of change overhead. Above 7,000. Above 7,000. A little bit added here. 93 percentile. What's most important is that we bounced shy of 6,900. Okay, let's do a 0 day. Looks like 0 day. This built up a little bit. And right here at 6,975, there's some, was that there before? No, it wasn't. See 6,975, positive gamma overhead at 6,975.
10-year yield?
I don't have a view about the 10-year
Yeah.
yield.
I know, but,
Yeah.
but clearly the long-term fiscal path is something that bothers you. Related housing, I know you people always want to know your views on housing and in-house business on home builders. Where do you stand right now? Because that has been a tough part of the economy.
Yeah, I think housing is very challenged. Housing went through a multi-year best environment one could imagine.
Okay.
Came,
Okay, so
to get a house. They
positive
wanted out of their
gamma.
apartment and into the house. And so house prices went up a lot, right? And then there was a material shortage. And the house
69.75, 69.75.
in maybe 2022 and stuff like that. And so there's a further shortage and prices went up more. And then rates started going up, and it turned out that people who just bought with low mortgages then didn't want to move. And so there was less competition for selling. And so home builders were able to raise prices more and margins went up. And I think all of that has kind of now come full circle. And we've reached a point now where it's not a shortage of supply. And people are thinking there's just not enough housing supply. I think the problem is demand. I think people who wanted to buy a house have now all bought houses. And
Yeah, I have a 3% mortgage. I'm not going anywhere.
and so for younger people,
Not going anywhere.
to afford to pay these prices.
3%, 30-year,
Big subsidies
fixed.
and mortgages to get people into houses. So even if rates come down, I don't see that it helps that much because they're already benefiting from the lower rates that the home builders are providing as subsidies.
S&P is starting to look a lot better here, okay? S&P looking a lot better. It went from a red candle to a black candle. So that means we gapped up, pulled back, got back above yesterday's close now, and are starting to accelerate. So they're going to get more people. More people are going to start buying calls that haven't already done so at the high of the day, as we cruise back up to the high of the day, rather. Okay, nice reversal. Imagine buying puts at the low of the day, buying calls up here, and getting whipsawed back and forth. I don't know, the way we started off this morning, it looked like we we're going to keep going. But I like to wait until about 10 o'clock to get a signal. The signal was bearish after 10 o'clock. MACD, watching MACD as well. Still pushing higher. All right, so we're getting something going here. All right.
Aren't forming families and aren't buying houses at the same pace that they used to.
Oh, boy.
We have a negative view on housing. I'll just say that.
Right. You don't want to talk about specific.
No, we're not going to talk about specific shorts.
High tick chick. Okay, let's see.
Home builders. What about some of the names that you have been?
You're looking for high tick chick,
Looking at your
Mondo.
newsletter. One of them that's been in the news a lot, and we've been covering a lot, is Warner Brothers Discovery, which you got into, I think, before the whole bidding war broke out.
Yes.
What is your expectation of what happens?
I don't have any further expectation. We've exited that.
You've exited.
Yes, the bidding war we thought hit sort of a peak and we moved on.
But you did well off.
All right, so we're starting to rally here.
In November, December, and got to sell it in January.
What else are you excited about right now in the portfolio?
The thing I've been buying lately
S&P doing well.
Acadia Healthcare, ACHC. It's a company that's been a bearer of bad news. The stock over the last couple of years has gone from 80 to 13. And maybe 80 wasn't the right price. And they've run into all kinds of trouble. But the CEO, I thought, wasn't doing a very good job. And they recently replaced the CEO and brought in who was much more successful with the company. And I think that she's going to stabilize the operations. They have a lot of real estate. They have a division, which is about a third of the profits that could be sold probably for almost the current market cap of the company if they chose to do that.
S&P 500.
Sometime over
Let's see what junk bonds look like. Junk.
Maybe over the next couple of years. It wouldn't surprise me at all if it made it halfway back.
And you see this as a
Junk bonds bouncing at the 50 day. Really need to see this back above 97.70.
Facilities, and then they didn't figure out how to fill them up.
We're at VWAP. Watch for rejection at VWAP.
As well as some very interesting strategic opportunities.
Is that how you, when you go out and you look for valued stocks or dislocated stocks, how often is it a management issue? I mean, what sort of criteria are you looking at?
Generally, we're looking for just where we don't agree with the market, where we think one thing and the market thinks another. In this case, we started with a small position at a higher price, so we're in the hole on our initial purchases. But as now they've come in and changed the management, we've made this now a much larger position.
Also noticed some of the
Carvana down.
consumer buys. I don't know if you're still in them, but Deckers was an interesting one that had come way down from the highs. Hoka still seems popular. Is that
Carvana, big move lower. Carvana.
What, is that a
What's CarMax doing? CarMax.
It's not. It's that the market just, I think, got way too negative. They had a bad quarter or something like that a couple of
CarMax.
years ago, and the market decided that maybe it was a fad and so on and so forth. And we did a bunch of work. We actually think the brand is in a pretty good, stable spot. We actually think Uggs, which is the lesser exciting part of it, is probably going to benefit from like all the bad weather.
S&P pulling back now
Like that.
in
So
my
we think
household? Yeah.
from the high.
we do okay here.
On Deckers.
Evening.
What about Peloton? Where are you on that one? You've had a history.
Yeah, Peloton we bought.
11 o'clock. We peak at 11:15, 11:20.
After this last result that they announced last week. It was a
S&P
disappointing
got
result.
rejected at VWAP.
Raised prices on people, and then a few people canceled their subscription. I think
Rejected at VWAP for now. We need to say a higher low. Got to get through VWAP.
secular decline. I think the new management has come in. They're cutting costs. There's quite a lot of cash flow. They'll refinance their debt in a few months, and I think it should be okay.
Well, I think the question with Peloton is just how big can it get? Ultimately, in this world where we're all going to the gym again, we're all going to classes, Pilates classes.
Well, that's great. I think everybody should be healthy. I support that.
Yeah, but you like the stock.
I do.
Looks like you had a nice turnaround in the stock. You're known for some of your more, I know you don't want to get into shorts, but you're known for some of your more bearish positions, the shorts on Lehman Brothers, on Allied Financial. I mean, it's got to have been a tough market to be short seller.
It's been very tough to be short, and so that's why we're all so long.
Are you more long than short?
Always.
Okay, Chevron's on the move. Chevron going.
But do you have any high conviction shorts right now?
Yes.
Wait, the home
But
builders
I'm not going to tell you.
What about the influx of retail?
Okay, Chevron. We got ABCD patterns on Chevron. CVX. Chevron. ABCD pattern. Early. Okay, we got A over here. There's your A pivot. Okay, B right there. Okay, so we got the turn we're looking for. Notice MACD turn back up. C pivot more or less in this area. C pivot. Okay, back above VWAP and moving now. There goes Chevron.
Positions in our highest conviction ideas, which were often things that we thought would go to zero. But in this environment, the things that are most likely to go to zero are also the things that are most likely to attract this kind of attention. And so you can't make that your biggest position. And so our bigger shorts right now, they're much more established companies. They're much more boring. And we're looking for probably smaller
All right, dipping again.
gains in them.
Are you still in the sort of industrials?
Chevron.
Area as well? Is that still chemicals? I feel like you've been in.
We're long some European chemicals.
European chemicals. Why?
European chemicals. Well,
What's
first of
exciting
all,
about that?
well, not much lately. It's been just a disastrous couple of years for the European chemicals. They've had trade, they've had China, they've had energy prices, they've had the Ukraine war. But I think things are turning around a little bit in Europe right now. There's a fiscal stimulus going on in Germany, which I think is going to cause some demand. There's been some protection that's been put in to raise tariffs.
Okay, right back down here. All right, so
there was a recent announcement a little while ago that they're reconsidering
no follow through there.
carbon goals, which makes a lot of sense because if the idea was to reduce carbon and just bankrupt your entire sector and then import it all from China where they don't care about the carbon, I'm not really sure whether the Europeans are benefiting from all of that happening. And so maybe they're beginning to rethink that. And then there's obviously the possibility that eventually the Ukraine-Russia war comes to an end. And I think that would cause a pretty good rebuilding opportunity in Ukraine, which would help these companies.
Okay, long European. And just why, David, are
Okay,
you
trailing stop working on Chevron.
You know, when we started,
Okay, Chevron's still going here.
we never really wanted it to be that big. In 2000, we closed the fund, and we kept it closed until like 2020. And but we had a very tough period between 2015 and 2018. We did a really bad job, and a lot of our investors fired us, and I totally get that. I would have fired us too. In fact, some of the times I wanted to fire me while all of this was going on, and we lost a big percentage of our assets. And it got to the point that by 2019 or 2020, we were effectively losing money as a business. and so forth. So we decided to reopen the fund. And now we've had 5 years of really good performance. The cumulative has been better than the S&P with almost
Okay,
no
Chevron looking good.
market. And we've been able to grow assets by having these nice returns. And we've had some investors come back and some new ones, some previous ones come back. And so we're at a decent size to manage the business appropriately. So I think it's time to bring it back to a close so we can just concentrate on trying to make good returns.
Well, we certainly appreciate you coming in and talking about some of the areas you're interested in most. Thank you, David.
Thank you.
It's always good to hear from
David
you.
Einhorn.
Of Greenlight Capital. Carl, back over to you.
All right, Sarah, thanks. Still ahead this morning, Toma Bravo's Orlando Bravo. We'll talk about how AI is disrupting software and whether the sector is looking oversold right now. Plus, the CEO of Taylor Morrison's with us on the back of earnings. We'll take a look at that quarter and the Trump administration's expected antitrust probe into some home builders when Money Movers comes back.
Chevron continues. All right, that's looking okay. Chevron. So oil and gas names. What's Valero doing? Valero. Okay, Chevron looks good. Let me just change this. Okay, I got a little bounce here.
NCI.
mRNA.
WXM.
MACD's turning up. Chevron's cruising.
NCI.
AOIL. EW. UNHG.
WXM.
These sort of
Chevron.
areas that we have been known for, we are gaining wallet share, market share, and people are banking with us. The people are investing with us, and they are pouring all of their assets into their accounts with us.
Robinhood made that case and is that they are going there. They are well down that road of becoming a financial super app. Okay, I get it. But who's not down that road is Coinbase. And when Coinbase reports and this tomorrow, they could show a pretty ugly quarter, and we could be back here talking about Coinbase selling off like Robinhood selling off.
Right. On Coinbase, I would say that Wall Street is, I just saw a note from Compass Point that they were basically more bullish on Robinhood than they are on Coinbase. And part of that has to do with what you're saying is their heavy lenience into crypto, of course. But they are also known as a company that has to do with the infrastructure for institutional infrastructure. And remember that this is also what Wall Street and what crypto bulls are also talking about, that Bitcoin and all these other tokens, it's become not just an investable asset, but it is also part of
Chevron cruising higher. Looking good.
This is what everyone is going to, the entire financial system is going to upgrade on blockchain. And that's the story going into the next 10 years.
We need to put to bed
Brokerages are the latest victims of AI disruption fears, underperforming along with software names. But this new warning going viral on X suggests that some still may be underestimating the scale of the upheaval that's coming our way. Our Deirdre Bosa is talking about that in today's Tech Check. Hey, Dee.
Hey, Carl, so that post was viral, and we should add it was divisive. It comes from Matt Schumer, an AI startup CEO. It's his honest version of what's happening in AI. He says he just describes what he wants built, walks away for hours, and comes back to find it done, concluding that he's no longer needed for the technical work of his own job, and we should be thinking about the same. So investors like Sequoia's Pat Grady, they're sharing it, while critics are calling it a 5,000-word ad from a guy whose startup Hyperwrite depends on you believing the hype. But love it or hate it, it sums up the thesis that has been driving the software sell-off. The market is essentially backing this guy up, saying if AI can do the work, you don't need the software or the people who run it. Now, as you guys mentioned, startup Altruist launched an AI tax planning tool yesterday, and it took billions off wealth management stocks. That sell-off continues today. This is evidence of exactly what that post is arguing. The gap between possible and here is collapsing faster than
Chevron still pushing here. Chevron.
And the market isn't waiting to find out who's right. Now, the tools themselves are backing up the thesis too. We have gone from chatbots to autonomous agents that write code, test it, fix it, even ship it without a single human in the loop. And the race among top AI companies that is only accelerating. OpenAI and Anthropic, they drop models on the same day. In China, its own two hottest AI labs, Jipu and DeepSeek, they're battling for breakthroughs ahead of Lunar New Year, which, by the way, are benchmarking directly against the American top models. So beyond stock moves, guys, the jobs story is what this post gets at, and it may be next. Salesforce just cut 1,000 jobs. Workday cut 2% of its workforce. These are software companies being disrupted, and they're already shrinking headcount, while the AI companies that are replacing them, they run with just a fraction of the people. Anthropic has about 4,000 employees, and they have caused, billions and billions in disruption in the public stock markets over the last few weeks. Yeah, Jan Hatzius, chief economist at Goldman, told us he saw some of the weakness in the tech sectors in today's report. Thank you, Deirdre Bosa. After the break, Tomo Bravo's Orlando Bravo here to talk about the software sell-off. Here's what he said to us just last month in Davos. And the narrative that AI is going to eat software is really taking over. Is that wrong?
It is absolutely wrong. In every one of these software spaces, there's 2 to 3 software companies that really, really know that domain. And they have the employees and the leadership that know that domain. That will not go away. That cannot be copied.
Chevron's still pushing. Wow, this thing is gone. Chevron is gone. What's going on? Any news here? Any upgrades? Chevron has expanded in Libya, winning a bid for contract area 106 in the Sirte Basin. Exploration license, marking its return to onshore oil. Chevron has a new U.S. Treasury license for oil and gas. How does the U.S. Treasury give them a license? For oil and gas exploration in Venezuela, enabling U.S. goods and services. Company seeks individual licenses to boost output and exports. El Segundo refinery in California has a hydrocracker unit offline for 4 months due to a fire. And 2 hours ago, we had Chevron to expand in Libya. All right, so that's the alerts on Chevron. That just keeps going. S&P is on the move now. Maybe some out of the money calls. Mondo was buying earlier. I think you're in 69.75s, right? 69.75s S&P. S&P 69.75s. If we can get through VWAP, we could see 69.75. I agree with you, Mondo. 69.75 is right here. Okay, that's not too far away. If we can get through VWAP. MACD is trying to turn up. Need MACD to cross. Okay, MACD needs to cross. Volume needs to pick up. We filled the gap earlier. Now we're starting to cruise higher. Okay.
MV halted to the upside.
QNCX.
QNCX.
HSAI, that's a big drop there. $3. It's down 8% on the day. HSAI got stopped out of that one. That was something we looked at yesterday. All right, 69.75 is not too far away. We need to get through VWAP. All right, so that's the biggest hurdle at this point. We keep getting rejected. Apple's just off the high of the day. Apple.
QNCX.
Hedge flows still rising. Hedge flows.
EVLV.
Okay, we're coming into the 12 o'clock hour. It's 11:42. 11:42 on the East Coast. 11:42. It is February the 11th, Wednesday. Hope everyone's having a good day. Kind of a slow start. We had a nice gap up this morning, faded, filled the gap, and then reversed. I don't know how far we're going to go. We're right at BWAP, so overhead we've got positive gamma filling in overhead. 0 day, non-zero day. There's not a whole lot there. Non-zero day is up here at 70.10. Okay, so watching hedge flows. Okay, both of these lines need to be rising. All three actually. The orange, the blue. All right, this fluctuates quite a bit. This to me, using this part of Spot Gamma's website, while it tells you what's going on with the hedging impact, what dealers are doing, it's a little bit too noisy. I like to use this instead. Trace. All right, let's see what the FANG is doing here. New York FANG components. Okay, so puts are still pretty expensive. All right, so we got an opportunity for these to move to the right. Calls will be expensive if it moves to the right. All right, so we're watching all these stocks that are on the left, looking for these to start moving to the right. Tesla off the highs of the day. Okay, Chevron, nice follow through. Chevron.
Is this FDA, which obviously you know RFK is really a vaccine skeptic? Is that a good way to say it? He's the U.S. Health Secretary, and he's not really one. You know, he's already stopped the mRNA vaccines and such, developing that. So, is this a seasonal story?
FLYX.
Okay, let's see. Let's see what is moving today. Most active options. Okay, this is Flow Patrol for this morning. Unusual options positions for today. DJT bought to open puts. Rig bought to open puts. Peloton bought to open calls. Peloton, 30,000 of those. Mara, 35,000 of Mara. Okay, so Mara, puts being opened. Rig, puts, Peloton. Peloton, the 7 call on Peloton. Let's see, and that's supposed to expire in 27. 7 call on Peloton, PTON, the 7 call. And okay, let me take a look at that. 7 call on Peloton. For January of next year. Peloton, January 15th, 27. All right, Peloton. Let me take a look at that. Peloton. See what kind of play that would be. Peloton. The 7 call. Peloton. All right, Peloton.
Considering the stock is still considered perhaps a little bit overvalued, both on price and sales and price and earnings. But nonetheless, some of the analysts are still bullish and some are mixed. If you look at some of the rating increasing their target of 240 from 230, UBS
30,000.
maintains a neutral rating at 220.
30,000 bought to open.
They actually maintain a sell, but they did increase their price target to 140 on the statement. It's really based on valuation. There's no doubt.
Okay, so Peloton.
But overall, if you look at even the adjusted earnings, which rose from 91 cents to $1.15 for this fiscal year, it's still trading around 160 times this year's earnings at about
710.
George, that Guggenheim note really stuck out to me as well. They said one of the most interesting lines I think I've seen in an analyst note in a long time. The top line results might be reminiscent of a glass of Barolo in Milan, but the bottom line results and guides seem more like boxed wine. Not exactly what you want.
Yeah, great analogies. I think that's the challenge, really. If you look at their business, like I said, top line sales are growing, remaining performance obligations are there, earnings are growing, but like I said, underneath, you have to consider the multiple compression that we're seeing in the name.
All right, so that's January of 2027.
A mixed reaction on the sell side. We are seeing a positive uptick. But getting back to those gains, how would you look to trade this one, for example, for
So interesting enough, one of the things about the name in terms of the stock price action, it's been down significantly, about 30% since November of last year. So it wasn't a recent.
Yeah, so it's 710. That is actually a spread. Okay, 710.
So there's a possibility still with the stock trading below the 200-day moving average. It reclaimed the 50-day moving average, which is positive. But there was a recent, death cross 50 below the 200. So there may be a gap fill reversal back to the yesterday's high from the 185. So I'm going to play the backfill to that level. I'm going to go out to February of next week. So 9 days expiration. I'm going to sell a 185 cash secured put. Altogether, you can earn about $3.50 a share or $350 a contract. So the whole premise behind the trade is to hold the 185 between now and expiration, between now and the end of next week.
MB may resume in less than a minute.
Placing this trade, you have to be willing and able to take ownership of the shares. If it does hit 185, you'd be assigned. Your cost basis is essentially 181.50. You're earning around 2% yield to strike price in 9 days. That's not too bad. And the delta on these options is around 25. So that implies approximately 75% probability of profits between now and expiration in 9 days.
All right, George, we appreciate you being with us today to walk through Cloudflare, the earnings, some of the analyst action we saw, and also for that example trade, Cloudflare trading about 6% higher this morning. And of course, that's George Tillett. Coming up next, we've got our 360 round, taking a look at Shopify after earnings and where the brand stands in the growing e-commerce space.
MP may rest in 10 seconds.
S&P still getting rejected at VWAP right here. All right, that's VWAP. We keep getting rejected. Got to get above it if we got any chance of changing the complexion of the markets at this point. 2 bearish days in a row.
FCH halted to the upside.
We don't have to go anywhere. I mean, the way we were rocking people back and forth, we're up over 40 handles. We dropped more than 40 handles, then back up again, back to VWAP. No idea if we're going to continue to move higher. I'm just watching the hedging flows, and hedging flows here, and what's being added during the day. Okay, non-zero day. Look at the levels just overhead. Look at these levels here and here, right below 7,000 and just above 7,000. Now watch here when I go back to 930. 930. See, a lot of these go off. Okay, a lot of these got closed. Okay, and then as we proceeding closer to current time, okay, some of that positive gamma is starting to build up again. You can see the purple starting to build right here, right there at 69.75. Okay. So people are selling. People are selling. That's creating positive gamma, selling overhead. So we'll see if we can take that out. See if we can take out 69.75 or so.
They're expanding their AI capabilities by partnering with OpenAI and Google. So the runway, looking forward, looks really good. And if we compare it to other players in the e-commerce space, it's really, only second to Amazon.
Andy, December usually Shopify's strongest quarter, but again, we saw EPS come up light here. In your opinion, is this
Okay, Tesla limping, did hit highs and then dropped back below the 20 EMAs on the 60-minute. That was telling us to chill for now. Yeah, I don't like Bitcoin either.
Yesterday we got December retail sales that were flat. That capped off a year where the consumer was supposed to be cracking. And yet Shopify just posted, as you said, 31% revenue growth and a gross merchandise value of 29%.
Got to get above the 50-day.
How do you square that? I think that this is a consumer.
All right, Bitcoin. Yeah, I'm not too crazy about it either. Jeff, okay, Bitcoin. It's got to get above the 50-day. That's a long way. That's 85,000.
We saw credit card serious delinquencies hit 12.7% in Q4. That's the highest since the aftermath of the financial crisis. But the lower end consumer may be stretched here, but Shopify's merchants are selling to the top 10%, who now drive nearly half of U.S. consumer spending. I think that that's not a vulnerability. That's a moat.
All right, so Andy highlighting the strong consumer backdrop that we're seeing. Mark, the March quarter guidance calling for, I think, low 30s revenue growth. That was ahead of expectation. From your vantage point, I know you have a bullish 8,000 S&P target. Does that reinforce that with this strong consumer backdrop?
Okay, S&P. We must get above VWAP. Must. Okay, VWAP. Still getting rejected here.
Retail sales number the other day. But generally speaking, the data has been pretty good. When we look at the business side of the economy, we're looking at massive CapEx spend. So that's looking pretty good. And the fiscal policy that's coming out of the federal government as well. That's also against a backdrop.
MB may resume in less than a minute.
Rates this year.
And see.
And really, the economy, again, looks like it's firing on all cylinders.
Okay, we're about to come into the 12 o'clock hour. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's kind of not kind of. It is a very choppy day. We were up 40 handles, down more than 40 handles, back up to the midline, where you would expect prices to gravitate back towards the VWAP. But we are negative on the day because we're below VWAP. We got to get above VWAP if we have any chance of being more bullish. If you bought the low of the day over here, like Mondo did, great. But yeah, HSAI continues to drop off. All right, so that's the thing I hate about. Don't want to use the word hate, but kind of strong. That's why I dislike.
Instead of M&A, they're telling you that the best investment we see right now is in ourselves. And today's
FCH may rise in 10 seconds.
makes that buyback even more accretive.
Certainly, right now, we are down more than 12%, more than 12.5% for Shopify, trading at 110.88. I want to thank you both for being with us to highlight Shopify and the earnings we got from them. Mark Gibbons, the CIO at Gibbons Capital Management, and Andy Wong from Runnymede Capital. I also want to thank all of you for being with us today on Trading 360. I'm Marley Kate, and that's going to do it for today's show. You can download the free Schwab Network app available in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. I'll be back with Market on Close at 3 Eastern, 2 Central with Sam Modest. But stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moving brokerage account is available in seconds.
All right.
And start investing in stocks, bonds, money market funds, and
XCH.
Walmart. Okay, Walmart did dip. Okay, let's see what Walmart's doing. Walmart. Okay, looking better. Walmart. All right, I'm going to buy the dip. Okay, so I've been waiting for this. I'll do smaller because we could get jammed still. Walmart. Okay. I'll go out to June. 130, 135. Verticals for now. Okay. See if I can get in here. 130, 135. I'm bidding 220. 220.
I think one of the most important things is to find way here. That would be a further downside area to watch.
Insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Pop. Hey, Andrew. Last year, my dad had a stroke. Big shock. And see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes.
QVC
Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim's my financial consultant. I met Matt 20 years ago. Jim's really been there to answer any questions I ever have. It makes a huge difference when you have someone that actually cares.
With Peloton, with respect to Peloton, that's a year from now, next January. All right, leaps. This needs to get above the 20 EMA and start to turn. To add to this, I just took some $30 per contract spreads, 710. Okay, so that's a ways up here. It's cheap. I'm willing to sit on this one for a while, looking for this to turn back up. Peloton, maybe somebody buys them out, like Nautilus or some other company. Okay, Chevron at the highs. S&P still pulling back. S&P. S&P got rejected at VWAP again. Hedge flows. A lot of positive gamma in this area and above.
RDAC halted. MB may res in 10 seconds.
For this potential to reach and climb above the 7,000 level. We've struggled to see that. The Dow right now off by less than 0.1%. We're really range bound now on the Dow and the Nasdaq 100. Russell 2000 lower now by just shy of 3/4.
All right, we're continuing to move lower now. Looks like we're going to head back down towards 6,900 potentially.
MB halted to the upside.
NCI.
Trading action. It is time to bring in my co-host.
MB.
It showed that the economy grew by 130,000 jobs in January. Much better than expected. Unemployment rate changing.
12 o'clock. All right, so I'll listen to what they have to say at CNBC for now. Rejected at VWAP.
And it looks like software is kind of rolling over a little bit. We'll see what happens from there. So Jenny, Bespoke puts out this note. For the first time in its history, the S&P 500 went from overbought to oversold and back to overbought in a week or less. It speaks to kind of how frazzled the last week of trading has felt.
Yeah, and I think the only way you can contend with that and stay sane is to push out your time horizon. And I think if you're an investor,
Rig making new highs. I do have the September 4 call. Okay, we bought those. What was it, yesterday? Rig, or was it Monday? I forget. Rig. I have the September 26th this year, September 4 call. Those were up about $15 per contract. KDP. I don't know. I just don't feel the energy in the market. Just feels like the bears want to crush this. 2 days, S&P 2 days in a row. So far, it looks like 2 days in a row. Selling. We're up 40 handles this morning. We dropped more than 40 handles before we bounced at 69.12. We came down and tested 69, close to 6,900. MACD's turned down again, so you've got a bearish signal. 5, 15, 30, 60 minute are on sell signals on the futures.
David Einhorn is a very smart guy, and he doesn't speak very often. So's Pasquarello. Very smart. So I would say there's pieces of what they both said that are true. Yes, the market is expensive. You can't deny that fact. There are many reasons that it's expensive.
Russell is down a little bit right now. Russell.
And that inflates the value of everything.
The index, not
Coming out of COVID, we're still having
a member. Okay, Russell turning back down.
If we're not going to have the kind of slowdown or softish growth period and employment is strong.
Okay, let's look at the dividend paying ETFs like SCHD. Continues to go SPHD, SCHD, SPHD, just rocking and rolling. All right, so SPHD, SPHD, SCHD, rocking.
MB may resume in less than a minute.
You take it in aggregate, there's a few big things that buoy the whole thing up.
WRBY.
You look at the other
EU halted to the
493,
upside.
it's not as rosy a picture.
RTAC may rise in 10 seconds.
Pretty good. You're talking like you're talking. What, you get one stock out of a hat? You're saying everything outside of the mega caps in terms of earnings. You said look at the other 493.
Only because that's a lot of stock. I'm not saying the mega caps are the only ones buoying it up, but I'm saying in aggregate, growth is there. Once you start to disaggregate, it's not as good a picture.
What do you think? You warm enough over there?
Yeah, I am. It's it's all about layers. Quite frankly, it is.
Everybody loves layers, though.
There's a lot of
MB may
layers.
rise in 10 seconds. WRBY.
I'm a big red onion, okay? Having earnings. I mean, if Einhorn says, I think this is the most expensive market that we've been in.
Okay.
Someone like Ed Yardeni would say.
Constellation Energy. I see some of you buying some Constellation down here. I like the idea. Constellation. All right, let me take a look at this Constellation CEG.
We're in the process of transitioning in this fourth year of the bull market from a momentum, multiple-driven market to an earnings-driven market. When we wrote our year-ahead piece for 2026, we talked about traditionally and historically over the last 80 years when the S&P 500 moves into more of an earnings-driven market, the returns are roughly half what a momentum and multiple-driven market. Doesn't mean it's not going to be positive. It's still positive. That, to me, is a much more fundamentally driven market. And what's happening with the market and with participants with these binary moves, buy, sell, there's a big disruption between short-term, intermediate-term, and long-term. And I think at the end of the day, what the market's showing you is that other areas of the market are working. Dividend growth, value, small cap. And the more that they work, the more credibility they have. The more credibility they have, the better performance. So performance begets performance. And we will continue to lead in this.
Today upgrades value, downgrades momentum. Joe, you can go on that, and cautions on small caps. Like small caps got out of the gates like a Ferrari to start this year, and then that's obviously cooled a bit. There is the rates question.
Yeah, so SCHD, SPHD, these are doing really well. Still going.
Then you get this hot jobs thing today, and who knows? But upgrade value, downgrade momentum. You say what?
So the broadening thesis is supported by earnings, and it is not just domestic. It is in the emerging markets. It is in areas like industrials and financials, and it's in small caps too. Small caps finally are seeing on an annualized basis positive earnings. Momentum can go to different places. Momentum can reside itself in high beta. Momentum can reside itself in low quality. And what momentum is currently doing is it's pivoting more towards quality and more towards value. So there are names that we identify as value. There are names we identify as quality that have established momentum. That is what the momentum factor is. The momentum factor outperforming the rest of the market like it has since the first rate cut in September of 24? No, it is not. And I would argue that's a healthy condition for investors.
Okay, so Jenny, here's another one for you. So you paint a reasonably dour picture of earnings, like you're not all that wowed. So why don't you tell me, why is the Dow at 50K and why is the equal weight hitting new record highs every day if earnings outside of the Mag 7 are just kind of...
No, that is not what I said. I didn't say earnings outside of the Mag 7 are ho-hum. I said once you look outside of the Mag 7, you can see a much different picture. There's many companies outside of the Mag 7 that are reporting excellent earnings. And frankly, I've been the beneficiary of that for a nice change this year, as with a more value-oriented, disciplined, growth-oriented strategy.
All right, nice reversal.
So I think of things... I'm really focused on the...
Okay, we have to get through this VWAP. All right, that's the biggest obstacle right now. Above VWAP, well, I more than likely would see, I would think we'd see a lot of shorts covering. That's a lot of ifs. It's hard to say who's got this one today after a bearish day yesterday. I'm just assuming the bears are going to hold on to it. So look into things that continue to profit, like energy stocks, SCHD, SPHD. These two are rocking and rolling. All right, remember we got long here on SCHD. I added to SCHD on the 8th. This continues. All right, let's see how far we've gone here, approximately. Okay, since the 8th, that candle right there is where we got long. Okay, 12%, 12.5%, still long. Why are we still long, Benny? Check out the 60-minute 20 MA. Check out the 20-minute 60 MA. Okay, every time we trend along this level, SCHD. God, he is so freaking obnoxious. I just want to scream at the television. I'd love to see this guy, Wapner, actually manage a portfolio instead of getting giving these people grief every day. He's just so obnoxious. I like Frank better. Frank and Mike Santoli and Melissa. They's much better. Much easier hosts to deal with. Listen how obnoxious he is. He's arguing with all of his hosts. Belsky's just sitting over there minding his own business. Dow Industrials are flat. We're above 50,000 at 50,148, give or take. Okay, the industrials, the diamonds. Okay, we're messing around with the 20 EMA right here. So this is neutral right now. You have a buy signal, sell signal. Russell shorted it from up here yesterday. Russell, you shorted this yesterday, right?
Okay, so you've got Russell 1000 growth down 2%. You've got Russell 1000 value up 6%. You've got NASDAQ 100.
ONEG
Yeah,
may
but I'm
rise in
just
10
saying,
seconds.
change your playbook, people. Like if you hear up 15%, don't just go back. And this because I talk to real people all the time. Having a conversation last night, this woman says, "Oh, hey, like I heard the market's terrible." I go, "Well, the market's up 2%."
Jenny, materials are up 16%, energy's up 24%.
Tax down 2.
Good. Isn't that doing something different? Are we doing what you're saying?
Are we? Do you think the viewers are doing what we're saying? Because I think people are sitting in the same place that they had last year.
What's moving the market?
What's moving the market are other things, right? Which is why you see growth up. Like all I'm saying, suss it out.
I think viewers are smarter than maybe you want to give them credit for. I think they've been going to the other areas and diversifying.
Yeah, but all I'm saying is like,
Obviously they
let's
have.
not paint broad brush comments. You know, like, oh, earnings are terrific. Earnings are mixed.
But earnings being terrific is the reason that you have optionality as an investor, that you can own industrials.
We got to get above VWAP. Got to get above VWAP, folks. I wouldn't take any risk until we get above VWAP. We keep getting rejected here, so.
ONEG vaulted to the upside.
Well, we talked to our executive producer, Kevin, who already went viral once this week and is doing it again because he's an Orioles fan. You may know what you're talking about. I don't know. Let's move on because I can't take it anymore. All right, let's talk about some moves. So we know that the transports and industrials have done well. Most people do anyway. Jenny sold JetBlue. Why did you do that?
Chevron. Okay, let's see. Let me just do a little bit of analysis here for a moment, if you don't mind. Okay, Gemini.
Pretty high conviction that it will get back to $1, maybe even $2 one day of earnings, but we can take that capital loss, offset realized gains, and sit it out for the next year with an up 36% move. I don't know how much more upside there is from here.
Okay. Why has it struggled when other airlines have done so well?
Yeah. So what happened was like pre-pandemic, right? They were a lot of like smaller routes, discount airline. Following the pandemic, that space got flooded, and they ended up kind of in no man's land. They had a ton of competition. They weren't unique anymore. They took on too much debt, and they just
You may resume in less than a minute.
And then there was the whole Spirit combination, you know.
Right. I mean, so like there's a good representation of it, at least. Delta, for example, versus that.
They were in no man's land. They were neither a Spirit that was super discounted. They weren't a Delta that had higher end and first class. They just ended up in no man's land with huge debt.
So we have another move to talk about, and that is Joe Terranova not in an ETF because obviously he's locked up until the end of the quarter to do anything there. But you bought personally Apple. Yes. Well, that's because you sold it in November, late November, and now personally. Yes, personally. November 19th, you sold it, and now you bought it back. Why'd you do that?
If you are running a momentum screen, which is what I'm obviously doing on near-term price action, you have a similar pattern match to what existed in August. I want to be clear.
All right, Chevron is currently the only U.S. oil company with a license to operate in Venezuela. Just doing a little bit of research here. Following recent political shifts, cash flow upside, analysts estimate that cash flow boost of 400 million to 700 million, almost a double annually from increasing production at existing joint ventures. Chevron plans to lift Venezuela output by 50% over the next 18 to 24 months, utilizing local oil shale cash flows rather than injecting massive new capital. The refining synergy, also Chevron's Gulf Coast refineries like Pascagoula are specifically designed for the heavy sour crude produced in Venezuela. What I'm looking for is the addition of Libyan contracts at the Area 106 in the Sirte Basin, which will help lift profits as well. Chevron could just keep going. So I'll just keep doing it the way I'm doing it. Chevron, the way I've traded Chevron has worked, so I'm not going to change anything. So basically what I keep doing is, since we got into Chevron over here, as you know, since we got into Chevron here, we started on the 5th of January. I think it was the 5th, was our 4th of January, 5th of January, after the Maduro capture. Added to it once it moved back above the 20 EMA on a 60-minute time frame. So that became our stop now. Okay, and then as we continued higher, I kept adding credits, call spreads. Started off at 155, 160, 165, 70, 70, 75, 80, 85, and we're up to 180, 185, 190 now, okay? The way these calls work, obviously spreads, the upper strike that you sell, 180, 185, that's your max profit. So once we hit 185, I had to do something. I had to either roll, take profits. I chose to take a little profits today. And then once we dipped intraday, that ABCD pattern that showed up. Okay, we got that ABCD pattern intraday. Okay, early, here's A, B, C, and then we took off to the upside. D, okay? So there you go. Here's early in the morning, A, B, C. You got the high of the day. We pull back. We don't make a lower low. We make a higher low, higher low, higher low. We just keep making higher lows. So the news makes sense, okay? So the news for Chevron makes sense. Okay, cash flow upside. We got production targets being lifted, refining synergies. We got the Libya oil fields contract. That's new. Okay, reached a final decision in early 26 to expand the Leviathan gas field offshore of Israel. Okay, so they've got new wells in Egypt, Jordan, and Israel. A memorandum of understanding in Syria. Okay, Wall Street consensus. Average price target 172, 182. Bullish case target 206 in the short term, provided we have production stability. All right, so 206 in the short term looks pretty good. S&P is trying its best to get above this VWAP, okay? They keep killing premium. Okay, let's look at breadth. I don't want to get so focused on energy that I forget to look at what is breadth actually doing. Are we improving? Are we stabilizing? Are we just kind of flattening out? So we're kind of flattening out right now. S&P is flattening out. Still plenty of upside before being overbought. Small caps. NASDAQ is flattening out at zero line. Okay, so this could go either way. Apple's at the high of the day. Apple continues. I got a feeling Apple's going to break out. I really like the idea of Apple not spending all that money, CapEx, on AI infrastructure like Google and Meta are doing, right? Amazon, whatever. They design and make their own chips through Taiwan Semiconductor. Yeah, I really like it. Now, with Apple, here's another example of the 60-minute 20 MA. Okay, we're back above the 20 MA. So we've gone from neutral to bullish. Okay, this is the second time it's consolidated like this and then jumped back above the 20 MA. You know, it takes days and weeks for institutions to accumulate positions. You can see the institutions here. It's been tapering off the last week, but it looks pretty good overall. Apple's at the high of the day right now. Okay, S&P is trying to go. We got to get through VWAP. We can get through this VWAP. That would make a big change in the bias. A lot of people probably have stops up here. Stops.
It could lend itself to actually assisting. And the thing to think about for the financial services is if we are going to pivot from wealth managers dispensing advice to
Got to get above VWAP.
you have regulatory standards. Where's the liability in that regard for AI? Is AI in some capacity, or the creators of that AI tool, are they accepting the liability surrounding that? You have to think that through. I don't know that that's
Look, if you use the word eliminate, I think that's a little harsh. No one's suggesting eliminate, but if you're talking about being disrupted, you're talking about multiple compression. You're selling today in anticipation of a much more different story down the road.
Keep getting rejected here, S&P.
About the elimination of businesses, the stock reactions would be much more harsh than they are.
I'll give you that. My choice of word there maybe is a little bit too strong, but I think it was Stephanie last week who pointed out the proof point is the challenge here. Where is the proof point on all of this? So I think you have to be very careful with that reflex reaction, selling something down 9% without more information.
Jenny, you don't talk to.
Come on, let's do it. Let's do it.
It's funny. I had a client email this morning who said, "Should we buy more?" I said, I think it's, I think they're not overdone yet. I think there's so much disruption coming from AI. We have no idea how or where it's going to come, and it's just a reminder that nothing's safe.
Okay, let's do it. Let's do it.
Because of AI, often it's for something that's fairly high priced, and the price will be down much to a much greater extent. No one's paying to trade on Fidelity or
VWAP.
these big platforms.
VWAP.
Commissions they've been very inexpensive already. So who's getting that advantage? I mean, that's to me a positive about the financials being disrupted, where I can see many other businesses, Adobe, Autodesk being more
What about the
disrupted.
idea that Jenny just said, that it's just not overdone?
Okay, we're trying to push through VWAP right here. All right, here we go. We're pushing through VWAP. Stops will get taken out.
So I just think there's less of a downside because of AI, and there might be.
Okay, here we go. All right, stops getting taken out. Okay. Apple at the high of the day. Microsoft is trying to reverse here, short covering on Microsoft. Okay, nice rip here. Nice rip so far. Come on, keep going. Let's just keep going. Let's see where we're going here. Hedge flows turning up. A lot of positive gamma, so that's going to help the bulls. Okay, this is non-zero day. Looking at the 0 day, above this level, there's not a whole lot overhead of positive gamma. A lot of negative gamma. Okay, that's 0 day. I'm going to keep non-zero day displayed for now. Okay, can we get some more follow through? Get some help from our friends. Micron, turn it back up. Micron. Okay, let's get a high tick alert or something. A tweet. We need a tweet. Need a tweet.
mRNA. NG. MV may res in 10 seconds.
MB.
MV halted to the upside.
MB.
Come on. It just like disappeared. Where's all the volume? Come on, let's get a follow through.
mRNA.
No follow through yet. Okay. We just popped above VWAP and fair value gap. Maybe this fair value gap gets filled. Okay, that fair value gap right there. This is a fair value gap. A lot of times the speed of the move catches people they can't get in, so they wait for this to dip back, and then we get the push to the upside. All right, do we get this? Did we get that kind of action?
mRNA.
So what forms a fair value gap is people chasing prices. Their orders don't get filled on the long side. Prices scoot higher, and a lot of times we'll pull back into that. We'll pull back into that little rectangle, back down to that horizontal, somewhere in there, and then continue higher if that's what we're going to do. Or sometimes we just completely reverse. This could be people shorting, looking for a reversal too. So I'm going to watch hedge flows. They bought Astera Labs, ALAB. Astera Labs. I don't like the pattern. This is really ugly looking. I like clean patterns. All right, this could go either way. Belsky, man, he's been tanning a lot lately. He looks chocolate.
Okay, so Genpact is interesting. It spun off from GE in 2005. They've grown their earnings at a 13% annualized rate for the past 15 years. They trade at 9.7 times earnings with an 8.5% free cash flow yield. By the way, this is in our disciplined growth strategy.
Genpact. She's buying Genpact. Jenny's buying Genpact. Okay, all right. Now we're coming back down. Let's see if we can't follow through later.
Okay, the reason it was viable for us is because the stock's down about 30% in the last year, but more importantly, down 20% this year. Why?
Apple's at the high of the day. Apple continues at high of the day. Apple. Okay, Apple trying to break out over here. Looks like we're trying to break out, right? We got that high right there from Friday last week. Apple's doing really well.
Okay, thank you. Brian Belsky, back to you. You bought Pinnacle Financial Partners, regional bank.
We did. We owned First Citizens for about 5 or 6 years. In fact, First Citizens was, I think, the best performing bank stock in the S&P 1500 in 2024. So this is a big stock. And so we also used to own this company called Synovus Financial. Pinnacle bought Synovus Financial. And we wanted to see how that integration happened, number one. Number two, following the theme that I talked about in the prior segment, getting smaller in terms of our portfolio with respect to market cap. Pinnacle, we think, in the Southeast is a great player with respect to a smaller cap regional bank.
So you sold First Citizens.
We did.
And you bought Pinnacle with
1-for-1.
one for one.
Yep.
Carrie, you sold Health Equity. So it manages health savings accounts. Why'd you sell it?
Well, we've been selling it over the past 6 months. It had hit, a high in the middle of 2025. Lots of employment has been helping because they sell health savings plans, and employment numbers have been coming down. They've been weaker until today. So we have been taking profits, and we just decided to sell the rest, and we traded out of that, and we applied those funds for Boston Scientific, which has been hit hard recently. Medical device company. It's one of the leaders in cardiovascular and various other types of devices, endoscopy, electrophysiology, and we really think that at this price, it's attractive, it's a stable grower, it is not the small device company it was 25 years ago, and the expectations had gotten ahead of itself, so we thought this price is one that we'd go back in. We've owned it before.
Speaking of healthcare-related stuff, Joe, you trimmed the biotech ETF, the XBI, and you were so bullish on this for a while.
Still am.
Okay, tell me more.
October 1st, I began buying it at 101. As you know, I made several buys along the way as it moved higher towards a 132 high at the end of January. That raised my cost basis up to 112.41. Bought Apple today. There are other moves that we're going to talk about later in the show. I wanted the net of all of that invested capital to be zero. I don't like the way the XBI has been trading recently. It's now underneath the 50-day moving average. It seems to be underperforming healthcare overall. It was time to take a little bit of profit, but more importantly, manage the position and reduce it somewhat after all those aggressive buys.
Yeah. Can we look at that year to date, even if we showed it already? I just want to see it again real quick, because what was such a hot play towards the end of the year.
All right, where are we? Money Magic levels on Apple. Let's check it out. Apple 280, 275. All right, so above 280. Okay, above 280, we get Jiggy up here.
At least 9 people died in a shooting at a school in British Columbia. More than 25 people were also wounded in the attack. Police say they believe the shooter was actually a woman who was found dead from a self-inflicted gunshot wound.
Wow, women don't usually do that kind of stuff.
The Trump administration reportedly has withdrawn all federalized National
Wow.
Guard troops from cities across the U.S. The deployments
That
in
sucks.
Los Angeles, Chicago, and Portland, as well as Oregon, face court
British Columbia, nice area of Canada. I like Canada, especially skiing. I've never skied the Alps or anything like that, but out west, beautiful. Whistler Blackcomb. Yeah, Alberta, a lot of ski areas. Fernie, Red Mountain, Sunrise.
Thank you. Christina Bartonello is coming up next. Even more moves. Joe's got 2 new trades for you as well. Well, how about Robinhood? We will discuss how they are playing that route today. There are shares down almost 12% following earnings. We're back after this.
Let's see. Riot, IBIT recovering. IBIT recovering. All right. Okay, Bitcoin. Yeah, I don't like Bitcoin. IBIT is recovering, but ooh. Let's see. Apple though. Apple looking good. Apple. Where is my? There we are. Apple. Apple. High of the day. Apple. AAPU. Shares. Apple. All right, we're trying to get above 280 right here. Apple.
All right, so let's do more moves. So you're done with Netflix, Joe.
Done with Netflix. I'm saving everyone in America that has a Netflix position. Now it can finally go up. I'm long the stock from May of 2024 at $66. You don't want to see what was a really great winning trade turn ultimately into a losing trade. I've had enough. It was liquidated from the ETF in the last rebalance. I said goodbye to today to raise some capital to do some.
And you don't think? I mean, sort of everybody.
Oh, it's gonna bounce.
Everybody knows why it's down.
Yeah, it's going to bounce. But what am I supposed to do? I'm long at 66. Pull that back if you can 6 months, the chart, please. Look at the decline. I don't think you can sit there and just watch us continue to go lower.
You're just
and lower.
afraid of a round trip or worse.
Well, I don't want to sit here and say I bought it at
MD may rest in 10
66
seconds.
and I sold it at 64 after it went up to 115. That's just a terrible way to manage a position.
Well, plus it can hang out down here for quite a while.
Right. I don't know. Tomorrow it's probably going to move higher.
Apple. Just got rejected.
I think there's a little bit of a difference in the way you guys see the trading world at times. Or Joe's a lot more tactical, I think, than you. Who tends to be a little more longer term.
Yeah,
right. I mean, what do you think about his move? How do you think about it in your own mind?
I love this move because it just makes me feel better about my move.
What's your move? Tell me
that I
honestly.
still like it because I love how emotional he is about selling it. That means we're close to the bottom. I mean, to me,
no, it's not emotional. It's just at a certain point you just have.
You
to
have remorse,
manage
though. I
position.
like that. I like that you have remorse and some humility.
Is it emotional though? The stock's down 35% in 6 months.
No, there's some fundamental operational issues with respect to what's going on with the Warner Brothers situation. That's why we still own Warner Brothers, by the way, because of the silliness that's going on with this bid. But number two, this is the best streamer, so I want to own the best company. And I look out at a position for 12 to 18 months. Now, if we see further deceleration and we see some really bad operational moves aside from this merger, then we'll revisit it. But I want to own this stock.
Okay.
You know what I want? I want to own this stock, but I don't because I still worry. This is another one where like the valuation's finally coming in to where maybe we could buy it. But then this is one where I'm like, I have no idea how AI disrupts this business.
Fair. You could also criticize me, the other aspect of it, for holding on and selling it at 80. Probably should have sold it at 95.
Okay, Apple.
For sure.
Why not 100? Take it 150.
But you were thinking out too, right? Because you're thinking about the mega sector.
I'm thinking exactly what Scott said. Everyone knows at some point the stock's going to pop once you have the deals
So
done.
the other thing you bought more is the OIH. So we'll talk about what energy doing. I don't want to get into that. It's just buying more of it. Robinhood, we got
Apple.
Let's show the stock again. markets go lower today from Deutsche, Barclays, and JPM too. So 113 is the lowest of those three
And
at
see,
JP Morgan.
So this report obviously was not diversified enough. It was too reliant on crypto. We talked about that yesterday. Crypto revenue was down 38%. We know the company is diversifying its model away from that. There also wasn't much improvement in terms of what you want to see for debt to equity, return on equity, balance sheet type of orientation.
Okay.
The growth is moderating for sure.
Micron's still pushing. Chevron's okay, up on the day. S&P still needs to get through this level. Got time. We got 3 hours left. So off the back of non-farm payrolls being better, twice what was expected. Twice. Instead of coming in at 65,000 jobs added, they added 130,000. They being the U.S. So they're adding to.
If Bitcoin rallies back, let's say if Bitcoin was at 80,
Okay.
would Robinhood look like it does today? No. It's that correlated. Unfortunately, it is. I wish it was.
Okay, we need to get some more. Need to get going here. Okay. All right. Okay, so let's see if we can break above this level. Okay, that's the last high right there. Let's see if we can do it. All right, more stops up here probably. MACD is turned up. Notice MACD has turned up. Okay, watch for MACD cross here. MACD cross. Okay. MACD cross back at 12:15. Looking for a follow through now.
And if you really want to melt your brain, you can issue perpetual bonds called consols starting in 1751 with no maturity date ever. So here's the thing to really wrap your head around. It might not come right away.
There are ultra rare 100-year bonds out there. Coca-Cola, Motorola, issued in 1997. Motorola expires in 20. Yeah. The Austrian 100-year bond price yields almost 4%. Okay, S&P. All right, Apple's still dealing with. All right, Apple has this 280 strike. Okay.
Well, our original bond that's only paying 5%, while these others are paying 10%, they don't look that attractive. So the price of the bond
Apple.
is cut until buyers feel like they're getting a good deal. A rough rule of thumb is if yields double, then the price of the bond can actually get roughly cut in half. It's not perfectly like that, but that's a very good starting point. Okay, what do we look out for next when it comes to big tech and big bond offerings? First, we want to watch demand on similar long-term tech bond offerings. Are these deals getting upsized or are they getting cut? Then there's pricing. Is the extra yield that investors are demanding beyond safe government bonds, is that shrinking or is it growing? And then there's a narrative. Does AI stay in build-out mode or do we start seeing AI turn into real revenue? That answer can determine who wins in both the stock and bond markets. And remember that the pick and shovels trade of the dot-com boom, which was a huge build-out of fiber optics, those cash-rich giants didn't.
Okay, I'm going to take a 2-minute break. I'll be right back.
Share in the long, deep downside. Something to think about with Alphabet.
Senior markets commentator, overtime co-anchor Mike Santoli joining us now for his midday word. What do you think about this market?
You know, Scott, it's a 50-50 market most days. I mean, obviously today we couldn't hold the rally, sort of the preliminary celebration of the jobs number. Yields up. Doesn't seem like we're really rethinking the Fed path. I don't think this is a market that needs imminent or deep Fed rate cuts for the bull case to work out. But I do think the market liked it when the labor market was understating or seemed to be understating the strength of the underlying economy. The reverse is not as helpful in terms of the Fed outlook. But, thanks for Apple, because right now the software sell-off is back on. Apple's soaking up some of that weakness. We'll see if that can continue. We're wearing out this patch of the field on the S&P, I have to say.
Yeah, I mean, Nvidia's up almost 2%.
Yeah.
How about Micron? I mean, what continues to happen with these memory names, it's just going to remain this way, you think? Big moves up, some moves down, bigger moves up again?
We have these very narrow lanes of high conviction, and that's one of them. Obviously, the memory trade. Technically, they got crazy overdone on the upside, bit of a gut check. I don't know how to handicap how it goes from here, except they're sold out for years. If you believe all the reports.
Well, and prices continue to go up. All right, I'll see you in a little bit later on this afternoon. Yeah. That's Mike Santoli. We'll do the setup next.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check on where markets stand as we get closer to the bottom of this lunch hour on Wall Street. We are looking at the S&P 500 ticking a little bit higher again. It is better by a little bit more than 0.2%. You've got the Dow just above the flat line. NASDAQ 100 has a gain of about 1/3 of a percent. Russell 2000 still lower, off by a little bit more than 0.5%. Live Materials set to release its quarterly report card after the bell today. The chip equipment maker is expected to report earnings of $2.19 per share on an adjusted basis.
All right, I'm going to make some lunch, folks. Give me about 10 minutes. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, February the 11th, lunchtime. Just taking a little break.
All right, Doris. So, how were you looking at this one, especially in front of earnings? It's had a strong run. What are the expectations?
Actually, you know what? I'll wait until halftime report is done. I'll take a break shortly. I'm going to wait till halftime report is done. Maybe we get a little goose higher S&P. All right, I'll wait until lunch. I'll wait until halftime report's done. Looks like Apple wants to push a bit higher. So does the S&P 500. Trying to break out above these levels here. Okay, looking pretty good so far, S&P. All right, we're above VWAP, so that's positive. Man, if we could turn this into a bullish candle today, that'd be so awesome for the bulls. Remember, most of my positions are longs. I have a small short or VIX calls for March 20s. I still have some of those left. Don't have anything else. The only reason why I'm not getting very heavy on the hedges is because of what the New York Stock Exchange is saying, right? The New York Stock Exchange, this doesn't say the markets are going to die. What's happening intraday, I'm sure has a lot to do with the heavyweights.
Jenny, you own that?
We do. So
Like Microsoft lower, Netflix lower, Snowflake, Amazon, Google. So those are weighing down the S&P. The Qs, a lot of you looking for downside. Money Magic talking about 660? No, 600. 600s. All right, so there's a lot of people playing. Understand what money's telling you. Money's telling you that he sees, I assume you're a he. I don't want to guess your gender. There we go with the S&P. But he's seeing a lot of puts down here. Is that correct, Money? I don't want to, I don't know. Everybody's so woke these days. IRE, yeah, pulled back, did it? Okay. Yeah, it's not following through yet. Still potential double bottom. Hasn't stopped out yet, David. Yep.
This is like the antithesis of an emerging company. They're just in the hardware space. And as the data centers build out, like, yeah, they'll have a part in that. But what if that doesn't move as fast as I don't know, stock market expect it to? Like, what if it moves a little slowly? And you know what? Their earnings growth
Doesn't feel like
only
the
8%.
data center, like the what if around that question just seems the probability of your what if is slim.
Yeah.
Isn't that the game we play?
Of it going a little more slowly, you mean?
Yeah.
Maybe. But why is it only growing at 9%? That's perfectly respectable. I don't want people to start treating this stock like and get it caught up.
Yeah, the markets, S&P in a range.
Only to fall back down. So
But it never really trades like that.
Nor do I think it should, which is my only point. Like, I don't want it to get caught up in that. It should.
Okay. McDonald's tonight as well, Belsky.
Yeah, it benefits from what Jenny's been talking about in terms of the value. McDonald's is one of the largest companies in the Russell 1000 value consumer discretionary sector. This is a stock that is steady Eddie, much similarly to Cisco. It's benefiting from the move into value, Scott, and we continue to believe that this stock,
Okay,
from a
S&P.
cash perspective, is going to be very strong.
All right, we'll do finals next.
If we see more geopolitical risk with gold, or frankly looking at things like AI and the build out of data centers, which is we're going to require a lot of silver and copper.
And you guys, by the way, speaking of AI, you guys do have a big AI ETF called VAI.
Okay, profit taking now.
Over $8 billion in assets. I was just looking at the price we're seeing this year, and it is up about 4%. So, you know, there is this implication, like, it's not like people are abandoning this trade
And see-
wholesale. What have you been seeing in terms of activity there?
No, not at all. I mean, we've seen tremendous interest in the space. We continue to see inflows into BAI as well as ARDI, which is our index-based ETF for the AI space. The answer is it's more nuanced. We're seeing some parts of the market struggle, but frankly, a lot of those names in the SaaS space are not owned by AI funds. You know, we've been saying for a while.
Okay, Apple's still trading at the highs. Apple, S&P just got these levels up here. Are they rolling? Are they rolling some of these stops up? Possibly. VWAP. VWAP. If we can hold on to this and make a new high, that would be awesome. Man, I would love to see this turn into a bullish candle by the end of the day. Okay, which would mean a close above this area right in here. Okay, if we can get above that, that would be freaking awesome. Don't see it happening, but just I'm just visualizing. Just visualizing at this point. S&P is still in the range. In order for us to get out of a range and start trending, we need to get above 7,000, obviously. If we get above 7,000, we could consider potentially starting to trend. What would be a catalyst for that? I don't think anybody's real. I mean, there's 75% of investors out there are anticipating no Fed rate cut. So that's, you know, neither here nor there. I guess if we get it, I don't know, speculating about a rate cut. Okay. But earnings, if earnings continue to be as good as they've been, that should help. All right, S&P pulling back the VWAP now. S&P's at the Q's, Apple's at the high of the day. Until the S&P gets out of this range that it's in, it's really going to be very hard for us to get anything other than what we've been dealing with over the last several weeks, which is chop. You know, you hit the low, you hit the high, you close somewhere inside of today's range, but we don't make any progress. We don't break out. So if you've got longer time horizon, adjust. Well, if you don't have longer time horizon, you need to adjust, because we're not showing any signs of getting above 7,000, which means you're going to be constantly frustrated for longer term swings. You have to focus on what is actually working, like XLB, materials, keep going, SCHD, SPHD. These are continuing to ramp higher. Okay, so these continue higher. Okay, we've been in this since 2014. So like I haven't been talking about this before. SPHD, we've been in this since 2014. Okay, so back in here, 2014, we started getting long. That was trading at $20. So NAV was 20 bucks. Now we're up here at 52, so more than a double. Okay, more than a double. And if you had any TRBCX like we had, you're up over 175%. You're probably taking some off. Right now, I wouldn't be doing anything. You're up 175% since the 2022, the end of the bear market, 2022. Okay, so 175% is the gain, 176 gain to date. Okay, we're off a little bit. Why did it not keep this? Let's see. All right, let's go 15, 15. Okay, let me save this. Okay, so TRBCX, it's hit a low from the high, about 10% off the high, 9%. So we've got a drag on the markets. Okay, we just pulled back into below VWAP, right? We just pulled back below VWAP. More frustrating price action. So if you're throwing money at the S&P 500, you don't have the best odds. You don't have the best odds of a trending hedge flow. This is basically a sine wave, sideways chop. We got some support down below. We bounced off of that. We eased up a little bit. So maybe that's the end of the profits for today. Hard to say. Let's see what they got coming in. Going to do final trades, and then I'll take a 10-minute break for lunch. Hope everyone's having a good day. Just temper your enthusiasm.
It's not too late to sign up for the next CNBC Pro Live event, Wealth for Women. It's happening May 28th at the NASDAQ market site in New York. And our own Jenny Harrington, Carrie Firestone will be there. Told you about Stephanie Link yesterday. You can scan the QR code or visit cnbcevents.com/Wealth for Women. Join me today, 3 o'clock Eastern, closing bell. Tom Lee will be with me. Nancy Davis, she hasn't been on in a bit, so I look forward to catching up with her. She's always good on vol, volatility, just the markets in general.
We really need to see a bid in Microsoft, push that back up. NVIDIA got a nice bid, shorts covered already earlier this morning. Around 10 o'clock, NVIDIA shorts covered. We still don't have shorts covering markedly Microsoft. Tesla also off the high of the day. Had a nice pop this morning, Tesla. True to form, drops back down. Makes people question their thesis. Right now, I'm neutral on Tesla.
MSTZ.
What do you say? 264 on Apple? It's already at 280. Lost my train of thought here. I mean, look at how many times we had these little tiny ranges, 40 points plus or minus, 40, 50 points plus or minus today, yesterday, day before, We had a big candle on Friday. That was a nice follow through. We did push back above. So don't forget, Monday, we had a nice follow through, Friday through Monday. Unfortunately, and we're not just breaking out. No one's expecting a move above 7,000 until after probably OPEX Friday. We got over 30 days to go for the Fed rate decision. Yeah, so we're just chopping people up here. You got to focus on what's actually working. Okay, so if you're buying, like say XLB, XLE, if you're buying in these sectors, they're working still. Okay, they continue to push XLE. Financials pull back more again today. Wells Fargo, JP Morgan. Okay, those are pulling back to the 50-day. So brief move above the 50-day, got back below it now. Industrials at the highs, Caterpillar, stocks like Caterpillar, continuation. Some of the ETFs like SPHD, SCHD, these are all flying. DIV, another dividend ETF, pushing higher. Okay, so there are places to put money. I just wouldn't do much of anything right now. I have SCHD, SPHD, TRBCX, TRBCX, RGA, FX, RGA. This is RGA. I have some funds in here, RGA, FX. Okay, that did dip a little bit. I did reduce my exposure in these. RGA, FX, and TRBCX. I did reduce my exposure because we're below the 20 EMA, 10 EMA rather. So the idea is that during the midterms, especially the 2018 midterms where Democrats went crazy trying to get people into Congress, they succeeded in taking over the House. The markets dipped from September into the November election about 10%, bounced a little bit, and then rolled over again, dropping a total of 20% during the last midterm election. So that's possible again. One of the reasons why I'm reducing my exposure, it's still very early. We got the spring and the summer. Plenty of things can happen. But we made so much profit since 2022. I don't want to give up too much. I don't know what's going to happen, but we're definitely looking for more catalysts to help us continue to move higher. The trend between bear market and the next bear market tends to be what, 35 to 60 months. All right. So we're at what, 30, 36. So we could still see more upside. All right, that said, I'm just going to go to hedge flows here, watch the hedge flows. I'm going to take a lunch break, and I'll be back. Give me 10 minutes.
Before Herbert Bernanke, who took office in 2006, he had a pretty long runway before the global financial crisis hit him. And Alan Greenspan was before him.
KBCGP.
In August of 87. And those of us with long memories from that portfolio insurance sell-off. Crash of 87. So let me just say that doesn't, it's not exactly the most robust sample size that I just gave you, 3 out of 4, but it's something to put in the back of your mind. Another quick thought would be it's a midterm election year. We've had 2 down years in the last 10. Care to guess when they were? You mentioned one of them, 2018. The other one was 2022. What do they have in common? Midterm election years. We had obviously a big, sort of bear market moves in 2020, obviously, last year with the Liberation Day. But in terms of lasting down years, those were the 2. So those, and I do think, and by the way, coincident with that is my price target for my yield target for the 10 years about 445, because I do think there are some incipient inflation pressures out there, particularly if, we start to really get into a weaker dollar scenario, where we import a lot of, we're net importers of goods. That's good for a weaker dollar is good for
QNCX.
earnings translations, but not necessarily for an inflation fighting Fed. So these are the things that make me cautious, and so I don't want to be perceived as like this uber bear, rabid bear. This isn't Twitter.
But there's some things going on in the background.
MSTZ.
If you want to get to, because all these things are leading to our keyword of the day, and that is volatility. And here's the simple version. It's not up or down. It's how wild are the swings. And there are two ways to talk about it. First, there's realized volatility.
QNCX.
History that we're just discussing. How things in the stock actually swing over time. Then there's
RGTZ.
implied volatility. That's the future. It's the market's best guess at future swings, and you can see it in options prices. If implied volatility is low, the market's saying we expect
MSTZ.
quiet rise, and if it's high, it's saying buckle up. And that's why this matters. Sometimes the market looks calm right before a big event, and sometimes it's pricing in a storm. So, Steve, I know that you're very passionate about volatility, so tell us about it.
Yeah, you hit upon the characteristics very, very well, Brooke. I think, we talk about, a lot of times, we talk about the past volatilities, historical volatility.
FGL may resume
I sort
in
of
less
like
than a
to break
minute.
it into three ways. The historical volatility is what we saw. The implied volatility is, as you mentioned, what's predicted. Realized volatility is sort of what happened to you over your holding period in the options, like what actually occurred. So it's sort of a subset. It goes hand in hand with historical volatility, but I use the terms a little bit differently.
Like, what have you been through almost?
Yeah, it's the historical volatility is usually the starting point for implied volatility. We've all heard the phrase "and predicts the future." Well, we've all heard that past performance is no guarantee of future results, but it's a starting point. As we go into earnings, and we're taking this ahead of Microsoft and then Meta earnings, and the Fed,
FGL may rise in 10 seconds.
there's a lot of yes, and those are what I would call known unknowns. So the market does price those in. So you might say that on any given day, the stock market should move, call it 0.5% up and down. It just I'm picking a number a little bit at random. But with Fed Day, the market will price in excessive volatility. So coming in, when I ran the numbers yesterday, they were predicting about a 0.8% move today. So you should expect
MSTZ.
that. We've got an FOMC meeting. I don't think we're not seeing really high implied volatilities out of it, because the market, I think, is rightfully anticipating no move. We'll know if this is true later on.
NCI.
Yeah.
But or when you think about for corporate earnings, we know that, like, on any given day, stock XYZ might move 1.5%, and I like to think of volatility in terms of high low, not close to close. Because if you're an active trader, that's what matters. That's what intraday swings. Exactly, because if I'm actively hedging, meaning
MSTZ.
both sides, did I pay the right amount for this volatility? If I can,
NCI.
if it's unchanged close to close, it looks like I lost money. If it had a 1.5% intraday move and I was paying 1% intraday volatility for it, I was, in theory, able to buy low, sell high along that option and hedge around it. So these are all important considerations, and especially with earnings, we can look back and say, okay, over history, this stock has moved 5% after earnings. So we're going to price in, call it a 5%.
RGTZ.
NCI.
And we got to pivot now to
MSTZ.
today's market show and tell, and we're going to stick with volatility. We're breaking down new sub-weekly options and some of the world's biggest tickers, the Mag 7, which includes NVIDIA, Apple, and Tesla. We're going to also include Broadcom plus XLF, that's a financial sector spider ETF. And for decades, we've had monthly options that expire on the third Friday of each month. A few years ago, we started getting weekly options in select markets. That's every Friday. And right now, there are weekly options sub-weekly options on individual stocks that expire each
RGTZ.
Friday. And now we're adding Mondays and Wednesdays. So what does this mean for traders here? We got more action, but sometimes the options activity also spills into the regular trading. So could it potentially affect all of us? Yes, and what you just outlined, Jared, very, very nicely, is what I like to refer to as the compression of the expiration cycles. It's a fancy way of saying we've just been getting shorter and shorter. So I think the first options that were listed in 1973 were quarterly expirations, and then there was that's too far apart. That's too monthly. I believe weeklies came on the scene in 2005. I believe. No, they came in. I forget the exact date, so I don't have it in front of me. But then we added Mondays and Wednesdays in selected ETFs and indices. Nobody, or in the 2000s, somebody really cared. It was 2015. Then in 2022, they added on major indices and key big cap ETFs, so spiders, Qs, etc. They filled it in. They added Tuesdays and then Thursdays to the mix. So we then got daily expiration. You've heard and used the term zero DTE, meaning they expire every day. There's 0 days to expiration. It's a little bit of a misnomer because if you're trading an option that's 3 days out, it's not actually 0 dated, but regardless. And so this has been a trend. And what's going on is the public has loved this. Option volumes have increased, 20 or 25% a year as a result of this. At this point, you can argue that about 50% of the options volume is in contracts that expire, I think, with 8 days or less, meaning that includes the weeklies. So as an industry that gets paid by volume, it's inevitable that the industry was going to look to add these, and NASDAQ took the lead in adding them, but once one exchange gets the approval to do it, they all do it. And so now we have Mondays and Wednesdays. The rule is, I know you're itching for it, let me just finish this while I remember, is I believe they have to have like net market cap of 750 billion or more, and there has to be a certain amount of option volume that trades in them, which limits it basically to the Mag 7 plus Broadcom plus XLF. So it's a very limited list. They also are not listing them on scheduled earnings dates, which gets into the risks that we're going to talk about.
And I just want to understand exactly the relationship between this increased availability of options versus the volatility that we're seeing in the market. How should investors be thinking about this?
In theory, the volatility is determined exogenously by the stock itself. In reality, it's thought that it could make the swings bigger, but it really hasn't. I mean, we haven't seen the market get more volatile since since we've seen daily expirations in major indices. They really, although they were listed in 2022, the coming out party for me was the February FOMC meeting of 2023. Remember, 2022 when they came out was a bear market. It's not a good time to list their products, but over the relatively short period of existence, they really have, when you think about it, not been a very highly volatile environment, right? I mean, so, and I think a lot of the strategies, there was this perception originally that retail would be buying these options and the pros would be selling. Retail's got a lot smarter, and they understand that very short-term options have the lowest prices, which I think was originally, because they have the shortest time to expiration. That was very appealing, but they also decay the fastest. So one of my comments there is that those daily expiring options are both the cheapest and the most expensive options you can buy, because they have the lowest prices. But I will guarantee you that any extrinsic value, anything above and beyond the in the money value of the option, will be gone by the end of the day.
Oh boy.
So and because the decay, I'm sorry, I don't want to get too technical. Decay is nonlinear. So as you approach expiration, it decays faster. So people, sophisticated individual investors have caught on to the fact that there are relatively risk-managed ways to play these daily expiring options, particularly, and they've really gravitated toward index options because they are cash settled, which the new equity options are not, which is where some of the incremental risks come in.
Let's see, we do need to do a quick short break, but coming up, we're talking metal mania in silver and gold and a runway battle that gets to the heart of what actually drives markets. Stay tuned.
Hey, you. Yeah, you on your phone. What are you waiting for? Don't miss the poker action. Your seat is waiting.
Take your seat on the WSOP free-to-play app. Enjoy a huge variety of poker games. Compete in tournaments and win prizes. Play now and get 1 million free chips.
Join the biggest community of bingo lovers. I love the animations. I love the color. Getting to meet so many different people from different parts of the world. I love the seasonal rooms, especially table critters. This is the community. Going to different islands and getting to talk to friends when you're done. And it's just like over. I've made friends everywhere. Tons of friends. New people that I meet. Home friendships from all over. Real people playing bingo games.
Jackpot wins can happen anywhere. At work, in the coffee shop, on the go, or from the couch. Get in on the action at Double Down Casino and join a community of players winning big from all around the world. Download now and start the fun. They're faster than us. What's that? Over there. We need to bestow power quick.
Greetings. My name is Lyra.
What are you?
Do you
Get those torpedoes in the air.
This episode is brought to you by the number 210. That's the record high in silver going back to 1980, when the Hunt brothers famously cornered the silver market. But wait, you say, isn't silver trading at a record right now, just north of $110? Well, we're adjusting for price inflation, which can oftentimes give you the upside target in a fast-moving market when it seems like the market has never traded at these levels before. And here's how we got to the 210 price level. We started with $50.35 intraday high that silver hit in January 1980. And when we multiplied it by 4.2, which is how much prices have increased over the last 4.5 decades, that's right, everything's like 4 times as expensive today as it was back then. So Steve, when you think about it, the run-up that we've seen in silver and we've seen in gold for that matter, what do you make of all of this when you compare it to what we previously were seeing recognized in?
What we're seeing now in silver is almost kind of manic.
Mania.
And I've literally had people ask me, is silver a meme stock? My short answer is no, because the meme stock, there was certainly an us versus them mentality in the meme stock days. But what we've seen is aggressive traders become very willing to not only buy dips, but to chase rallies. And this has been one hell of a rally. The problem, as you know, Jared, is parabolic moves of the type we're seeing in silver are incredibly unstable. And that's the part that makes it very difficult to pick tops and bottoms, because you can go up 7% one day and then you can find that you're down 15% the next.
And now, what do you make of the run-up that we also saw in Bitcoin now falling behind the highs that we saw in the fall? What do you make of that run-up?
Bitcoin is now for normies. So what happened was, in the run-up to the election and post-election, there was understandably a move into crypto, because that was the administration signaling that this was going to be a crypto-friendly administration, which was understandable. Around the same time, it became very easy for normies to invest in crypto, via ETFs and other means, which were, before you pretty much had to be really crypto dedicated to get into it. Now then it became very easy. The problem is, it hit me late last year when I spoke at a crypto conference in Japan, smallish conference. And what happened was, I looked around the room and I thought I was going to be the oldest guy in the room, and I'm not. I'm around. There's a lot of other people my age, and these are people who were in crypto because it was hot. They were not your original crypto natives. And what it also meant, though, was when crypto stopped performing, it was very easy for them to move into other non-dollar decorrelating type of assets like silver and gold. And so I think a lot of the luster of crypto moved into more historic hedges. Interestingly, while Bitcoin has really underperformed gold over the last year, if you took the 2-year period from the end of 23 to the end of 25, the performance between gold and Bitcoin is almost identical. In gold has since taken off as the year began. And that's all about the time period. So yeah. Now we get a market state on the classic Hollywood gab show staple. We call it Who Worked Better. And today we're asking a simple market question: do investors keep paying for the story, or do they start paying only for the receipts? Narrative is the promise, and the theme numbers are the earnings and the proof. So narrative versus numbers. On the left catwalk, we got narrative. This one is sheer future talk. Dramatic statement tape, near shiny sunglasses, and big, bold energy. It's a trade that runs on story before the results show up. On the other catwalk, we got numbers. Clean tailored and quietly tough. A perfectly tailored matte fabric, sharp lines, no flash, just earnings, margin, guidance, and show. So Steve, when you look at 2026, and this is a key question, which investing focus comes out ahead at the end of the year? Is it going to be the narrative or the numbers? Well, I'm going to do my best, Derek Zoolander, fashion vigorous. The way I look at it is, EPS is an EPS beat is a necessary but not a sufficient condition for a post-earnings rally. The reason being, it is looking a little bit backwards. It tells you the recent past and to a certain extent the present. Investing is looking forward. And so this is why you see it. We've seen it countless times, and again, we're ahead of some big earnings, we're in the midst of earnings season. The stocks are reacting much more not to what they say about the prior quarter, but about what they say in future quarters.
What their guidance is?
Guidance is key. Guidance is the good guidance is the necessary. It's kind of a narrative rather than numbers. Absolutely.
And so when you think about it, what you should be hearing for should investors start to focus on like keywords of their guidance is and how maybe it compares with these expectations?
It's more important. I mean, you can't just throw away the EPS. I look at a company like Intel, which is sort of a poster child for putting their expectations into earnings and then as a pop go afterwards. They ran up like 10-15% ahead of earnings for no apparent reason. Then they got whacked because they missed both their EPS and their guidance was kind of lackluster. So you got to take them in some ways together. But if I have to pick and choose, I'm going to focus on the guidance.
And see.
We see that today. Let's say the Starbucks, which is having a nice run. Its EPS wasn't good, but they say good things about guidance going forward. And the stock was higher last time.
Yeah.
Steve, before we let you go, I want to circle back to the options market because you said something in your notes which I hadn't thought about. I don't trade options regularly, but on expiration,
Big chop, 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 chop.
options in the U.S. up to 5:30 p.m. and that's after the market closed at 4 p.m. and that takes a lot of traders by surprise sometimes. So just speak quickly to us about that dynamic. This is the risk of the sub-monthly options. I registered this with NASDAQ when they were listed and others interested parties. What happens is if you own an option, you have the ability to
Microsoft trying to turn apples at the high of the day.
regardless of whether it's in the money or out of the money at the time. So there's an official 4 o'clock close. The Options Clearing Corporation,
And see.
1 penny in the money will exercise puts and calls based on that. Will lapse based on that. But if you're the holder,
Trying to turn back up.
you have the right to say, okay, this thing closed at $99.98. So my call is not
ACHC.
But there's good news on this stock after the close. It's trading around 101. I'm going to exercise. I have to submit special exercise instructions to my broker, but I'm going to exercise that call. And so whoever bought the might be, not selling shares.
Okay. Very I know it's very boring. The market's back and forth.
It's trading at $96 in the aftermarket. That's problematic for someone who's short put because I'm going to want to. If I didn't think I was going to get exercised on that put, I'm going to exercise it because it's now effectively $4 in the money. They do mitigate around that by not listing options on posted expiration dates. For example, next week Google does not have Alphabet does not have options expiring on Wednesday because that's their posted expiration date. But what it means is if you are particularly short these options, but if you're long too, you need to be paying attention.
Okay.
After the close, and also to what your broker allows you to exercise. Interactive brokers, we allow it up to about 525. But other brokers
Constellation Energy. Looking for a follow through here. Constellation. Okay. Okay, what's Oracle doing? Oracle. Okay, that dipped today after being up 2 days. Oracle. It's going to take a while for Oracle to get out of this mess. I would say next few weeks, maybe we're having a chance at the 50-day. Next couple of months, maybe a chance to move back to the 200-day because there's a lot of institutions starting to look at this. Starting being the operative word. So we'll be looking for more evidence, more volume. Tech, XLK, off a little bit today, but the dip getting bought. So if we can get back above the 50-day, that would be a good start. Semiconductors, same thing. Dipped this morning and popped. So semiconductors look the best right now. Semis, dip, got bought. SMH, semiconductors, dip got bought. That's a good sign. Apple, like to see Apple above 280. All right, so the dealers are defending 280. Apple. Microsoft turning the corner, maybe. Microsoft coming off the low. Okay, it's still, I would say Microsoft, I'm going to curb my expectations, and what I would be looking for is something like this. I'd be looking for a base in this area. So we could hit the low again. Okay, if this starts to break to the upside, then we got our answer. If it breaks back down, looking for, that's a possibility. But definitely thinking that this is just going to base here for a while. Okay. So in IGV, that also pulled back, IGV. So we need to see this above the 60-minute 20 MA. Not there yet, but it could get back above the 20 MA, could resume this upward sloping trend. Okay, Microsoft IGV. People still talking about AI replacing coders. I find it hard to believe, at least not for a few years, because you need coders to check what ChatGPT or whatever AI is returning, I would think. Because I've tried using AI to create simple indicators, and it's not the easiest thing unless you know how to code. I mean, you need to know what you're looking at. So I don't know. I think this is overblown. The evidence will come if they keep selling puts down below.
JZXN may resume in less than a minute.
What are we doing?
GNRC. ACHC. MNDY.
Okay, so we got a lot of work to do. And the biggest issue I have is that, let's look at the New York Stock Exchange. New York Stock Exchange, that's still trending. But if you look at the SPY and the S&P, we have this sideways range that just frustrating everyone. I'm frustrated with it. I don't want to sit here. I want a trend, whether it's a trend down or a trend up.
Out in this market at yfpodcast@yahooinc.com, and we'll try to answer maybe some of them on the show. Now let's jump to the big tape.
GNRC.
Let's look at the Qs as well. The Qs. Okay, this is also a big range Okay, every time we start to pop up, it looks like we get knocked right back down. Okay, so lots going on here. MACD has crossed up. Volume was pretty good there for the last 20 minutes and then 10 minutes. And now we're starting to look for next test of VWAP.
GNRC.
Allocate new money to the market. Let's be honest. There are a slew of headlines that are top of mind right now. Most of them geopolitical. Think Venezuela, Cuba, Iran, etc. It's about independence. It's about earnings that started in early January, and it's about the tech trade. And are we in a bubble or not? It's about oil.
Yeah, Grover, I'm thinking the same thing. Yeah, you need to have experience and understand what's being needed. Yeah.
GNRC.
In the end, when confidence gets questioned, markets start pricing in risk premium.
Yeah, I agree with you 100%. Okay, problem is people are getting frustrated and they're making stupid trades. I won't say stupid really, but you know, Amazon, for example, Amazon has been down here, starting to reverse. You buy up here, run the risk of running into resistance right overhead, getting stopped out. Needs a trend. Needs a trend. Either that or you need a big base breakout. We got two gaps overhead. A lot of potential on Amazon. Nvidia's starting to move off the high now. Nvidia's coming off the high. Apple's consolidating. Apple needs to get above 280 and stay up there. If it gets above 280, then we know what the dealers have to do. The dealer has to buy shares to hedge their short positions at 280. You buy the calls, they sell them to you. So they're short 280, you're long 280. They have an incentive to keep it down here below 280. How they do it, I don't know. Do they have algos that they program?
Or more dovish pricing, boosting volatility. And volatility isn't just technical, it's behavior. With gold surging and trading safety, you see the market risk appetite bitten by the headlines, not the fundamentals alone. This big take blends monetary policy uncertainty with real market signals and makes a compelling opening conversation on about how not just price action, but investor psychology and strategic allocation decisions. Let's bring in Mark Tepper, the founder and CEO of Strategic Wealth Partners, a high-performance wealth management firm guiding entrepreneurs.
So if you're trading right now, focus on the top 10, top 15 on the NASDAQ 100, like Global Foundries, for example. Global Foundries. Let's see. I didn't mean to type that in the room there. Okay, let me delete that. Global Foundries, GFS. Okay, that's up big on the day, but you can't chase it up here. Robinhood, we're looking for Robinhood to catch a bid. Okay, Robinhood's coming back. Okay, we took the puts off. I took them off too early. Could have made a lot more money. Probably about another $50 per contract. Because I sold right near the open over here. It dropped. So Robinhood's trying to regain the VWAP. Robinhood. I would wait about 8 days for Robinhood if you're thinking about going long. I already have 115, 120 call spreads for July, so we got plenty of time there. What I did yesterday before earnings to insulate my upside is I took what essentially was a long iron condor. So I was long puts and I was long calls, and I bought wings on either side to make it cheaper. The call side I've had for a couple of weeks now, I guess. No, it was since last week. Last week is when we bought the calls. What was it, Thursday, I believe? Maybe it was Friday. I don't know. But yeah, that insulated that, and now we're starting to retrace. I got a feeling cooler heads will prevail, and we'll probably see some people come in and buy. We need to get above 80 for those of you who are short this with the credit spread. Okay, Robinhood.
Let me ask you a question. Just jump off track in 1 minute. Do you not think that there's any risk in the first half of the year of a midterm election drama? All the new, the 435 seats are up for grabs in the House. Yeah.
Okay, Robinhood looking good here. Robinhood. Watch Robinhood.
Jay-Z exit.
I think it starts to whittle itself down by the time we get into the summer, and you kind of see what the candidates are. So I'm in the camp that I think the first half of the year might end up getting a little bit volatile because of the
MB may resume in less than a minute.
Look, I mean, you've probably seen similar research, but when you go back and you look at the 4-year presidential cycle, year 2 is always the most volatile, and that's 2026. That's where we're at. A typical drawdown in years 1, 3, and 4 is 12%. In a midterm year, it's 19%, and that's specifically due to everything you just mentioned. There's concern over who's going to be the next governor.
Okay, Robinhood's starting to push now. Okay, it would be nice to see a big bullish clump of volume coming in. Almost want to sell put credits down here now. We could do that. I could do that. Let me see what that looks like. Hood. Okay, let me see what it looks like. Hood right here. Scanner Hood. HOOD. Okay, so puts are getting expensive, or were expensive. So we could still see something there. Robinhood. Buy call spreads. All right, I already have call spreads, so I could sell some puts here. Robinhood. What if I sell puts same July expiration? 60. 55s have $4. Sell vertical. 55.50.
Jay-Z exit.
We see the S&P pull back 15, 18, 20%. Now it's going to get uncomfortable. It's going to get, you're not going to feel good about it. But as long as you remain kind of in a well-diversified, you know what you own.
Okay, I sold 55.50 for July put credits for $1.20.
Without a doubt. And actually, if you go back through history and you look at the time it takes during any fair market for the market to peak, hit its trough, and then get back to its break-even point, it's on average like 1.5 years. Now, if it's a financial crisis,
JLHL may resume in less than a minute.
recession, or even the tech bubble before that, which I consider a financial crisis because you had, revenue-less companies like Pets.com going public. Those take longer to recover from. Those are like 4 years. But when it's a policy-influenced bear market, so you go back to Liberation Day in April.
Okay, IBIT's higher. IBIT. Okay, I did add IBIT on the low. IBIT on the move. So that's going here. IBIT continues to move higher. Let's see. Let me post what I did here. I'll post what I did on the credit spreads for Hood.
And we're going to be moving into those growthier positions that are better poised to rebound on the back end.
Right, but I will say you made this point early on is that investors are now coming to realize that they're just going to get used to this chaos.
Where is?
I also do think that investors, at least clients that I'm talking to, everything, they are well aware that there's going to be
Filled orders, credit spread, Robinhood, $1.21. Okay, it's July 55.50.
You got to have discipline to execute that. For example, if you think you want to buy Nvidia if it ever goes below $150,
GNRC.
you better write that number down, keep it next to your keyboard, and when it gets there, you better buy it.
What happens is you write that number down or you have it in your head, but then when it gets there, you still get nervous, going, oh my God, I can't wait.
Yes, you're afraid and you break your own rules you set for yourself. So set your rules, be disciplined, and stick to it. That's the best way you can improve your investment results over time.
There's no doubt about it.
Okay, what's
But investors think that
Boeing pulling back?
right? And the politics are going to affect the way that the Fed reacts. And by the way, I think Jay Powell's not dug his heels in. I don't think Jay Powell's going to react at all. I think if Jay Powell...
Okay, Robin Hood just watching this one for now. Apple at the high, just off the high of the day, Apple. Microsoft turning off the low.
Absolutely, yeah. And look, I mean, the Fed has seemed to be somewhat political now for quite some time.
Right.
You know, obviously, it seems like there's a little headbutting going on between President Trump and Jay Powell, to say the least. But look, I mean, at the end of the day, my opinion is rates are high. Are they ridiculously high? No, they're probably getting closer to neutral.
Okay.
But affordability remains an issue, and that's something that I think that resonates with every single American, not just Americans that have large investment portfolios, is affordability. And with inflation coming down and economic growth being good, but not producing the jobs, right? I mean, the Fed's dual mandate is full employment. It doesn't say strong economy. It is very possible.
Okay, let me go grab my lunch out of the oven. I'll be right back.
Something we're all going to have to get used to.
MWH.
Whoever's running the Fed, is going to have to get used to having, dealing with a higher unemployment number, but it's still being considered full employment.
Hold on one second. We'll take a quick break. We're going to come right back.
Since 1956, Clayton Homes has been making home ownership attainable for those who dream big. Home is where memories are made and families grow from one generation to the next. We do more than build houses. We make homes for life to unfold. We've been opening doors for 70 years, and we're just getting started. Start your story
MWH.
anniversary celebration.
In the heart of the African savannah, a male lion defends his pride. What's this? He's called over a brother to prowl the reels. Together they double their chances of winning and make quite the fearsome opponent. Success. But this is just the beginning. Hunt down your next jackpot. Download Double Down Casino.
JLHL may resume in less than a minute.
With Moomoo, turn data into sharper trading decisions. And with Moomoo AI, spot what matters, predict what's next, and decide with confidence. It's all on one platform, from stocks and ETFs to options and crypto. Trade smart with Moomoo.
Everyone's talking about how much money you can earn playing games on Tester Up. Is it legit? Let's find out. So here's the app. It has tons of cool stuff. Payout is pretty generous. Let's try this one. Tester Up pays for the levels you unlock.
JLHL may res in 10 seconds.
I tried 2 other games. Time to cash out. Wow, baseball games have just arrived. Tester Up is worth the hype. Tester Up can make the fun and the cast is real. Tester Up, play now.
Welcome to the House of Fun, where the thrill of Las Vegas never ends. And games exciting with over 200 slot machines, each offering unique themes and awesome features. Dive into our captivating mini games and enjoy all-day entertainment. Join now and make every moment unforgettable at the ultimate destination.
November 2025, I heard employees say, I got to take 3 mortgages out just to pay for some eggs. I hear people saying, I got to take 3 mortgages out just to pay for gasoline. It's just one of those things that the numbers are saying one thing, but people's lived reality is something completely different.
Okay, you mentioned something I think is such an important part of these jobs figures, and that's that job report revisions are happening still on the same monthly and annual schedule. employers and just historically speaking. So how does this impact not only just public trust, but also how much the market actually reads into these initial numbers?
Well, it's one of those things that 2 years ago, if these numbers came out, we said go ahead and do a victory lap and take it as long as you want to go. Today, what we say in terms of all the revisions as relates to the jobs report, take a victory lap, but make it a short 40-yard sprint and come on back, because we don't quite know the numbers that we're seeing today. We don't really know if they're really telling the true story.
Okay, and so in these situations when we see hiring softening but not yet collapsing, I mean, what changes do we typically feel first as employees? I mean, in terms of like job security, mobility, and compensation.
Yeah, really everything you just said is the fact that the employers right now, like 3 years ago, the employers had an incentive to pay people above and beyond because they wanted to keep the workers. Today, employers are not necessarily giving them bonuses anymore. They're not giving the jobs that we used to see. We have the fact that, my daughter comes out, graduates in 2028, and one of the conversations that we're having, she comes out of Butler University, one of the conversations we're having is making sure that you have the skill set that will prepare you for what the economy is going to look like in the job market, because employers don't feel as much of an incentive to incentivize employees to stay, because employees are scared to job hop because they don't know if they leave today, I'm going to have a job tomorrow.
Okay, and so in your opinion, as we do look ahead, what do you think is the most important thing that Americans should be preparing for as the labor market continues to cool? Well, on paper, again, it still remains historically tight, as you mentioned. We've heard from numerous administrations, but it doesn't feel that way in everyday life and, of course, in just everyday spending habits, frankly.
Yeah, what I say to people, and look, I've been accused of being an eternal optimist, and I will wear that badge with honor. What I'll say to people is this. Every single day that you wake up is a day for something better than something better than you had the day before. Make sure you're consistently working on upskilling. Make sure you are asking yourself a critical question. Are my skill sets today going to apply to what is going to be needed in the economy tomorrow? But more importantly, you are your brand. The economy goes up, the economy goes down. You live long enough. I turned 52 on Friday. I've lived some life. You see the good days, you see the bad days, but make sure you are always prepared for what the next day is going to look like.
Okay, and I love that. I think that we need some optimism in this world that feels really, really focused on negative headlines. So I think a good way to approach it, and it will definitely be a huge driver of not only Fed activity, but just the overall economy for the coming year, as the labor market does remain to be still fairly fragmented, as you did lay out. But we so appreciate your time today. And of course, ending on a more positive note, Jason Greer, founder and CEO of Greer Consulting. Now, coming up next, we'll discuss our under 30 name today, that's NuScale, with a pretty big move to the downside following some more negative analyst commentary, as well as expectations ahead to remain fairly challenged on some of their promised timelines.
Opportunities don't stop in the market.
If you force companies to only charge 10%, they're going to change their underwriting guidelines.
Right.
And they're only going to extend credit to the most credit-worthy customers.
Right.
So if you have let's say a 720 plus credit score, congratulations, you get a 9.99% credit card. If you have a 680 credit score, sorry, you get no credit. So what that actually does is it backfires on the people that I think they're trying to help.
Right. That's right. Unless, of course, he caps the rates and then he tells them they can't do anybody. That'll be the next headline. Okay, we're happy at. You can't deny anybody either. Yeah. Gotta give everybody their money. I don't know. Again, to your point, it's another dramatic headline that that we're going to be forced to live with, right?
But he's coming after the
UNCX.
home ownership
NCI.
by institutions as well. But
Right.
again, if the Blackstones of the world unload all those single family homes, prices will come down.
100%.
That's how you improve affordability, because he knows mortgage rates are not coming down, man. I mean, they're
not.
might go down another 1% over the next year or two, but not by a lot.
Listen, Mark, Trump also came out last week, as we're talking about affordability. He came out last week and he's instructing Fannie Mae to buy $400 billion worth of mortgages, right? Trying to take the private market and then cause those longer-term rates to come down. I don't think that's going to work. I mean, that might be a short-term fix. I don't think that's a long-term fix at all.
Anyone who wants to learn the basics of economics, I highly recommend you pick up a copy of Economics in One Lesson by Henry Hazlitt. I mean, it's a short book, and I'll just give you the punchline. I mean, the lesson is that, you know, bad economists make short-term decisions.
QNCX.
You know, on how an event has a short-term impact on a small group of people. Right. Smart economists look at the longer-term implications of that event on everybody. Right. And I think at the end of the day, a lot of these they appear like band-aids, but they're not going to be great long-term solutions. Whether it's the 10% max on credit card interest, or the defense companies, you know, not being able to pay dividends and share buybacks and things like that.
Right.
You know, eventually, you know, you may have a more negative outcome.
Yeah. No, I think right. I think you're absolutely right. Which is why I think that whole it sounds good. You know, rates gotta come down. I don't think it come down for very long, and I don't think that's I would right answer. Where are they gonna get the money? What are we printing out? How can they go out and buy? I mean, you know, there's a whole lot of questions there. So let's just turn to really quickly before we end here, because we're gonna run out of time. Is precious metals and gold and silver. Once again, they're taking it new highs on the back of the weekend data, right? On the back of Fed news, on the back of all that stuff. And so, what's your sense of gold going higher in 2026? Do you think it's going to kind of top out for a little bit? I mean, look, it's had a massive move over the last 2 years. 24 and 25 saw gold up, 35%, 50 or 60% in 2025.
Yeah, and you're not going to see that this year. You know, I would think maybe we get to $5,000, which is what, maybe 10% or so from here.
Yeah.
But that's it. You know, at that point, I can't see as much new money coming into gold at $4,500 an ounce or $5,000 an ounce. I mean, we've been advocating to our clients for years and years and years. It makes sense to hold a 3 to 5% position in gold, because gold tends to be a good hedge against both inflation and deflation.
Right.
It's a good risk-off asset.
Right.
But if I had a client coming to me today and all of their money was in cash, would I tell them to put 5% of that cash into gold at $4,500 an ounce? The answer is no.
Yeah.
No. Maybe dollar cost average up to that level over the course of time.
Right.
But no, I mean, I think gold has had quite a run. I think once it gets somewhere around 5,000, you're going to see it go back to its normal kind of returns. I'm not predicting any major crash in gold.
Right.
It's not like it's going to hit 5,000 and go to 2,500 the next few months after that.
Right.
The best returns are behind it.
Right. Talk about where you see volatility, because once that volatility really starts to lift its head, once it starts to punch up into the trend line, then you'll see the market get more anxious. But at the moment, I'm not so sure I see that happening anytime soon.
I don't see it happening anytime soon, and that's why at the beginning of our conversation here, I mentioned that the second half of 2026 is what's most concerning to me, because you look at all of these artificial intelligence companies, and you've read the research, you know the data. Over the course of the last several years, since November of 2022, when ChatGPT was introduced, all of their CapEx has come from either cash flow or it's come from these cash war chests that they had on the balance sheet.
Right.
Well, the amount of cash on the balance sheet is now down to like Great Recession kind of levels, tech bubble levels, right? Like it's low, incredibly low right now.
Right.
So over the course of this year, and latest evidence would be Amazon wanting to raise $10 billion of debt at the end of 2025, more of this AI spending is going to have to be funded by debt.
Right.
As soon as you introduce debt into the equation, it's no longer considered R&D, research and development. Now the investors are looking at ROI,
right?
Return on investment. What have you done?
QNCX.
Why is this spending so reckless? What are the results? That, Kenny, that is where the volatility is going to really pick up in the second half of the year when you start to see some of these things shake out.
No, get it back. Listen. Today I'm going to give you the cavatappi with pancetta and mascarpone cheese. It is a simple yet delicious dish. It's a modern Italian classic, rooted in tradition, but really shaped by evolution. Cavatappi is like the means of corkscrew, right? It emerged in southern Italy in the 20th century, designed to kind of craft sauces better than a straight pasta. It was perfect for rich, creamy preparations. Pancetta, well, that's been a cornerstone of Italian cooking since the Roman times, prized for adding depth and savory fat without smoking, right? And the mascarpone cheese, originally from Lombardy, was traditionally a dessert
SMMT.
cheese. You use that like in things like tiramisu. But post-World War II, Italian cooks began using it in savory dishes as a softer, silkier alternative to cream. This combination grew out of the same lineage as carbonara con grisha, right? Pasta, cured pork, and fat, but reflects a newer, more
MEG may resume in
style,
less than a minute.
in northern and Italian-American kitchens here at home. Mascarpone mellows the salt and the sharpness, creating a luxurious brown sauce that clings beautifully to the corkscrews. You can scan the QR code on the screen for the full recipe, and trust me, you can thank me later. That's a wrap for today's Trade Talk, but the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcasts. Until the next time, stay sharp, stay disciplined, and stay in touch. Take good care.
NCR.
This content was not intended to be financial advice and should not be used as a substitute for professional
MEG may
financial
rest in 10
services.
seconds.
What a hotel, right? And only $250 a night for my favorite site. What? You didn't check Trivago. I got mine for $155. You have to check Trivago. Oh yeah, prove it.
On Trivago, you can compare hotel prices from multiple different sites, even your favorite one. Look, same hotel, $100 less.
NCR.
I didn't check Trivago.
Check Trivago to compare prices and save up to 40%. Hotel? Trivago.
As you can tell, I was not created by GoDaddy Hero. It uses AI to create great-looking logos in minutes. You know, the logo actually looks like a horse. Imagine that.
What if baking buttery, flaky croissants was as easy as 1, 2, 3? And what if they were 3? Meet wildgrain.com. We're passionate about delivering insanely delicious pastries, slow fermented sourdough bread, and hand-cut fresh pasta directly to your door. Our
CCHH.
bakers do all the hard work, and you get the credit. Build a box today and get free croissants for life. Wildgrain.com.
Candy Crush Saga, what level are you on?
2000.
Good job. It works up here with no Wi-Fi.
All right, NVIDIA trying to make another higher high now. Microsoft is clearly starting to turn. Microsoft, if you're frustrated with Microsoft and you're long, just know that it's probably going to take a while. It's not going to just zip back up to the highs. I don't see any V-shaped recovery, more like an L-shaped recovery. And software names are just way overdone. I get a sense that people need to see more convincing buying volume by institutions or whatever down here. So you can see the volume's not that great. Got a couple of days where we were buyers there. But this is a good sign because moving higher right now, we got shorts covering most likely. S&P trying to get back above VWAP. And there we are.
MB halted to the upside.
It's time for Yahoo Finance's market minute stocks hovering near the flat line here. Look at a whole lot of gains in today's trading with the Dow on track to build on its latest record. Meanwhile, gold and Bitcoin still remain on investors' radar as the assets try to stabilize after last week's sharp pullback. Oil also coming into focus after Vitol, the world's largest individual trader, pushes back its estimates for when demand will peak. The company saying a new report forecasting peak in the mid-2030s against previous predictions of a peak in the early 2030s. Last year,
All right. Hedge flows. I mean, look at what hedge flows are doing. This is not giving us any kind of direction. It's just chop, chop, chop. If you're thinking bullish, you need to see this start to rocket to the upside. If you're bearish, you want to see this turn back down. Right now, all I'm seeing are expectations for prices to just stay pinned in this area for the time being. So I'd be looking at individual sectors like materials. Materials have been strong. Okay, materials are strong. So stocks in the materials group.
Hi, welcome to a new episode of Opening Big Unfiltered. I'm Yahoo Finance Executive Editor Brian Sozzi. And like I always say, this podcast will make you a smarter investor, a smarter leader.
Okay, materials look good. So let's go take a look at some of those. We looked at these yesterday. Materials. Okay, Barrick Mining, AEM Gold, Century Aluminum, Commercial Metals. Okay, and the more traditional materials. That's communications. More traditional material stocks. Alcoa Aluminum rising. Air products, chemicals, gases, industrial uses, Allegheny Technology, Avery Dennison. Okay, these are all the 20-minute, the 20 EMA on the 60-minute. Ball Corp, that was on the watch list. Okay, we'll go to the watch list right after this. Amcor PLC making new highs. Amcor PLC breaking out this week. The weekly time frame also looks good. AMCR back to the top of the range, probably gets to 53.
I see what you create with various. Isn't it avatar? How do you even think about what you create?
I mean, we call them personalities. Even internally, we anthropomorphize them quite quickly. Now we have, I think the last count is about 120 of these personalities that we've created in all sorts of different kinds of niches. So everything, of course, as you mentioned, from personal finance, home and garden, travel, health and wellness, beauty. I mean, all of the different kinds of genres. We now at this point, if you look on Apple Podcasts, we have at least one personality speaking to every genre that is categorically available on Apple and Spotify. And we, design the personality from scratch the same way that like Disney would design, Moana, or Electronic Arts would design the lead character for its next, role play game. We give them complicated backstories.
MB may resume in less than a minute.
Quirks and strengths and weaknesses and hopes and dreams and aspirations and families. And then we very dynamically are able to continue to create content for them, and we find their audiences and respond to what their audiences want. And these characters kind of evolve over time in the same way that traditional content creators do.
I really went down the rabbit hole with Penny Power. Penny Power is Instagram, has an Instagram page. I spent 25 minutes listening to Penny talk about how to side hustle like a pro. And she started the episode at 10 minutes explaining why she might be better at digging up these trends than, let's say, me or a personal finance expert. Like she is able to
MB may rest in 10 seconds.
Analyze real-time data, what's emerging in terms of side hustle, and get this context out before anyone else. This is huge. It's really a big breakthrough.
So certainly like the depth of the research that they're able to do based on being able to pull from multiple different LLMs, multiple different data sources, and the capabilities for being able to do it real time are a significant advantage over real life living creators and the traditional content creation workflows that we saw in the past. So, for example, through this weekend, we were doing all sorts of content about ICE in Minneapolis and, all of the different kind of news topics that are trending. And it's very difficult in content creation for people to do real-time content creation the way that we are able to
messages. So that's certainly an advantage. But we are, as you mentioned, AI transparent. I mean, we are very forward with the fact that this is AI generated content. People know what they're getting. That's important for us in being able to create an authentic relationship with our audience
OMG
and
may
make
res
sure
in
that we
10
have the
seconds.
trust of our audience. So we tell people that it's AI generated content, always in the show notes. And if the content is longer than what we call snackable content, if it's longer than a few minutes long, then we will also do an audio disclosure. So it'll say something about, why you might be a benefit that it's AI. So, if it's going to talk about politics or something, we'll say, and I might be AI, but I've never taken any money from a super PAC and I actually know the facts, or, something.
All right, still sitting here. Boring. Until this starts trending again, I haven't done too much in the way of trading S&P options.
I got hooked. I told you, I really went down the rabbit hole. So how do these segments come about? I think about a traditional newsroom, or how we, let's say, operate out by. There's a news topic, and we wake up in the morning, we assign up that story, a text story, we think about it on social media. How do we cover it on the Yahoo Five Network? How do we cover it in podcasts? Is that how you come up with these things internally?
Is very, very similar, except we're leveraging AI at every stage of the process that we can. So we are using AI agents that we have created that help us aggregate information from a bunch of these different news sources or trending reports. What are people asking their smart speakers? What are people Googling? What are they putting into AI? And then that helps. Then we are able to cross-check that against how different topics and titles are trending. So then we're able to, create content that is very timely, that there's a need or desire for, and then title it so that people are able to find that content very easily.
Trying to get back above VWAP.
We have creators who.
Microsoft turning the corner. Microsoft definitely off the low of the day. Microsoft. Daily still looks, like a base is forming down here. I'm not really that enthusiastic about Microsoft yet. That could change over the next week or so. We do know that software companies were oversold coming into the week, and we're looking for more puts to be sold down below. Okay, looking for more puts being sold.
Two-part question. How much content are you creating in a given week? In each episode, are you making money on each episode?
Yeah, so because our production costs are very low, radically low compared to traditional content creation, on the audio side, we create
Stronger than expected non-farm payrolls will lead to a reduced Fed rate cut expectation. Options flow is overshadowing everything, of course. Okay, you can see that here. Money Magic also saying the same thing. Seeing a strong bearish bias, at least into Friday. You can see lots of puts in this third column, puts. Okay, bought to open, some pretty big positions here. Let's see. Qs, I see 575. Money was looking at 600. Okay. For this week, I believe you said 227 is a couple of weeks out. Core Scientific, calls being bought for June. Calls being bought for June.
And then they get to the office and they want to be able to have it on YouTube in the background, and maybe they get home and they want it on their smart TV, or to listen to it on their smart speaker while they're cooking dinner. So sometimes they lean into a video.
Large negative delta exposures across many of these assets down below. Top changes by deltas. Apple, ASML. Apple's still at the high here. Apple.
Hey, you're creating a ton of content each week, not even per day. Is all of it being suggests, is it even such a thing as creating too much content?
Yeah, I mean, really what we found on the podcast side, sometimes we think about ourselves as an audio version of Reddit or Wikipedia or Pinterest. We do a lot of what's called edutainment. So like there's an education aspect of it, but we do it in kind of an entertaining way. And we believe that in the past,
Riot turning back up.
really commercially able to make this kind of content, because if you didn't get a big audience, you weren't going to be able to monetize it. But because our production costs are so low,
Riot, IBIT, IBIT continues to move higher. IBIT.
so I'm already reaching profitability on that episode. And so that means that I can target this like bunch of greenfield areas out there that people have not targeted before, and that now people who have grown up audio first, are wanting to consume this content, and they're no longer thinking of it as like, oh, podcasting is just for long form interview or investigative reporting. Like, so, for example, we're answering
Microsoft still climbing.
questions a month, and people didn't even realize that what they're listening to.
Apple
because it's delivered via RSS.
off the highs of the session.
But they are listening to a podcast by asking their smart speaker a question. And
Robinhood. Robinhood continuation, looking good. Robinhood. All right, Bitcoin is trying its best to rally. I have a couple of small positions, MSTX. I have some shares of MSTX. I have shares of IBIT. I reduced my exposure to Riot. I'd like to see that follow through and get above the 50-day. And I have some Coinbase. That's it. Still got a lot of work to do. Here goes the S&P. All right, still got a lot of work to do. Okay, back above VWAP. So anticipate that we'll get rejected up here again. So if you have longs and you want to salvage some of your profits, let's see how we deal with this right here. Kind of a boring day. Look at hedge flows, just chop, chop, chop. This is a lot more noisy, but we see that we have puts being sold and calls being bought as these two lines are rising, in addition to the white line, which is price action. Okay, whenever these are rising, that's creating positive gamma. Up is positive, down is negative gamma. So that's what, if you're bullish, you want to see positive gamma building, okay? Now, take that with a grain of salt, because this does chop around quite a bit. Very, very noisy. All right, so I'm watching for this hedge flow to start trending like it was over here this morning. The only thing this morning was trending down. So we need to see an equivalent move that we saw this morning, except we want to see that to the upside. And maybe we can see 7,000. I doubt it, but maybe we can see 7,000. I don't like the odds that we're seeing at the moment. The odds in this range-bound condition that we're in is especially troublesome for the bulls, okay? Okay, so we've been dealing with this for some time now, okay? So this is your condition, what condition my condition is in. All right, we're in the upper half of this range. We got buyers at the low of the day. Can we push up to 7,000? It's possible. We absolutely must break out above 7,002 in order to start trending. It's that simple. We've been consolidating all of December into January. Okay. Consolidated in December too. We did manage to make a few new highs. In January, we hit 7,000. Now we need to see a follow through. It's pretty straightforward. So Robinhood, I like what we were doing on Robinhood with a put credit. I also have call spreads. Okay, this is S&P, Robinhood. Okay, Robinhood's looking good. Okay, so anyone who wanted to take profits on their puts, probably already done so now. We're headed back up. At least that's the way it resembles a reversal now. So we'll see. Short still covering. it's frustrating because you want to be able to say, oh, the markets are super bullish. We can just about buy anything. We had some rotation into a week ago. We had rotation. Some of these consumer staples and defensive stocks, still seeing some rotation. Here's XLP. So what are you trading in XLP, Vinny? Well, I would be looking at Coca-Cola, PepsiCo, Monster Beverages, Procter & Gamble, KMB. KMB looks really good. I mean, everybody needs toilet paper. And Kimberly-Clark is just getting started off the low. Big base. If you look at the weekly time frame, what the prospects are in Kimberly-Clark. I mean, can we get back up here? I think we can. At least 50%, right? That would be 120, 125. IBIT still going. Okay, so 120, 125 maybe. It's a slow mover. All right, we're already getting a little bit of profit taken there on the S&P. KMB.
We ended up having this three-way meeting with me, him, and Claude, and that I think really exemplifies just the way that we do business. We're very AI forward. We think about AI as our companion. What all could we do to make every process easier? What is AI good at that we should lean into? What might be its weaknesses that we need to mitigate? So, I mean, after I had that lunch, I came home and I immediately called my little team and I was like, we found it. We need to jump on board. And so we joined last summer. We came out of Stealth in September, and it's been a crazy journey. 4 months later, we just this morning announced that we'd raised our seed series fundraising from a fantastic firm called Activate Venture Partners out of New York. And now thank you. Now we've got the fuel in the tank that we need to really make this thing incredible.
I was going to say, I didn't see that you had raised money, several months ago. So, I've been trying to follow your story to the extent I could. What is it? I mean, I'm thinking are you making these episodes for $1? You create thousands of these things. That's one of the perfect business model. What did you get asked at? What did you get asked at when we were raising this funding? What did they want to hear from you? And what's the growth plan?
Yeah, I mean, a bunch of the questions were around what is the market size of this opportunity? Is this a podcasting business or is there a bigger business here? I mean, and as I started out on the top, I think we believe that this is very broadly applicable. That today,
Kimberly-Clark. All right, so some of these consumer staples, most of these will probably do just fine. Okay, Mo, all of these are rising for the most part. Archer Daniel Midland. Okay, Brown and Foreman. CVS Health did dip on earnings, I guess, a couple of weeks ago. Campbell's Soup, that's on the watch list. Campbell's Soup. This is a cheap way to play a return to profitable levels. Campbell's Soup. Okay, it's susceptible to a failure like it did back in 2025 and roll it over. So this needs to start building higher highs, and like over here. This is what you need to see. Higher highs and higher lows. So there's no big hurry on Campbell's, but it does look good. I got a feeling it's pretty oversold. And it's not going to get much more oversold. Chevron. Okay. Campbell's. Clorox, another one. Clorox, CLX. Everybody needs clean clothes, right? Coca-Cola, CCEP, Coca-Cola Europe, Colgate Palmolive. Everybody needs toothpaste. ConAgra, food. Constellation Brands. Some of you need Irish whiskey or Scotch or beer or whatever. Look to Constellation brands. That's trending. Okay. I personally just like a Modelo once in a while. Costco. Keurig Dr. Pepper breaking. Oh, Keurig Dr. Pepper looks really strong here. Keurig Dr. Pepper. Consumer staple. Looks really good.
A lot, actually. So one of the things that I did at the beginning when we came out of stealth is I said that I would make myself available to anybody
MP
who
may res in 10
wanted to
seconds.
talk about what we were building. So I've had many conversations with creators, as I said, people concerned about job displacement. And I've also had a couple of ongoing conversations with two people who are self-described ethicists, so that we can continue to have an ongoing dialogue about how do you
Keurig Dr. Pepper following through. It's the high of the day, so
maybe some of the mistakes that we made in building and rolling out technology like
LPG may
social
res in 10
media, how do
seconds.
we not repeat those? And I'm very confident and comfortable with our team. We are a very values-based team. The founders, we all have kids and we care about the world, and so we're
all right. Note to myself, KMB is at the high of the day, so maybe wait for an ABCD pattern, pivots, or buy some tomorrow. Where? Oh, there it is. Okay. Futures rising. Futures are rising. Okay, that looks good. Okay, Snowflake. I'm sorry, Robinhood. Robinhood looking better. Pushing higher. We got some resistance overhead.
we don't do what we call hard moves. I think there's some areas where AI still is.
Kimberly Clark too. KMB, CPB also look good.
So even if things are factually correct, and even if we
Kimberly Clark and Campbell Soup. Okay, let's take a look at the watch list for the week. Let's see how the watch list has fared in this very choppy market. Watch list for February 9th. All right, AAOI still trending. It's not blasting off to the upside, but it's definitely trending. This appeared on the watch list 2 weeks ago. We kept it on this week. Okay, Apple turning back up. We need to get above 280. You know that already. Apple above 280 would be a good thing. Boeing. Okay, put credits on that. Bank of America all the banks pull back. Caterpillar breaking out. Campbell Soup again on the watch list. Chevron added and rolled to 185, 190. Dycom breaking out. Watch list. Diamondback Energy higher. FedEx grinding higher. FedEx. JP Morgan. The banks are off. It's not over. I don't think it's over by any means. Lockheed Martin at the highs. Mondelez, another consumer staple. S&P still going. Monster Beverages, we just talked about. Northrop Grumman, the aerospace and defense taking a little breather. Pitney Bowes pulling back a bit. SCHD, we talked about that this morning in the early session. SCHD, SPHD, all looking good. The Scorpio tankers, TK tankers, all of the bulk carriers looking good. TK looking better. Okay, that looks good. TK tankers. Taiwan Semiconductor, again on the watch list, following through Monday, Tuesday, Wednesday. This keeps going. Don't chase it up here. Look for a opportunity.
So I think it's right that we are creating new jobs. Are we going to create as many jobs as the jobs that are being potentially being displaced by totally?
All right, S&P is going now. S&P, let's keep an eye on the S&P for now. S&P. Okay, we're back to the high of the day. If we get through this, we could get a short covering rally. Okay, stops are up here. We're above VWAP. Resistance again or breakout. We'll either get resisted, we either get rejected or breakout.
human created content. And then they will look to the AI generated content for different kinds of content and things that they wouldn't be able to get from real life creators.
Lastly, if we're having this conversation 5 years from now, what does this business look like?
I think if we're having this conversation 5 years from now, I think that we're not only making owned and operated content, so the content that you see across all of the different platforms, but that we are working extensively with brands to help them design the personalities that they're deploying.
Resistance again. We're at Resistance.
Robotics companies to design personalities. So we are in a number of different verticals. And the primary way that people are engaging with AI is through a human-like interface.
I love what you're doing. I think it's absolutely fascinating, and it is also reminding me that I need.
Okay, we get stops up here. If we can get through this area, that's fine. But rejection area. Okay, we know that we're going to probably get rejected here. Okay, let's see. I heard the tick lady just kind of went quiet. Okay.
All right, talk to you soon. Thanks so much.
All right, that's it for the latest episode of Opening Bid Unfiltered. I am the human Brian Zaldi, not the AI avatar Brian Zaldi. Talk to you guys soon. Appreciate the support.
Hey, brushing besties. Yet another toothpaste is not white. Girl, is here
Speaking of Colgate Crest commercials, they must have heard me talking. See that? I mean, I can't believe it. That is so funny. You talk about individual companies and you get advertisements for it. They're listening to everything. Listening to everything. How do people sit here and play these stupid games all day? That's just beyond me. And they advertise it as, entertainment, all day entertainment. Who the hell is going to be sitting here playing these games? That's, put a big L on your forehead if that's what you're doing. Get outside, do something. I mean, go walk, whatever. Playing these stupid games on. Man, what an industry. Suck people into this stuff. I have to stop watching social media too. That's another thing. What a waste of time. Start yelling at your phone or your social media account. Crazy. What did I want to do here? Okay, we're getting rejected right now. Oh, I wanted to go and put on CNBC or Schwab at least. I hate these dumb commercials. At least they stop advertising those stupid corn shucker things. I mean, you can't eat corn on the cob with your teeth. You got to have a device to do it. What's Vinny talking about? He's bitching about commercials on TV. It just pisses me off. Everything pisses you off when you get older. All right, we're getting rejected right now. Okay, this is S&P, not Robinhood. S&P, what's Apple doing? S&P, we've at the highs of the day. If you're day trading, you probably want to take a little profits. Apple's trying to push a bit more. Microsoft has turned the corner. Okay, we're getting rejected again. Yep. Oh. Samsung, Bill. Samsung.
Eventually, the market will get it right. Right now we're seeing a lot of repricing in different categories. That's kind of category.
Same thing.
Meaning all software is going to be eaten by AI, and that's not necessarily the case. So we're trying to separate the wheat from the chaff on what are the companies that will survive and possibly even thrive in the future as AI and software collaborates, and
Yeah. Yeah, obviously. Obviously. I don't mean to be curt, but yeah, that's pretty obvious. Yeah. It's funny because my son was in here, we're talking in Spanish, you know, and I'm telling you, immediately right after that, we started getting commercials in Spanish. It's crazy. Makes you want to unplug everything, go live in the woods with Jane, go swing on some vines. I could definitely see how people could get so overwhelmed that they just say, you know what, that's it. I'm checking out. I'm going to get my camper van or whatever. I'm just going to tour the country. It's amazing how quickly your mood changes if you get away from the TV or the computer trading. That's why I have to take a break during the day. You have to get away from it. I take a midday break. I walk or run in the morning. I run or walk in the evening. I take a break at lunchtime. Got to get outside. I mean, it's nice that I have my office with big windows so I can see outside, but it's not the same thing. I can feel my mood changing if I don't do that. You know, like if I go a week without running in the morning or at least taking a walk, getting outside, get some sun on my face at early in the morning. If I don't do that, I am a real cranky old man, right? My son said the other day, Papa, you're so angry all the time. I felt terrible. It's like, yeah, buddy, I know. It's nothing to do with you. He says, no, I know. You got to stop. And he'll see me like scrolling social media, and they just shake his head and says, you got to stop watching it. And I have a 15-year-old telling me to stop watching social media. That's pretty funny. Huh? He's such a good boy, good kid. I'm so lucky with my kids. One of the kids from his school got T-boned crossing a major highway from coming out of Wendy's. A girl, she got T-boned and she's dead. She put into a coma. I don't know. I'm sorry if they're bringing you down, but 16-year-old girl. You know, that's what I was telling my son. Don't cross traffic perpendicularly. Take a right, go down the street, turn around, get to the next red light or whatever, and then turn around, you know, because people are not paying attention. Imagine being her parents. I don't know what I would do. I don't even want to go there. I don't want to project. It used to be when I was when he was young, I was afraid maybe he'd get autism or something like that. I know some people whose sons are autistic. You know, you get caught into that frame of mind, that mindset, and you know you can get really depressed very easily. So you got to get outside. You got to do things. You know, expend some energy, increase your, what do you call it? Your what's that opiate that your body produces?
They're all betting big on being able to protect their moats long term. If they don't make these investments now, they may make this year.
When you run,
and that's why they do it, and they know it, and they're willing to take this risk. If they aren't investing right now, I would be much more worried than these big spends that we're hearing from these Mag 7 CEOs. They need to build the future.
Yeah. Just very fast. There was a lot of concern about
endorphins, right? Endorphins.
Tesla, there's a call for Elon Musk to even step down. I heard at least.
Yeah, endorphins. Thank you, Bitomia. Yeah. Yeah, I beat you to it. All right, so yeah, endorphins. That's why, you know, Frano likes to play tennis. I mean, you got to do something. You know, you can't sit there and just veg out. Anyway, I'm going to roll right now. I'm trying to get this damn thing above this level here. If we can get above that, we'll get some short covering. Okay, watch for short covering. Watch for short covering. S&P, watch for short covering. Yeah, endorphins. I'm happy to see Microsoft turning. What's Oracle doing? I like to see Oracle also turning up. Oracle. Okay, Oracle also catching a bid. Oracle. All right, we're catching a bid. All right, so I venture to say that Oracle's probably going to take. Oracle probably takes 3 to 4 months for 50% retracement. Okay, so Oracle, we talked about this. Oracle, I got a position in Oracle, and I'm considering where I want to start to add. Okay, Oracle. Let me zoom out here. Let me go out 6 months. Okay, 6 months. All right. Let me go out 8 months. It'll be easier to see. 8 months. 8 months. Here's Oracle. 8 months. Okay, so Oracle 50%. I would say we're probably going to take about 3 to 4 months at least, minimum. But high prospects that we could get that. Okay, so we got the low, we got the all-time high. That's not what I want. That's not what I want. I want fibs. Okay, so the low up to the high. Okay, so that's the other way around. I want it this way. Okay, this way. Okay, so 50% retracement would put us back above the 200-day. 382 would put us at 215. Okay. 382 would put us back to the 200-day. Oracle 382 equals 200-day. You know, Oracle's not going anywhere.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies.
Yeah, they refinanced their debt recently, right? Oracle.
And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. It's time for our Charles Schwab Stocks Report. This is proprietary data as folks are trading, and we have all of that from January. We have all the activity, the sentiment over the past month. Joe Mazzola, head trading and derivative strategist at Charles Schwab, is here with the very latest. I mean, I think the first takeaway that I saw was that up arrow, that up 30%. Tell us a little bit about that.
Oracle making major moves to fund its aggressive AI infrastructure build-out, financing senior secured bonds, 20 to 25 billion. Okay, odds of a retracement to the 200-day. Current positioning, stocks trading around 160, 164. 200 days at 230-ish. Okay.
Just here alone. So our clients were looking for opportunities to buy on dips, and Microsoft provided one of those opportunities.
It's interesting. People were willing to take the chance.
Unlikely in the short term. 40%. Low to moderate, 20 to 30%. 20 to 30% would be good. That would be 236, right? Okay, so 236. Let me just put 236 on here so we have it. 236. Okay, we got 236 now. All right, so that's the 50-day. 236 is the 50-day.
Netflix isn't at Mag 7, but it's you can call it Mag adjacent, if you will. I think it's been on and off the list over some time here. But we also saw Nvidia, so that is I guess the Mag 7. So that was on the list as well. Amazon made the list. Amazon
236, more likely. 50-day.
From one side of the list, the buy to the list, to the sell side of the list, back and forth. And with Tesla, it's more of when the stock gets a little too high, maybe not too high, but as it's approaching new all-time highs, that's when you tend to see clients maybe trim a little bit. When it's pulled back within a range, that's when you start to see buying. So it's really a trade.
All right, so chopping in this range up at this level, we're looking for more of the same until we can break above 7,002 and start trending again. I don't see that happening anytime soon.
And on the flip side, where you did see some of the symbols that were sold, they all had one thing in common, and that was kind of strength, selling into strength. So whether it was AMD prior to the earnings report, because AMD released earnings after the stacks, Costco or Boeing, those were the top three. All of them actually did fairly well throughout the course of the month, and clients just kind of trimmed when after those rebounds.
Look, we saw a lot of shifting of money. I mean, it was sort of a rebalancing of their money. People didn't necessarily take their money away. You had Bitcoin selling off, moving to some new lows that we hadn't seen. You've had the wild ride in metals.
ARDB may resume in less than a minute.
Margin calls. People were wanting to jump in for opportunities and or quickly get out because they couldn't take it and move to something maybe a little more solid in their own minds. I think about all of that. And what's interesting, and I don't know how to spin it forward just yet, but on Friday,
Okay, what are we going to do here? Okay, Oracle, as we were speaking, just came right back. All right, so S&P 500, we're up at the highs here. Looks like we're going to get rejected again. Long-legged doji spinning top.
Yeah, well, I'm going to give you a little preview, Nicole, because I look on it on a weekly basis now. So, yeah, we're starting to see some of the buying of Palantir's kind of crept up on the list a little bit for the DXSP.
ARDB may res in 10 seconds. MNTN.
Nvidia is on the top.
Okay, Robinhood. Robinhood. Let me just put Robinhood here so I have it close by. Robinhood. HOOD. Robinhood. Okay, that looks good. Robinhood. A doji for now. Looking for a follow through tomorrow. If we get a follow through tomorrow, that'll be a good sign for more to come. All right, accumulation is what we want to see down here at the low. Robinhood. They have increasing earnings. Earnings have been increasing. So has revenue growth. It's just not increasing like it did the last time around. They just started this predictions market in February, so not enough time for that to kick in any large monetary gift, if you will, to earnings. So, but I think it's we could see it base down here, push a little bit higher. I'd like to see it push a little bit higher. Sell some premium down below. Okay.
As we were going to the end of the year, right? And so that tells the story about the broadening of the market in the 493 versus the Mag 7. As you talk about that, you could talk about Dow theory. We saw that the transport hit the high, and then we have the confirmation from the Dow Jones Industrial Average just recently. So you have some of these things that are...
Okay, we just got a little drop there in the S&P. I don't know what's happened there, but just got a big drop. Okay, so it looks like yesterday we saw something similar over here. Yesterday, we had a similar thing happen. We had a big bearish candle, and then we bounced. Right after that, somebody was taking some profits off. It was either yesterday or Monday. It was Monday. See the Monday candle right there? That big candle, and it reversed back up. That's exactly what happened. Somebody took some profits off very quickly, and then it retraced right back up. I know you probably recall that if you were here in the room on Monday. Okay. IRE coming off the low. Looks like a double bottom. Looking for it to push back up. Microsoft. Microsoft off the low. IGV. IGV coming off the low. Software stocks. Chevron, the energy stocks. Chevron back above. Okay, we got a little dip. Watching for that first bullish candle. Put a stop underneath there and keep riding this trend.
Coverage of the close every single day. This is Market on Close live weekend
Chevron.
Eastern, only on Schwab Network.
Cash flow upside on Chevron. 400 million to 700 million. Boost.
Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24 hours support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
AXIN.
No follow through yet.
Nicole Bashod with us, labor economist at ZipRecruiter, and Jason England, managing director, portfolio manager at Simplify. It's great to see you both. Within the numbers, Nicole, I'll start with you. We see that we're up 130,000 jobs. It was way more than folks expected. Unemployment rate dropped
As long as the S&P 500 stays in the top of this range, it looks like we're just going to keep chopping until the New York FANG components can all start to rally. Apple's off the high of the day right now. Apple, some profit taking. NVIDIA, a little profit taking. So as long as we stay here, the sectors that are doing well, materials, energy, industrials, consumer staples, that's what I would focus on.
Yeah, right. And so that was the day on that Tuesday, and the market exploded, right? And the Dow was up 4.5%. The Dow was 792, so 4.5% was 35 points on the Dow. Yeah. But it was a percentage move. That was amazing, right? Yeah. But it was at that moment that whole argument went out the window, because then rates started to come down. Yeah. And the equity market took off. And for 25 years. And still, as recently as 1984, I was getting a 10% interest rate on my insured savings deposit. Okay, that's savings in 1984. Yeah, well, 1984, right. So my first mortgage was 1983. I had a 15.5% mortgage in 1984. Right. And you refinanced it? People complain about these mortgage rates right now. Yeah, I know. It's crazy. And I'm saying, like, it's crazy. You're crying about 6%. Affordability, I think, is a good concept here. They do it in the UK, they do it in Canada. But at the end of the day, you look at mortgage rates now, like in the
We spent the last 6 weeks above the 10 EMA. We've dipped below briefly, but staying above the 10 EMA on the weekly time frame.
I mean, my first mortgage was 7.25. When I kept calling the bank, I said, if it goes under 6, and they finally called me, and I got 585, and I thought I was the king, and a hero. And now
New York Stock Exchange.
605, and people are just pulling out. Oh, this is so high, so expensive.
But I will say, you can't blame them, because for 15 years, rates were zero, and mortgage rates were going out.
NASDAQ starting to see a little bit of a lift on advancing stocks versus declining.
It's what they learned, right? It's what they learned. Right. Yeah. When I was 19, the rates were 20%. My mortgage was 3%. I just accepted that as what it was. I talked to a lot of these, they're 150%, like, on it. I mean, I talked to a lot of these younger kids, and they're like, this is all they know. This is all what they've grown up with. So they think, like, zero rates are completely normal. Right. And it's like, it's not. Yeah, but you can't blame them, because that's what they learned.
And by the way, so is free healthcare, and so is free tuition.
I think what we're overlooking is the ratio of the price of a home to income was still significantly lower. Yes. When you had a 4.5% mortgage yield versus where you are today. Right. Today is crazy. Right. The highest ratio since probably 2006, 2000. Okay, but again, because they kept rates for so long, low for so long, that housing prices just went way out of whack. Right. And the fiscal stimulus, not only the monetary, 100%. Yeah. Together, that was a big mistake. And I'm always puzzled by the fact that back then, when you had these gargantuan federal budget deficits and spending taking off in Washington, at the same time, of course, you had Jerome Powell keeping rates 0%. Right. Fed funds rate, basically, which made absolute.
Well, do you remember? He actually said, I'm okay letting the economy run a little hot.
And it ran hot. Well, you know what? He made a big mistake, in my view, during the pandemic. He could have just bought treasuries, and he bought mortgages, and he's got all of these mortgages on his balance sheet, and they're not rolling. No, okay, I hear you. Right? I hear you. Janet Yellen could have refinanced long-term debt at 1.5%, which she never did. Let's not even go there. Listen, gentlemen, thank you for coming out. I really enjoyed the conversation. The pasta will be right out.
QNCX.
That's a wrap for today's Trader Talk. But the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcasts. You got questions or topics you want covered? Email us at tradertalk@yahooinc.com because we're always listening. Until the next time, stay sharp, stay disciplined, and stay in touch. Take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
It's been great. I saved hundreds when I switched to Progressive.
Molly Burke is passive progressive.
That's so great. Maybe you can buy a bigger Zenha.
Molly doesn't have progressive and takes it out on those who do.
Because I make one.
I can handle my claim online or on the phone, whatever's easiest.
Sienna, she can be laid back. Let's eat, girls. I'm so happy you didn't blow all your savings upgrading to a better room. Oh, look, they do have rooms with balconies.
Don't be passive progressive.
Lucky.
Switch to get good coverage and savings for yourself.
You love a clean plate. Almost as much as we do. And we've been dedicated to a safe, effective clean for 70 years.
NCO.
Cascade leaves no mess, no residue, no worries. Cascade, leaving nothing behind since 1955.
NCO.
All right, S&P just stuck here. Keeps enticing people into buying the high of the day and gets just getting scrubbed back to VWAP. Yeah, the S&P is not going anywhere until we break above 7,000. Just stuck on the top of this range. Breadth looks a little better, but still stuck in the top of this range. Could be worse. Could be worse. We could be down here at the 50-day moving average. What's VIX look like? VIX hanging out near 1850. 1750, 18. VIX. The actions elsewhere, the New York FANG components are what's holding everything back. New York Stock Exchange is fine. Junk bonds, just sitting here. HSAI. Pretty deep discount today. Those are turning the corner. HSAI turning the corner at the moment.
We saw the Dow yesterday at a record. But taking a look at the NASDAQ and near the flat line and the S&P 500 of about 1/10 of 1%. Just taking a look under the hood at where we're at with equities, we've seen that rotation away from tech more into.
Micron. That stock just continues to surge up another 10% today.
Robinhood still going.
Not so much. It's down almost the same amount, 10%, after its earnings, and a continued decline in the price of Bitcoin. There is a correlation there.
They appear to be buying Robinhood.
Best to invest with parts of the market at record highs and others struggling. Let's ask Tom Lee. He is Fund Strat's managing partner and head of research. Welcome back. Great to see you, Scott. So what do you make of the price action today? This was a undoubtedly better than expected jobs report. Yields ticked up, maybe expectations of cuts by the Fed ticked down. We're trying to just figure it all out today.
NCI halted to the upside.
Yes, I think the macro is a little confusing for investors at the moment because we not only have a new Fed chair that's announced and his policy stance isn't clear, but I think investors have been thinking AI was going to eat the jobs market, but we have a pretty decent jobs report. I think it's going to put a lot of weight, and we of course had a weak retail sales, but it's going to put a lot of weight on Friday's CPI report because if that comes in tame, at least the market can understand that the inflation part of the Fed's equation is cooling, and of course now if the jobs
Look at all the chips.
decent strength,
Chips doing well. Generac is looking pretty interesting. Generac, GNRC. GNRC breaking out to the upside. We talked about Caterpillar producing all of these natural gas fired large generators. Over 700 for just one project in Utah.
It's very confusing, Scott. I think that there's two things happening, but I think one is really the bigger effect. I think the smaller effect is that AI, as you know, has gone from being the sort of driver of S&P earnings. Now the market questioning is AI just wrecking tech so badly that it's bad for the stock market. And also, they're not buying the data centers and hyperscalers anymore. They're actually trying to buy the bullets, not the armies. But I think the bigger effect is that gold has become like this singular monolithic trade that's worked. But gold now is a $40 trillion market. X the Mag 7, the S&P's $40 trillion. Gold is now bigger than the stock market. So I think as gold rises, I think investors are wondering, do they really want to use stocks as a store of value if they can just be buying gold?
Man, I just feel like we're kind of going down the line of the AI shooting gallery. And first you take down some of the mega caps, and then you take down a lot of software, and then you take down some of the private credit names, and then you take down some.
Oh, he is so arrogant. God, this guy bugs me.
Is that how it's going to be? We're just trying to guess on who's going to be disrupted the most?
Well, I do think AI's capabilities, Scott, are showing improvements. Maybe, as they say, doubling every 7 months, and now it's going from mediocre to quite good and substituting some jobs. I think that, of course, is rattling markets. But at the end of the day, and this is a half-full perspective.
Cummins. I've been watching that one lately too. Cummins, CMI. Okay, that could break out. Cummins.
For the ones that are actually truly disrupted by AI, that actually is a cost savings for a client. So I think it ultimately is productivity.
Tom, when someone like David Einhorn comes on today and says, quote, I think this is the most expensive market that we've been in. Can you argue with that? I mean, you can.
Rolls-Royce, MTU.
It's pricey. Others would say, well, it's justified because look at how earnings are beating expectations. How do you parse that out?
Well, I mean, on a relative basis, his statement is correct because, as the late R. Cashin said,
Rolls-Royce.
Don't die of old age, get murdered by the Fed. So every year, the market does get a little more relatively expensive, even if earnings are good. But this year is pretty unique. Earnings growth is accelerating. The
Mitsubishi, MHI.
50 after spending basically 3 years below 50. We have a new Fed that ultimately, I think the market is concluding as dovish.
MHI.
Actually believes he's dovish. So that's supportive of multiples going up at a time when the stock market has been
I may resume in less than a minute.
6 black swans, from all the way from COVID the tariff disruptions and still grew earnings. So I think the market's going to have to start to give a higher PE to the equity market, just in the same way that gold's being re-rated at the moment. You know, gold's PE multiple price to sales, I think, is over 50 times right now. So if gold can re-rate, I think equity.
Cummins CMI.
I mean, Einhorn, to your point, also suggested that the Fed is going to cut, quote unquote, a whole bunch of times, way more than the market is pricing.
Okay, selling again.
I don't necessarily think he thinks that's going to happen for good reasons, but nonetheless, people who say don't fight the Fed will look at that and say, well, if a lot more rate cuts are coming, then it's hard to get all, bared up on this market.
Robinhood.
I'm in that camp. I mean,
Robinhood looking better.
Consensus core CPI year over year is 2.5.
Robinhood off the lows.
That's back to where it was from 2017 to 2019. So it's pre-COVID levels, and yet Fed funds is actually almost twice as high. I do think the Fed can cut rates, but they're probably going to shrink the balance sheet too. But ultimately, that could be lower long-term rates, and that's second leg for housing. So, yeah, I wouldn't get too bearish, but as you know, we think it's a rate-based market. Like 2026 is not an easy year.
Caterpillar.
We have to navigate that there's going to be a big speed bump in
At the highs. Caterpillar looking good.
Yeah, no, I think that's a good point. Stick with me. Other things have been breaking out, though. I want to stay on software before I get to the breakout. Seema Modi has that for us. What are we seeing today in a trade that is being, as we said, every day we've spoken with you, is being watched by everybody very closely?
Yeah, Scott, software once again under pressure despite those upbeat earnings reports that we got from Datadog, Klaviyo last night. This as the market really counts down to AppLovin tonight.
Chevron.
Software gaming platform that has been down again today and for the year. Bigger investors like Orlando Bravo, Thomas Bravo, telling our colleague Sarah Eisen this morning that software is oversold and that there are jewels in the publicly listed arena. A similar message was conveyed by JP Morgan's TMT team as well. They think companies that are AI resilient like Snowflake and CrowdStrike and Twilio, which is set to report tomorrow, they say these are the names that investors should start to look for, but yet these stocks are under pressure again, Scott.
Yeah, the market really doesn't want to hear it. Even the allegedly good stories to be told, you can see those kinds of stocks go down. Been red hot.
Market doesn't want to hear it. What the hell does that mean?
It's legit. He joins me now. Man, I mean, it's been a great trade. What tells you that it's got more legs?
Thanks, Scott. So, yeah, industrials having a good year in cap-weighted terms, up about 13%. So handily beating the market. The equal-weight industrials have been outperformers for quite a few years relative to the equal-weight S&P 500. But we're really looking at the industrial sector relative to the
All right, we're still fading a bit. Market's fading from the high. Robinhood still climbing. Robinhood climbing. Wow. Nice. Robinhood. Okay, so we took the puts off. That served as insurance. We're looking for this trend to continue over the next couple of weeks. Perhaps build a base here and have everything turn up. So there was some selling coming into earnings over the last couple of weeks. Now that selling is dissipated, we'll see if we can follow through. Pretty good trend today off the low.
If you look at Eaton Corp today, I think that's benefiting. So you can kind of quasi get some AI exposure in the industrial sector. But certainly, if you look year to date, you're seeing energy, materials, and industrials, kind of those classic cyclical areas.
Constellation Energy.
Software and the tech sector.
Constellation Energy trying to push a bit higher.
Only 3 sectors down on the year. So definitely some internal rotation happening.
All right, interesting. Good quick hitter from you. Thank you, Jonathan. We'll see you soon. That's Jonathan Krinsky. Thanks, as you see at the BTIG camp. All right, let's bring in PNC's Young Yuman now and Schwab's Kevin Gordon. Fund Strats Tom Lee. Thank you. Of course,
Eaton Corp, Diversified Industrials. Big pop up today. Like to see a base up here at the highs. Robinhood doing well. Okay. Chevron near the highs of the session.
durable. And in the absence of a clear narrative of what's durable, it is focusing on
Palantir still having difficulty building a base. Still drifts a little bit lower.
industrial sector benefiting the energy sector as well. And so I think there's probably a little bit too much focus on that. But right now, with that uncertainty being very high, investors are gravitating what is at least a little bit more more confident about in the here and now. But I'm a little bit worried that that's getting overdone as well and too much.
Yeah, Carvana, be looking for that potential entry. If people start to come in, the volume starts to pick up, we'll watch for Carvana. CarMax didn't move much at all on that. I thought it might move in sympathy. CarMax.
Is overdone. You'd be a buyer of that? Well, I think with the mega caps, right, that's the flip side of concern. They're spending so much money. The numbers are eye-popping. And so I do think that's what the market's gravitating to because it's such a dramatic number and they're following the money. That's for sure. But ultimately, that's going to level off. That's not going to be year after year that level of growth. And these companies, at least a set of them, have very durable moats, very strong businesses, and are probably going to come out stronger than when they went into the spending spree. So is now a good time to buy? I'm not sure. This could go on for a little while longer still. But I do think investors are being a little bit myopic and short-term focused here. What do you think, Kevin?
All right, AMSC, you're talking about, Tony, AMSC. Okay, what does that look like? AMSC, continuation, AMSC.
Started to gain when equal weighted relative to cap weight started to flip. Are you saying you agree with that the consternation about it is justified, or are you saying you agree that it's overdone?
Agree, justified, overdone to some extent if you were actually comparing tech and communication services and where they are sitting.
NIMO's at plus 21, not much follow through there. IBIT, just off the highs of the session. What's Bitcoin doing? Bitcoin still got a lot of work to do.
Sets you up for a little bit of mean reversion just based purely on technicals. But if you go beyond that to the fundamental story of what earnings looks like, fundamentally for a sector like tech. Right?
Looking at what is expensive as far as puts are concerned, looking at expensive positions over here in the left side, all of these populated in the bottom left corner, that tells you the puts are very expensive. So if you get any kind of bounce, selling premium down here makes sense. Google, Apple off the best levels of the session. Meta's turning. That might work. Meta. JP Morgan, if that bounces, sell some credit spreads tomorrow maybe. AMD, NVIDIA.
Scott, as these other guests point out, data centers, industrials, materials, energy, Caterpillar, they're all tied to the same thing, which is it's either armies or the bullet makers. And I think the market is starting to want to own the bullet makers, not the armies, which are the Mag 7. I think it is all one trade because it is, of course, about AI.
Digital Realty Trust, this company, 24/7, 365 data centers. All right, they buy properties and they fix them up for these data centers. I think that's what they still do. Let me just check. I don't want to mislead anybody. That's what they used to do. Digital Realty. Okay. Real Estate Investment Trust, engaged in the business of owning, acquiring, developing, redeveloping, and managing technology-related real estate, i.e. data centers. Okay, so not highly profitable, but earnings are growing, so is revenue growth. So let's Digital Realty Trust, that's moving higher. So as Tom Lee was just talking about, buying the bullets instead of the army, buying the companies that supply everything that the data center, the Metas of the world need, Google, Meta. Energy, whether it's energy straight from electrical, like CEG coming off the low. Tony mentioned this one earlier. The generators, natural gas generators that are going to help power the transition between being able to have power now into the future, 5 years. I don't know how long it's going to take for the, some have said 5 to 10 years to build out the electrical grid. What's Tesla doing? Tesla, okay, Doji on Tesla. Got a little ahead of ourselves. Looked like we were going to drop precipitously. Tesla end of day. Tesla end of day. Looks okay.
Maybe mid-year, could even have a bear market briefly, and then you have.
So your 20-minute, I put a stop underneath that 422 zone, 420. Looking for a follow through tomorrow. You can wait until tomorrow. It's because it's late in the day.
It's a good year to have some dry powder. You could get a lot of selling pressure further in the Mag 7 cohort or tech, and actually have a similar scenario to 2022 where.
Okay, so it's above the 20 MA. We've often talked about Chevron, how, you know, if you were to look at Chevron on the daily time frame, Chevron, this is Tesla. If you were to look at Chevron on a daily time frame, you'd probably say, oh, this is way overdone, waiting for it to pull back. Well, while you wait for it to pull back, it continues to trend. All right, it's trending since February, the first week of February. Got back above the 20 MA and hasn't looked back since on the 60-minute time frame. So over here, moves back above the 20 MA. Put your stop underneath the 20 MA. Look for a follow through each day. Check the 20 MA in a 60-minute. What's it doing? Is it dropping below and then trending lower, or does it drop below and then pop back above like a cork when you're fishing, right? So this just keeps popping back above. So the trend is up until we close below it and the moving average rolls over, all right? Moving average needs to roll over. So Tesla, same thing. Tesla. Okay, back above. What about Robinhood? Robinhood. Okay, that needs to get back above the 20 EMA. Same thing with Microsoft. Needs to get back above the 20 EMA. Still got a lot of work to do. Okay, NVIDIA. What's NVIDIA doing? NVIDIA above the 20 EMA, so buying the dips. Not too crazy about NVIDIA. Apple back to the 20 EMA. So in order to stay long on Apple, this needs to pop back up. Okay, we've had these two consolidations, one here and one here. Since it turned back above the 20 EMA. The 280 levels where all the dealers are short. Dealers are short 280. So once we pop above 280, the dealers are going to have to cover by buying shares, and they'll probably move their next level up. 280 is the upper call wall. If we get above 280, we could get a short covering rally as dealers buy shares in order to hedge their short positions at 280. So we'll be watching for that in the short term. Okay, let's look at Tesla we just talked about. Meta, let's see what Meta looks like. Meta, okay, Meta, back to the 50-day, 60-minute time frame. Okay, not quite there. Needs to pop above. It tried to do it yesterday, day before, Monday, tried to do it and follow through. It didn't happen. So that would have stopped you out from too much damage. We're still making a higher low, so this could follow through. Meta. Robinhood, we said, we looked at that. Generac, GNRC. Generac above the 20 EMA. Okay, Generac above the 20 EMA. Caterpillar above the 20 EMA. You can see how well this works. Even if you get stopped out, it gets back above the 20 EMA, you get back in. Ride that pony till it stops. Okay, S&P pulling back a bit. All right, no follow through on the S&P. Okay, so looking okay. Going into the close, S&P 500. Okay, S&P 500 big range. So there's nothing to do here until we can start trending again, like over here at least. That trend right there. And beginning of January, we started the trend, but then quickly started chopping around. Okay, we've got, what, 40 minutes to go? 40 minutes. I'm your host, Cousin Benny, coming to you from theclosingprint.com on another boring day of chop, chop, chop. S&P, you know what it looks like. I don't have to remind you that we're in the top of a range. And until we break out above 7,000, we won't have a trend. All we'll have is chop. Okay, all we have is chop right now, all right? So inside of all of these candles over the last several weeks, we've had a couple of days where we would trend like Friday. Monday, so much, not so much, but it did move, closed near the the upper part of the range. Today, just, all right, now we're pulling back. Now we're pulling back, S&P.
Nancy Davis, back with me at Post 9. So good to see you again.
It's so great to be here.
It's good to talk about volatility too. In both the rates market and in the equity market, we've had a little bit of a pickup in the equity market. Not so much in the rates market. You play right into that.
Yeah, interest rate
So S&P, we have to see price action emerge above 7,000 in order to establish a trend. Right now, we just chop. So every time you try to do something with S&P, unless you get very precise with your entries and exits, you're going to get chopped up.
Is it going to pick up or no?
You know, the cost of owning protection and interest rate vol is super cheap.
Okay. Hedge flows back and forth, back and forth. No trend. Monday we had a Friday we had a trend. All right, let's go look at Friday. You see the difference. Friday we had a trend. Look at the difference. Look at the difference in how hedge flows. Just continued throughout the day. Yesterday, similar chop and then a little bit lower and chop some more. Hedge flows were not trending. Hedge flows were not trending like we were on Friday. So we were watching for this and we just can't seem to get any. Chop with a close lower. Okay. Still more chop right now. Still more chop. And look at the it's only talking about what plus 1 billion and minus 1 billion. All right, so very narrow range. I'm looking at the hedge flows. All right, this up here is about less than 1 billion. Down here, the hedge flows down here. That's about 3 billion. Okay, 3 billion and flows back and forth.
When he comes in to surprise the market and cut more than expectation.
Is that your own expectation?
I think he will. Yeah, I think people are definitely seeing him as more of an inflation hawk, and I think he could surprise us and be a inflation eagle, hopefully.
Oh, okay. All right. We got Rich Clarida on coming up in a little bit, so we'll ask about that. Your best idea, actionable right now, is what? You always come with something good.
Well,
S&P, Microsoft.
Especially with
okay, got the VWAP and got rejected. Microsoft still got work to do. Robinhood, nice rally up to the highs. Robinhood, Chevron, CVX, Chevron. Okay, looks like it's going to turn up again with Chevron.
Said that a couple of times. Not a lot of value out in the market. Do you think the stock market's too expensive?
I mean, it might be going higher, but multiples are pretty lofty. Prices are pretty high. When I'm talking about prices, I just mean you will always make your money where you buy something. Well, you want to buy low, sell high.
Obviously, but there are those who believe that yes, multiples might be a little rich on a historical basis, but they can still go higher if you're going to get rate cuts. The economy is going to pick up. This is the bullish bet, obviously, and it changes if that doesn't happen. But that's the view. Yes, expensive, but it's still okay.
Totally fine, you know, but the whole point is
NCI.
adding diversification.
All right, so if you're not paying attention, SCHD and SPHD hitting new highs. Okay, so I have positions in both of these, pretty large positions actually. SCHD, SPHD, SPHD. Okay, these are at highs, SPHD, SCHD. They just keep going. What would stop me out, Vinny? I would use the 20 EMA again. 20 EMA on the 60-minute time frame. It drops below and starts to roll over. That's your stop. Okay, so
Inflation is not a trade about whether you think it's
okay, in order to stop out, this would have to roll over and do that. And price would need to drop below. Price would need to drop below that. Okay, so we need to do that. And price would need to drop below this, under here, and keep going. Okay, it would have to drop and keep going. That's, sorry for the squigglies. That's what would have to happen in order for this strategy to not work out. And, you know, you would, we're only talking about a point or two. We're talking 50 cents. 50 cents on this SPHD. Pays a dividend once a month at the end of the month, the last week of the month. SPHD. SCHD pays quarterly. Both of these are on the move. Both of these are doing the same thing. Don't buy it right here, right now. It's too late in the day. If you do, you know, just know that you'd stop out if we drop below 31.40, 31.20, 31 for sure. 31 would definitely be stopped out. SCHD, SPHD. Okay, what day is this? Is the 11th, so we got another week. SPHD.
COCH.
SPHD.
COCH.
Okay. 52 and change.
KXIN.
COCH.
SPHD, SPHD. Okay. 52.39.
COCH.
Okay. S&P pulling back. The New York, the NASDAQ 100 looks pretty good. I mean, it looks okay. New York Stock Exchange, again, I'm not that concerned about the markets. It's just the New York FANGs that aren't cooperating. New York Stock Exchange made a new high today. For the last 3 trading days, we made a new high, closed off the high of the day. That's perfectly normal. People take profits off into strength. Okay. So we're just hanging out here at the highs. New York Stock Exchange, 2,400 components, 70% of which are American-related companies. 25%, more or less, are American Depository Receipts, ADRs, and about 5% are REITs, real estate investment trusts. 2,400 components. What does IWM look like? IWM, okay, just off the highs of the day. IWM, 2,000 stocks, more or less. Consolidating. Qs, the smaller the number of stocks, the more susceptible they are to crowd effects, a lot of tech. Dow Jones, the IA, it's off the highs of the day, but it is at the highs. Junk bonds. Okay, junk bonds. Okay.
He famously said that the man who dies rich dies disgraced. So he set about building free public libraries. And in the course of his life, he funded 2,500 of them worldwide. One of the things he liked about libraries was that whether you were the president of the country or an impoverished child laborer, when you went into a library, you had access to exactly the same information. Carnegie Corporation of New York is focused on education.
Constellation Energy. I like that one, Tony. You mentioned that before. Constellation Energy. Okay, coming off the low. Constellation looking pretty solid. Okay, volume looks good today. MACD cross, stochastic rising. This is Constellation Energy. Tony mentioned it earlier today. I like it. 60-minute 20 EMA. Okay, it's starting to turn. Okay, so this is beginning. This is beginning to move in the right direction. If you're bullish, gets above the 20 EMA tomorrow, we could see some more follow through. Need to see more volume, but it's above the 20 EMA. So your stop, if you got in today at 271, 272, whatever, stop would be if we lost and closed below and this rolled over again. Okay, if that rolls over again, okay, so if this was to roll over and do that, like over here, roll over and price move below, then yeah, we will be out. Constellation though looks good on the daily and the 60-minute. The weekly looks oversold. Kind of like in the middle of nowhere. So it's like a 50% retracement from this pivot high to this pivot low right here. About 50%. Okay, let's just see real quick. It's about 50%, right? 50%. 618. 618. Okay. So if we can bounce back, that'd be great. S&P is still driving a bit lower. Again, to repeat myself ad nauseum, the places you should be, if you're thinking about day trading, I would be looking at consumer, materials. I'd be looking at semiconductors. Semiconductors performed fairly well today. Bouncing, buyers stepped up at the low of the day. Maybe we break out. Individual names like in the watch list, Taiwan Semiconductor, Micron, LRCX, On Semiconductor, active today. ASML makes the machines that makes the chips, consolidating. Marvell, that was at lows, right? Marvell's at lows. LRCX, did we just say that? LRCX. All right. So chips look good. STX, Seagate Technologies, WDC, Western Digital. These are consolidating. So materials, energy at the highs, industrials at the highs, consumer staples at the highs. These are the places you should be focusing. XLK, there's some names in here that are coming off the lows. XLY, consumer discretionary, not doing so well. Amazon and Tesla make up more than almost 50% of the weight of the XLY. Tesla's got work to do. It's a doji right now. Okay, we're trying to get above the 20 EMA. If we manage to move above the 20 EMA, like we're doing right now, 20 EMA daily is right there. If we continue tomorrow and we push up towards 436, 437. What is the money magic levels here? Tesla, 430, 450. All right, so if we can get above 430, 450 is the next call wall. Okay, so 430, 450.
Now, PIMCO's economic advisor. Good to see you. Welcome back.
Tesla.
Glad to be here. So you see the jobs report, which was obviously better than people thought it would be. So market says, okay, we're good. No cuts anytime soon. Is that how you see it?
Tesla.
The PIMCO call is we expect 2 cuts this year under the new chair. We think Jay Powell is done in terms of rate cuts. But I think
Tesla.
the data is poised to essentially give the chair what he needs to
Doji.
cut a couple more times this year.
Right. So a couple of cuts. I mean, the market just doesn't expect that much. I thought it was really interesting that the very well-known investor, David Einhorn, on the network today said there's going to be many, many more. I want you to listen and we can react on the other side.
Sure.
I think it's going to be a lot more. You know, President Trump believes that the U.S. should have the lowest interest rate in the world because he thinks we're the best credit. And he's been mad at the Fed chair since he took office, screaming at him to lower rates. So he's picked his
That's true.
And his
That's
guy is
true.
going to come in and he's going to lower the rate.
Okay. I mean, that new guy, obviously, Kevin Warsh. What do you think about that comment?
Well, the Fed is. Interest rate decisions are made by a committee, then that's in the statute. That's not a tradition. So the Federal Open Market Committee, and the chair only has 1 vote. And so, you know, regardless of what the chair wants, ultimately he's got to bring other committee members along with him to cut rates, which is why we think so long as the economy evolves as we and others expect, it'll be a much more challenging job, we think, once you get the federal funds rate down to around 3% to get additional cuts. Now, if the economy goes south, which nobody wants, the Fed has room to cut, but under a soft landing scenario, we think it's going to be tough to keep cutting much beyond 3% on the funds rate.
You know, however, as well as I do, that yes, it's just 1 vote, but it's a pretty powerful 1 vote. The power, to use your word, persuasion, is pretty high when it comes to the person who sits in that seat. Doesn't that carry a little more weight to Mr. Einhorn's point?
I think it does at the margin, but you know, if you get a couple more cuts in, the funds rate's around 3%. That's at the level that the committee broadly that Kevin Warsh will inherit. That's at the level that the committee believes is really what they think of as a neutral policy rate. Now, you might have 1 or 2 folks that would keep going beyond that. So I'm not saying it's impossible, but I do think the committee and the current composition of the committee that Warsh will inherit, I think would make it challenging to keep going in the context of a strong economy.
What do you think of the pick?
I think it's a very strong choice. I've known Kevin Warsh for more than a dozen years. I respect him. He's thoughtful. He's not always said nice things about Fed policy, but his criticisms are always thoughtful. And I think he'll do a fine job.
Oh, interesting. So on policy itself, I mean, do you think Beth Hammack, I thought was interesting yesterday.
Yeah, Beth is great. Yeah.
The Cleveland Fed Pres, and she's a voter, which is critical. Obviously, when we mention her, so her voice maybe matters more than it otherwise would if she didn't have a vote. She was basically like, we need to be patient. We're good where we are because we're already at neutral essentially. Do you agree with that?
And see on.
My view is neutral is probably closer to 3% than 3.75. But I also have not only Beth Hammack, but you also have Lori Logan, the very well-respected now president of the Dallas Fed, who's made similar comments. Neil Kashkari, who I worked with closely when I was at the Fed, has also expressed similar. He's also a voter. And so one of the interesting things for Kevin Warsh when he arrives is he'll have a committee that is experienced. Many of them have been on the committee for years, and people like Kashkari and Logan have been pretty clear that they think wait and see is maybe the best policy here, which means that if we do get the cuts that PIMCO expects, there likely will be some dissents along the way.
Well, I mean, I don't know. I sound like you walked me into my next question.
Okay.
If you think that we're 75 bips above neutral, then voting member Clarida in the room would say in the next three meetings, 325 basis point cuts, no?
Well, what I would say is if the inflation data and economic data evolves as I expect, I think I would be in support of a path over time to get there. But I do agree with others on the committee that the economy enters 2026 in a pretty good place, especially if you think most of the effect of tariffs on inflation are in the rearview mirror. And so, yes, I think a neutral policy rate around 3% makes sense to me. I wouldn't necessarily be in a hurry to get there at the next meeting, though.
Why not? Why don't we just get there? If you think that we're that far above neutral, not that it's a mile above neutral, but you know, 75 basis points, 75 basis points.
Well, for the couple of things. First of all, you know, market pricing has built in a couple of those cuts, and so that's reflected in the price, and that's in current financial conditions. You know, secondly, you know, inflation's been above target.
Okay. What do we got? Just a few minutes left to go. Another wasted day getting chopped up on the S&P 500. Until we start trending, that's pretty much what we're anticipating. 17 minutes to go.
We basically on net have made no progress on disinflation in 18 months. And so
Okay, Robinhood turning back up. Robinhood's turning back up. Okay, Chevron turning back up. Robinhood turning back up. There goes Robinhood. Robinhood popping.
We've got earnings shaking up the markets right now. One toy maker tumbling to its worst day in a quarter century, while a data center play hits all-time highs on surging AI demand. Details after this short break.
COCH. SUNH.
All right. Robinhood.
AREB.
Hood. Robinhood.
COCH. SUNH. AREB.
Robinhood. Okay, we have, 15 minutes to go? 15 minutes to go.
AREB. AREB.
Here we go.
And CI. And Xeon.
Coming into the end of the day, I'm just taking some notes on today's performance. Quote, markets continue to chop people up, remaining in the upper half of the range that we've seen for the last several weeks. No change. It's unfortunate, but that's the way it works.
And Xeon.
All right, we're less than 15 for the bell. Back to Christina now for the stocks that she's watching. Please tell us.
Shares of Mattel. That company's seeing the shares fall roughly 25% right now. The stock pacing for its worst day since 1999 after missing estimates on the top and bottom lines and earnings, and also giving weaker than expected guidance. They got 2 downgrades today as well. JP Morgan, Citi, both comparing the lackluster results to competitor Hasbro, which delivered a beat and a raise earlier yesterday. Zillow shares also sinking, down about 18% after its fourth quarter earnings and first quarter profit forecast just came in light of estimates. Zillow said its outlook reflects that it expects to see challenging housing market conditions through the first quarter.
Robinhood.
Stock on track for its worst day since November.
Yeah, that looks good. Robinhood.
Want to be all Debbie Downer. Virgin shopping 23%, trading at an all-time high. The company, which provides data center cooling and power equipment, issuing strong 2026 guidance, tied, of course, to AI-driven data center build-outs.
Robinhood, not quite back to the high of the day, but looking good.
Last year's number, Scott.
All right, way to end on a high note. Never a downer.
Okay, trying to get back up.
Christina Partsinevelos. Up next, we'll run you through what to watch for Cisco and McDonald's. They report in OT. We'll do it in the zone next.
Gonna be sick. We have to buy that now.
COCH.
Invest your way with Schwab.
Pay 7 days a week on SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
ARB.
Welcome back to Market on Close. I'm Sam Bartis, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. So shares of Teradata have rallied to a new 52-week high after its latest earnings report. So let's learn more about this overlooked name with George Sillers, the senior markets correspondent. What did the report say? Because this is a real bright spot in the market today.
Just under 11 minutes to go.
It is. It's a bright spot in the market. It's really a bright spot in the software industry space. We know that space has been, decimated, for lack of a better word, in the last month or so. But Teradata is a growing company when it comes down to competing with stalwarts like IBM and Oracle, Snowflake, other companies they compete with, SAP, for instance, as well. But it's an information tech software company. They provide hybrid cloud analytics and data service platforms that, again, compete with other companies that store and integrate and analyze data. Decision analytics and business analysis is what they also provide. And so there's an agentic AI component to their growth story. But nonetheless, if you look at the report, it was actually quite good. But under the hood, there's a lot of other things going on, which I'll explain in a sec. But they did report EPS, which beat the estimates by quite a bit. They posted 74 cents on an adjusted basis. That was higher by 39% compared to last year, 53 cents. So they were expecting only 56 for the quarter, which is barely, mid to high single digit growth. But they increased the growth this quarter at 39%, which was a surprise. And
all right, Tesla trying to turn back up. Tesla, watch Tesla end of day. Tesla's turning up here. Robinhood at the high of the day. Robinhood, high of the evening session, I should say more clearly. High of the day was over here. We gapped down on earnings. Almost there. Almost back to, well, we're green. Look like we're green here.
At the midpoint estimate. So you just do the math, the increase in EPS growth for the next quarter as well as for the fiscal year, which was positive. The next quarter specifically was higher by 11%. compared to the estimate. So that was quite a surprise, especially for a quarter where they were only expecting a marginal increase in EPS, but also a decline in sales. So a little bit off guard in terms of analysts as well as owners of the equity. But behind the hood, or under the hood in this case, there's activist investors. Lynrock Lake Capital has basically taken around 9.9% stake, and they're pushing, and they've actually succeeded to do so, two board of directors that complement their objectives to focus on better executional operations as well as strategic alternatives for potentially growth going forward.
Okay, so obviously, as we said, a little bit of an outperformer here in bright spots in what is otherwise a down market, particularly across the tech sector today that looks very bifurcated, particularly when you're talking about some of those in the business of things like cloud and software. I see that, as you say, a bit of a mixed reaction from the sell side. I mean, Evercore maintaining this outperform rating here, but in fact, BofA have kept an underperform rating. They have increased the price target, but they're talking about how there's still some near-term uncertainty here and a lack of material positive estimate revision. So, I mean, what does that speak to? I mean, is this just a sort of industry-wide or quite specific to this company type thing?
Okay, that's a good question. I think the challenge for Teradata going forward is how are they going to essentially scale their platform? Because, like I said earlier, they're competing with big companies, Snowflake, Oracle, SAP. So those are always going to be some competitive concerns that you have to deal with a growth company like this or smaller company.
7 minutes.
I think what's more important than the quarter report
7 minutes to go.
was the revenue numbers. They beat on EPS, but a lot of times EPS can be adjusted because of things like share buybacks, which I suggest is part of the story, EPS number, potentially also part of the guidance in EPS. You really can't manufacture revenue in any capacity or engineer it other than just generating sales, which again they did. They beat the estimates and raised their guidance for sales. That's more powerful in my view. I think at the end of the day too is the growth estimates for the business are still lackluster. For instance, earnings growth right now is estimated to be around 1.5% on a forward basis. But if you look at the earnings multiple based on estimated EPS for this year, $2.62, it's only trading 11 times this year and 10 times next year's earnings. So anytime you get a stock that's already trading at a very low growth multiple, which this company is, and you get this
Monday's a regular trading day.
growth in EPS and sales, you see an outsized move. That's what we see today. But going
Really?
forward, there are some structural challenges because of the competitive landscape, and also the industry group is relatively mixed right now, to say the least, if not bearish altogether, across multiple cloud platforms, including Oracle, SAP, and even HCM-based businesses like Workday and ServiceNow. So I think those are some of the concerns that need to be addressed, and that may be what the market is telling us with the move higher today. And right now, it's nested right in the middle of the trading range for the day because of the digestion of this earnings, progress going forward, and of course, what the scale of the industry group space looks like going forward. The last outside this, these are sleeper stocks, I call them, because if you look at the market cap, around $2.7 billion, they have about $500 million in cash, which constitutes.
So Monday is Washington's birthday.
Anytime you see outsized moves with a cash position like this, in growth and earnings and sales, it goes from a resting state to a more aggressively bullish state, which it is right now based on the gap we're seeing higher, up 29%.
Yeah, there certainly seems to be some good stories in all of this, as you say. But, SAP down almost 5%. The others are trailing in the red as well. George, really appreciate it. Thanks for getting us across this name. Teradata for us today. TDC, that's George Sillis there. Marley, I'll send things back over to you.
Thanks so much to Sam and George for that. We are nearing the end of our market session. Kevin Green will be joining us to take a look at the levels he's watching on the S&P 500, and we'll also have earnings from AppLovin, Cisco, and McDonald's next on Market on Close.
All right, Tesla. Nice move on Tesla. Okay, Tesla.
Real-time access, data-driven analysis from U.S. equities to global macro matters.
Tesla on the move.
Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Tesla.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alice Coffey. And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
3 minutes, 3 minutes to go.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers.
All right, Tesla looking good. Tesla.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are. We're back here on Market on Close. I'm Sam Barnes on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. We've just got a few minutes left in today's session, so let's welcome in Kevin Green, Senior Markets Correspondent, as always, to help close out the day. So we've bounced around a lot. The initial enthusiasm on the jobs report didn't last long. I don't know if that's got to do with actually digesting the data and some of the nuance, or this is about how the market is pricing in rate cuts now as we've sort of pushed that out to the middle of the year. But just talk us through what you're seeing there, KG.
Yeah, I would agree. I think it's actually both of those factors that really created a little bit of volatility in this market. But we've actually been able to hold up, at least for now. We're pretty much trading flat on this session. We got close to that 7,000 level. We did see, once again, some selling into strength taking place here. An aggressive sell-off, actually, to start off today's session, getting down to that 69.10 level. But we have been kind of ranging about ever since, trading between 69.60 and to the downside around 69.40, 69.35 or so. So we've been able to at least hold structure. But once again, we have seen a little bit of pressure in this market. It still looks like we're kind of top heavy here.
Tesla, nice little pop on Tesla. End of day. Doji, looking for a follow through tomorrow.
It's just a lot more defensive positioning when you're looking at a utility still doing relatively well.
50 seconds, 50 seconds to go, 45 seconds.
The remaining notes that were out there, and we actually had one of the higher dealer takedown levels that we've seen for a relatively long time here. That would actually create a little bit more volatility. Obviously, it did push the 10-year Treasury yields up a little bit, but the equity vol once again kind of stayed measured, and I think we're going to stay in this compressed range and look at 59.50 as your pen risk area for today.
And Kevin, we got the jobs data this morning. Came in significantly better than expected, but as I'm looking, pretty much tepid reaction, mixed reaction to close out the day. What were your thoughts when you saw the number come across?
And that's a wrap. All right, folks, I got a hard stop. Have a great evening, everyone. Take care. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Wednesday, the 11th of February. Closing bell straight up 4 o'clock p.m. Have a great evening. Take care. We'll see you in the morning. Ciao.